workshop on goods and services tax. May I now request the Central Council member Rajendra Kumar P, along with the session speaker CA Rajiv PT to occupy the dais. This is the 19th batch of GST that SARC is conducting. So far we have conducted 18 batches of GST and trained more than 2,000 delegates in the new tax regime. Before we move on to the session, let us rise for ICA motto.
Yaesha sukteshu jagrati Yaesha sukteshu jagrati Kamam 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 Usho nirmimanaha Tadeva shukram Brahma Tasmin lokaha Shivah Sarve taduna Yati kashchan Etat dvaita
Thank you, delegates. May I now request Central Council member CA Rajendra Kumar P to deliver his inaugural address.
Mr. Rajiv, other delegates who are attending this 3-day course, a very warm good morning to all of you. Good morning.
Good morning.
My name is Rajendra Kumar. I am a chartered accountant in practice. For those of you who don't know me, because there are many who don't know me, so I thought I should introduce myself because there is no formal introduction. Rahman thinks that everyone knows me because he knows me well. I am a practicing chartered accountant. I have been elected to the Central Council of the Institute for the year 2000, for 3 years, 2019-2022. I was chairman of the Southern India Regional Council in the year 2008-9. 2 terms I was in Regional Council. 1 term I also served Central Council in 2010-13. So I have been elected again after a gap of 6 years. I have been in practice of indirect taxes only for the last 20 years. I have not done any other practice of income tax or company law. Whatever subject other than indirect taxes I have not done. I am also the technical advisory group member of the OECD, appointed by the OECD. OECD is an international organization, as you may be aware. They set international standards on taxation, they do work on economy of a country, they do work on agriculture, etc. The full form of OECD is Organization for Economic Cooperation and Development. So the GST that you see today is actually the OECD's initiative, which world over it is being followed. So the GST law, which all of you are going to study or already studied, are going to refresh, is actually a legislation which is followed worldwide in almost 150 countries of the world. The OECD countries, if there is a country which is OECD country, then the GST legislation or the VAT legislation is what India is also implementing. So India is not different, but there may be differences in rates, there may be differences in certain procedures. But as far as law is concerned, as far as the principles are concerned, they are the same world over. Consumption tax. Places of supply also will be the same. There won't be much change. Majorly there won't be any change. 99% it will be the same. So this 3-day course, which people like PT Rajiv are going to handle today for all of you, this is an introductory batch, if I am not wrong. Am I right? There is one student. Are there any other student in this class other than chartered accountants? One of my friend is seated there. He introduced me. Any other student is seated here? Of the yourself? Okay, right. You're all students. Good. So there are a mix of chartered accountants in practice, chartered accountant in industry, and students. Mr. Himanshu has come from Kolhapur, so you can connect with him because then you will connect with the western region of the country. Mr. Himanshu Kapadia. He is from Kolhapur and he is working in Gokul Dairy. So Gokul Dairy is a very, I think, premier dairy in the state of Maharashtra, like Avin you have in Tamil Nadu.
Yeah.
Okay. Similar to that. So you have a networking among yourselves, exchange your cards, exchange your numbers, tell yourself what you are doing, form yourself into a group. The GST will not be the same 5 years afterwards. Every day some change will be coming because this is a dynamic law. Why no chartered accountants were practicing indirect taxes? Two reasons principally were there. We used to be known more as income tax people. A paper on indirect taxes came only in the year 1996 November, and I qualified in May 1995, which means I never read indirect taxes at all, even ABCD. Only the practice as an article assistant, I used to do indirect taxes. And this is a subject where you need daily updation. It is not that I attended this course, I become an expert, I did not study, no. Even yesterday also some changes have come. So no sooner changes have come, all the WhatsApp groups will become very active. They all will start discussing various modalities, various advantages, disadvantages, whether ITC available, not available, so many things, many things. But I will never reply to any question or any group also, because before a notification is issued, whatever the GST Council says is not permanent. So GST Council has told something, we read it and we keep it aside, that's all. So once the notification comes, only our working will start. Now whether GST practice will be the same 5 years down the line, no. It will not be the same. The government is bringing out new software for SMEs and SMPs for the purposes of issue of invoices, maintenance of accounts, etc. under the GST law. So many of the SMEs, SMPs will go to that particular portal and start raising invoice through the government portal itself. So practices will change. More of consulting, lesser of litigation should be the order of the day if GST has to be successful. In one of the television interviews, someone asked me, tell me one factor, only one factor which you feel if it happens GST is a success in India, one factor. My immediate reply was lesser of litigation. Then GST is a success. See, these days what we do is we have the habit of immediately answering to queries and questions on GST. Please don't do that. Avoid answering questions immediately. Read the subject, even if you are thorough. There would have been changes somewhere some change would have happened. Especially rate of taxes. Don't decide rate of taxes merely on telephone. The rate of tax for this bottle of water will be different if the packaging is different. What is written on the package, if it is different, if this is mineral water, the rate of tax is different. If it is drinking water, the rate of tax is different. So the rate of tax will differ based on the packaging, based on what is written on the package also. So ensure that you take a informed decision. You are what I can say, well read before you give your view. And these 3 days, it's an introductory class. So be like a student. People like PT Rajiv will be teachers. So if you be like a student and study this subject, I am 100% confident all of you will be successful. All of you would have known the subject. I will not use the word learn the subject, known the subject. Because learning is a continuous process. I have been in indirect taxes for 20 years. Even now I will say I don't know the subject. I am still a student. Rahman has called me to inaugurate, that is different. Because I am Central Council member, they are respecting me and they are calling me to inaugurate the course. Otherwise I will also sit with you and learn the subject once again. So keep learning, keep reading, and ensure that you update yourself on a daily basis. That is the key. I wish this course all success. Wish you all the best. Learn well, study well, and update equally well. I wish Rajiv and all his team and other faculties who are going to take this 3 days all success and my sincere best wishes. I am always available 24/7. You can be in touch with me on any matter relating to institute, as far as institute is concerned, and as far as subject is concerned, indirect taxes, yes. Any other matter, if it comes to me, I'll have to only consult my partners or the subject experts whom I know and then give an answer. So with these few words and with this short opening remarks, I conclude my talk, and I have great pleasure in inaugurating this 3-day course on indirect taxes, especially the GST. Thank you very much.
Thank you, sir. That's a good start mode set by you for this 3-day workshop. Let's move on to the first technical session. Thank you, sir. The first technical session, pre-lunch session, GST overview and levy, provisions relating to scope of supply and time of supply. The session speaker, CAPT Rajiv. He is a fellow member of our institute and is a partner in a leading firm at Chennai. He is qualified both a chartered accountant and a company secretary, and he has also completed his bachelor's degree in business administration with the first rank from the University of Calicut. He has also secured a scholarship from ICAI throughout his chartered accountancy course for his merit in academics. He ventured into professional practice after successful employment stints in the audit and assurance department in a Big Four firm. He has specialized his practice in GST and is providing GST advisory services to some of the big business conglomerates in India, having over rupees 50,000 crores annual turnover. He is a regular speaker in in-house training of the firm. He has also presented papers on GST in various business forums and MSME associations. With this prelude, I welcome the speaker. Please put your hands together to welcome the speaker.
So very happy morning to one and all present here. I need some response if you don't mind. So very happy morning.
Morning.
Yeah. So first of all, let me thank the Central Council member, Rajendra Kumar sir, for inaugurating the function, and the Institute of Chartered Accountants of India, SARC of ICAI, for inviting me for this particular program. And if I remember, for the last 10 months, this is almost the 15th presentation I myself is making it in the same hall. So it is a great privilege and honor to stand in front of the esteemed and knowledgeable audience and present this particular topic. So today, before getting into the topic, let me be very frank with you. I want this to be very, very interactive. Otherwise, it will not be as learning as I expect. So I want wherever you feel that you want me to stop, so you can ask me wherever you want me to stop. You can stop me there, then and there, and then ask the doubts immediately. So before getting into the topic, I just wanted to know, what do you know about GST? So this is like a blunt question. What do you know GST? It would be very difficult to answer, I know, but I just wanted to know what is your understanding on GST, and what are all the challenges which you are facing in GST, and what you want. Is the GST is the way you want it to be, or it is something different from what you expected initially? Can anyone throw some light on this? Is GST is what you expected, and then what are all the challenges which you faced in GST implementation? When initially it came, we had all felt that it is a very easy law, though it is a landmark law in the country, but everybody thought that it is a very easy one nation, one tax. But later it started complicating. Now it's almost 1.5 years since the introduction of the GST. So I just wanted to know the feeling of or the experience of all the members in the industry and then the practice. Can anybody throw some light on GST? No need to be too formal. No need to be too formal, because I want this to be, again I'm telling you, I want this to be very interactive, otherwise the learning would be very difficult. And don't think that if you keep quiet, it's always there is no formality required. Again I'm telling you, there is no formality required. You can ask doubts, you speak. Even if it is a blunder, doesn't matter. We are all in the learning stage only. So just give me some light on this.
Sir, regarding reconciliation,
Yeah.
what the major issue it is? Because the invoice number, although
Correct.
suppose I am a seller,
Yeah.
my invoice number formats are different, and what has to be uploaded.
Correct.
There are issues, and when we are purchasing from other parties,
Correct.
what they will upload their invoice number.
Yeah.
Because in invoice number everybody uses different types of.
Correct.
I think so that at the central level or government should have the invoice number somewhat.
Yeah.
How we use DDMMYY.
Yeah.
Such formats has to be used for invoices also.
Okay.
I feel.
Okay. Any other point? Reconciliation is always a big issue actually. So even they're asking us to reconcile 2 years of the our inputs, and in one of our companies, where we are advising, the unreconciled input tax credit alone is 110 crores. You won't believe that it is such a difficult task to reconcile with the 2A. So I agree with you. And then another issue is also, I could see one company's invoice having 18 characters. Actually, as per the GST law, Rule 46 clearly prescribed that you can have only 16 serial numbers, but I could see around 18 serial numbers. So the kind of input tax credit also sometimes it will not come if the particular format is not being, or the keying, while keying, if you make a mistake, you won't get the credit. So there are a lot of issues like that. Any other issue or difficulty you faced in GST?
Omission or revision.
Sorry?
Revision of return. Say suppose something we have omitted.
Very good, yeah.
Say then we cannot correct it. We have to go to the another year. Then
Okay.
go back to the this invoice.
Okay.
And if we can call, if a particular invoice is omitted, there is no provision.
Yeah.
Mistake means we can correct it.
Yeah.
If it is omission, it's very difficult.
Yeah.
The correction of return is not possible.
See, initially what they decided is, the thought process was, there will be a there will be a return, and whenever you want, you can go back and then amend it. That means you can just make there is no concept of revised return. There will be an amendment to the particular returns. But that didn't come through because of some practical difficulties. Because you have to also understand that it's such a biggest indirect tax regime which got introduced into suddenly it's got introduced into the system. So they also need some time to settle down. So I hope that with all these issues will settle down sooner or later. So let me just get into the topic directly, because the time allotted to me is almost 2.5 hours, and now it's 10:30, and till 11:30 I will talk about supply, and second 11:40 to 12:30 I will be talking about levy, and then we can take care of time of supply. These are the 3 topics which I am going to speak about. You have to understand the most important topic. Initially I thought input tax credit always create a problem, and now under GST also it's continued to create a problem. But the fundamental concept is, after I learned GST, I understand that supply is one of the area where more litigations are going to come, because this concept is not still understood by many people. Previously we had that, because there is a qualitative aspect involved in supply. Previously it was not like that. It was wherever there is an invoice, that will be considered as a service, or that will be considered as a sale. But here you have to understand that even if there is no consideration, even if there is no invoice, even if there is no trial to the transaction, still it can be considered as a supply, because it's purely a qualitative aspect. I'll just share my one small experience here. Let me just put it very frankly. I'll share more of my experience than the provisions, because that will be a takeaway to all of you, because all of you would be facing all these issues. So whatever in my limited experience while advising some of the leading companies, what are all the issues which we come across, and what are all the solutions which we provided, that I will share it with you. So one of the examples, recently you would have heard one AR ruling, that Columbia Asia Hospitals Private Limited. This is a hospital they applied for an AR ruling. AR ruling, what is the concept of AR ruling? They applied for, because it's a hospital, its main head office is located in Karnataka, and they have around 4 or 5 branches there itself, hospitals there itself, and they have hospitals in other states. So the fundamental question which they raised is, any accounting or technical support which the Karnataka head office is providing to the other branches, will it be considered as a supply? Will it be considered as a supply? I know that all of you sitting here who are handling the clients would have come across this particular issue, because there is no scenario where you cannot ignore this particular concept, because you will have a branch, you will have a head office. This concept is regular. It's such a uniform aspect, and where all of you, when you're doing your audit or when you're advising the client also, this concept is going to come up. Now the fundamental question is, the services provided by the head office to the branch office, will it be taxable? Is it considered as a supply? So you just think a scenario where you have a head office here, all accounting is being done here, and you will be, all accounting for all the branches, accounting will be done here, right? I don't see any, rare cases only I can see the branch level accounting. Returns would be filed in Chennai, or the accounting would have done in Chennai. You just think of CEOs, CFOs, everybody would have sit in, they would be operating from one particular location. They cannot sit in all the places. For that matter, company cannot appoint that many CEOs or CFOs, right? So just think, under GST, each state is considered as a separate company altogether. That is a fundamental concept which we have to keep it in mind. Though I am just going beyond GST to explain, but this is the concept which we keep it in mind. Assuming that the company located in Chennai is X, the company located, its own branch office located in other state is called Y. Just think. Don't you think that the invoice raising operations undertaken by a company to another company, will that be chargeable? Assume for a moment, your branch office is Infosys, assume for a moment, and your head office is Cognizant. Assuming that on behalf of Cognizant, Infosys is doing some service, don't you think that Infosys will raise an invoice on them? Do you think that? Do you agree with me? Do you agree with me? This is the fundamental concept. Here, the second scenario, second point which always everybody will think, okay, fine, I provided some service to them, but there is no consideration which is involved in this particular transaction. But please understand, the branch and head office will be considered as a distinct person under GST, as explained under section 15 of the CGST Act. Explanation says who are all the related party, and distinct person is given under section 25, 4 and 5 subsections, where branch and head office are considered as distinct persons. Now when there is a transaction with a distinct person, even if there is no consideration, schedule 1 para 2 clearly says, still doesn't matter, I will tax you. This is a fundamental concept. This you have to be very, very careful. I'm repeating this, you have to be very, very careful when you do your audits or when you're advising the clients. Because recently when we concluded one advisory also, we could find that it has 5 branches. One in Maharashtra, Gujarat, then Chennai, obviously, and they have branches in Jharkhand. So what they are doing, the complete accounting is being done in Chennai, obviously. Complete accounting, because they will scan the invoices will come to Chennai. Second point is, the returns are being filed in Chennai. All technical support, the information technology support, everything is being done from Chennai. Marketing, everything is done from Chennai. Now the fundamental concept is, can I apply this Columbia Asia Hospitals AR ruling into this particular company, and that being the case, the exposures are running into crores. You take it from me, the exposure is running into crores if you value that particular transaction. But you have to also appreciate that AR rulings are only binding on the assessee, and you can take a different view. In many cases, when the assessee approaches or the registered person approaches for an AR ruling, we say, just hold on, we'll think whether we have to go for an opinion or AR ruling. Because AR ruling, once it is obtained, whether it is correct or wrong, you have to go with that. Obviously there is an appellate, but so far wherever there is an appellate thing also, it is not in favor of the assessee. So my fundamental point is, the supply has to be considered with utmost care. Don't get into any other sections before determining whether it is a supply or not. If it is supply, then only you will come to section 9 for levy and classifications, and all other aspects will follow. ITC, everything will be depending upon that. So this fundamental concept of supply has to be understood in detail. So what we can do is, we can look at from our own law, GST law, how this supply has been defined, and I will also compare with some other countries like Canada, Singapore, UK and Australia, and I will give you an overview. Whenever it is applicable, I will just compare it with those countries so that you will get a good perspective. And time is very, very limited. Let me be very honest with you. Within 3 hours or 2.5 hours, this topic cannot be completed in full thing. For that, the handouts would have been given, my entire PPT would have been given. Some places I will be skipping it, and where I feel that it is not that important. Okay, so first we will discuss about the scope of supply and relevant statutory provisions, issues, illustrations, case studies and case laws. And all of you know that there is something called, how the structure has happened. We have a constitution. Within constitution, the main issue was the states did not have the power to tax on goods. I mean, on sale of goods. And states didn't have the power, the center didn't have the power to tax on sale of goods. States didn't have the power to tax on service. Correct? This was the major issue. That is why the amendment has come in the constitution to incorporate this particular change. Now both state and central can charge GST on both sale of goods and sale of services. Now when we come to the complete statutory provisions, statutes for that matter, you can see that there is a central goods and service tax, IGST, then we have SGST, respective states, then we have UTGST, and then we have compensation cess, etc. And we have notification, different notifications we are having. One is central tax notification, central tax rate notification, IGST notification, integrated tax notification, integrated tax rate notification, then we have compensation cess notifications. So all these notifications are there. You have to be very careful, as Rajendra Kumar sir said, you should always go with the notifications of circulars. You should not go with the GST council meeting. Okay, on 31st council meeting this was happened. Okay, this was the decision taken, but that is not a law. It is only, the GST council has only a recommendatory power. So they have just recommended it. That doesn't mean that that provision is applicable. So just keep it for the information purpose that GST council has taken a decision. But you have to always look at the corresponding notification to determine whether that particular provision is applicable or not. Okay, now let's get into the understanding of supply. So I will just, I think everybody is holding their breath and looking into the PPT very seriously. And I want to see a smiling face. I mean, I would like to see smiling faces. No need to be too serious. Why do you be too serious? It's not a formal, thing, right? You smile. Okay. So the fundamental concept is always be smiling. Okay. Don't be too serious. Unless otherwise you have some issues also. Still, I would recommend, please smile. because I'll share my own experience where I was attending one tribunal case. So way back in 2000, I think 5-6 years back. So I was presenting the case actually. So I was, the judges obviously will be, they're very serious. So everybody was serious, and then they were presenting their cases. So my case called, I was presenting it. So I just looked at one judge and then smiled. He smiled back. I smiled at the other judge. He didn't smile. But I continued to smile. I mean, not like continuously. Frequently, whenever I was presenting, I was smiling at him. Before going to the tribunal, I got a good training from an advocate, one Supreme Court judgment, a Supreme Court advocate. I trained under him. He told me, Rajiv, are you okay with getting scolding from the judges? I said, little bit concerned about it. And he said, you should not be concerned, then you don't go to tribunal, because they will be scolding you if you are not proper. I said, fine, it is our profession, so let's go. But fortunately, I smiled at him, and it was in my early stages of my career. So I made some mistake at the time of the procedural small mistake done. But judge said, doesn't matter. You do this is okay. So the only thing, at the end of the day, the other judge also smiled. And the fundamental concept is, we won the case. Not because, it's only because of smile. Smile gave an impression. But ultimately your case should be strong. Okay, that is also there. Your case, we were very strong. But fundamentally, you can win the hearts of the people by a small smile. So smile. I don't want to see any serious faces. Okay, when it comes to your work, you should be serious. But when it comes to other than your work, profession, you need not be too serious, right? Yeah. So let's understand. Let me just put some brainstorming sessions. Supply has to be seen only from the supplier perspective. Is it true or false? Supply has to be seen from the supplier perspective. Or I'll put it this way. Only supplier is liable to pay GST. Only supplier is liable to pay GST. True or false?
No.
False. Why false? Reverse charge. Are you sure? Everybody sure? Okay, I'll rephrase that question. Only supplier and recipient is liable to pay GST. Why silence? I want an answer. Only supplier and recipient are liable to pay GST. True or false? See, I am supplying to X company. Either I have to pay GST or the recipient has to pay GST under reverse charge mechanism. Will there be any scenario that I am supplying to X but they are asking Y to pay tax? Did you see this anywhere? Or is it applicable first of all? Yes, it is applicable based on section 9(5), where the government has the power to notify e-commerce operators to collect GST on behalf of the supplier. Look at, there are 3 services being notified. One is transportation of passengers. So if you look at Ola cabs, Ola will be charging you GST. But Ola is not the service provider. Ola is only an aggregator. They are only giving you the platform. Who is liable? The driver is liable. But they are saying, okay, it is very difficult to make them liable. They will not do it. So on behalf of them, you ensure that GST is being charged and then paid to the government. Second service, accommodation services. Small hotels will be there. You will be booking the hotels through online. Make My Trip, Oyo rooms, where government said, I cannot go and catch all these people. You paid. That means Make My Trip or Oyo rooms. Third is household services. You would have heard Urban Clap, right? Urban Clap, what happens? You will book for some services. I want carpenter. Carpenter will come and charge 500 rupees to you. But with the GST, do you think that carpenter will register under GST and then pay the GST to the government? No. Government says, Urban Clap, you pay the GST to the government. Who is the service provider? Carpenter. Who is the recipient? Household. Whoever, we would be the recipient. But who is discharging the liability? Urban Clap. So these are all the 3 services where neither supplier nor recipient liable to pay GST. Okay. Now my next question. Supply has to be seen from the supplier perspective or recipient perspective or third party perspective. I'll rephrase the question again if you don't understand. Supply, there is a definition. Supply means all forms of supply, including sale, transfer, barter, exchange, lease, license, rental, disposal. 8 keywords have been used. Now my question is, supply means from whose perspective I should see it? From the supplier perspective or recipient perspective? Okay, I'll give an example. I'm a supplier. I'm selling some laptop. I'm selling some laptop. The laptop is my personal laptop. I'm selling my personal laptop. I'm charging. Do I need to charge GST? Threshold limit. Okay, sir. This laptop cost 25 lakhs for an assume. Or I'm selling my car. I'm selling my car which is 25 lakhs. Do I need to pay GST?
No.
Why no?
If there is business furtherance, then okay.
Only business or furtherance of business, then only you need to pay GST, right? All of you agree? Now, business or furtherance of business, you are seeing from the supplier perspective or recipient perspective. Okay, you take this example. You are the supplier. You are selling your car for, say, for example, for 25 lakhs. Do you need to pay GST if you are not in the business? If it is not in your business or furtherance of business? No? Agree? Assume a scenario where a car manufacturer who is selling the car or dealer who is selling the car to you, do they need to charge GST?
Yes.
Yes? Why? It's the same product, it's the same car, you are selling it at 25 lakhs, you are not paying GST, but the other party, he is paying GST. So why is it so?
He is in furtherance of business.
He is in the furtherance of business. So the supply concept has to be seen from the perspective of the supplier, not from the recipient or from the third party. You understood? So there was a notification also which has come. There was a circular which has come because it's a general practice in Indian economy that we will sell the second-hand gold. That means our own gold. We will sell it and we will buy a new gold, right? So when I sell my gold, I may be a household. Maybe some housewives will be selling their gold. So can you consider that as for the furtherance of their business? Can you consider that it is for their furtherance of business?
No.
The gold value may be 30 lakhs, 40 lakhs, even 50 lakhs. No, right? But because this was a question, because in the initial stage we had something called reverse charge mechanism. So now the question was, do I need to discharge my liability under section 9(4) because I am purchasing from an unregistered party? But then the department has clarified, no, it is not a supply. Once supply comes, then only section 9 comes into the picture. You please understand, section 6 or section 7 is the fundamental concept, supply. I am repeating, I started my speech with that particular note. Unless it becomes a supply, you need not look at the levy. 7 is not applicable, don't go to 9. So this purchase of gold is not at all a supply under section 7. Then you don't have to go to 9, 1, 2, 3 or 4, 9, 3 or 4. You don't have to go because it's not a supply at all. You understood? Now, third point is, it is not there. The goods, once it is capital goods for everyone. Do you agree that or not? See, once it is a capital goods. See, computer is a capital goods or not capital goods? Capital goods or not capital goods?
No. Depending upon the business.
Depending upon the business, okay. I'm getting some response. Good, yeah. Capital goods or not capital goods? Depending upon the business. Okay. Very diplomatic answer. Huh?
If it is a computer manufacturer, it is a regular goods for him.
Okay. It's a very, very important to understand its capital goods is not based on what asset you are dealing in. You may be having a laptop. It may be a capital asset to you, but it may not be capital asset to other people, right? It may not be capital asset for a person who is dealing in laptop, a trader in laptop. For him, it is only a stock. It is not a capital goods. You look at a vehicle. Vehicle may be costing 50 lakhs. It may be a trading goods for him. It may be an input for him, not capital goods. So capital goods definition clearly says capital goods means goods which are capitalized in the books of accounts of the recipient. Assuming that you are capitalizing in your books of accounts this laptop, then it is a capital goods. If you are not capitalizing it in the books of accounts, you are showing only in the stock, then it is not a capital goods. So very simple. Third is, or fourth is, all supply not in the course or furtherance of business. Somebody said, it's not in the course or furtherance of business. So do you think that even if it is not for the purpose of business, will there be any scenario where still that particular transaction will be taxed? We already discussed that if I am supplying some goods, you all agreed that no, it is not taxable because it should be for the business or furtherance of your business. Will there be a scenario where even if it is not for the purpose of business, still it is taxable? Sorry sir? Import of goods, services. Okay. See, import of goods, even if it is not for your particular business, still it is taxable. Import of goods, correct? Because when you are importing some goods from abroad, they are not asking you whether it is for your business or not. That being the case, everybody will import gold and will say it is for my personal purpose, right? That is the main issue. Every time you can see that gold import, they were doing some hawala transaction, etc., and then they got caught. So this has to be seen. This import of goods, even if it is for personal purpose, it cannot be considered as the condition of furtherance of business is not required. Okay, from where are you talking about all these issues? You are taking some random issues, or is it there in the provision? That we will see it under section 7. Okay, now next question is, the fundamental basic concept of GST is there should be a consideration. If there is no consideration, can that transaction be considered as a supply? I am supplying with X and I am not paying him any consideration. But will that be taxed on GST? Yes? Yeah, sorry? Sorry sir? Deemed. Okay, where sir? Where deemed?
Schedule 1.
Schedule 1.
Related person.
Very good. Correct. Yes. See, Schedule 1 says, government says, boss, even if there is no consideration in your transaction, I will tax you. First point is, if there is any business asset which is being transferred or disposed of, on which you have availed input tax credit, I will tax you. Second point, they are saying employer-employee relationship. If there is any related party transaction, when there is a related party transaction, they said distinct person. If there is a branch transfer and all, even if there is no consideration, I will tax you. Principal and agent relationship. Third is import of service. Import of service, they said even if it is not for, if there is no consideration, import of service from your another branch, then I will tax you. So this in detail we will see it in the coming slides. So before getting into the supply, we have to understand a couple of basic concepts. That is, first thing, our act itself is called goods and service tax, right? What is goods means? What is goods have been defined under section 2 subsection 52, where it says goods means every kind of movable property other than money and securities. And then we have other things, but includes actionable claim, growing crops, grass and other things attached to that. So but you just look at the first three, you can see that any movable property any movable property. This is a movable property, it's a goods. This is a movable property. Anything which is movable, you can call it as goods under GST. So they said money is being excluded from that. Money and securities are excluded from goods definition. Actionable claim is a goods, right? Do you agree that actionable claims, they clearly saying that, but includes actionable claim. But actionable claim, they made a mistake actually, that you will see it over a period of my presentation. Actionable claim, they are saying that it is a goods. But when they notified some actionable goods, lottery they said it is goods only. But betting and gambling and all, it is actually an actionable claim where the department said it is a service. It is highly, there is a big lacuna here, because once they say that actionable claims are goods, you cannot go back and notify that actionable claims are services. So there is a blunder there which has happened. Hope that these things will be settled over a period of time. Now recently, let's look at services. Very simple. Anything other than goods, money and securities are services, but it includes activities relating to the use of money or its conversions. So for example here, what they mean is, they are saying money and securities are excluded from service also, right? But they are saying any conversion happens. Say for example, I am giving you $1, you are giving me 70 rupees. This is a transaction involving money, and for this particular transaction, whatever commission you are charging, I will tax you. Okay, so money is not included, but transaction in money is taxable. Same scenario, securities. It was missing actually in the definition. In the First Amendment Act, in the CGST First Amendment Act, they included an explanation to the section 102. They said, for the removal of doubt, it is clarified that the expression service includes facilitating or arranging transaction securities. So securities and money both are excluded from goods and services, but services relating to that are taxed under GST. Now let's look at the business definition. This is a very big definition, and please look at this. I will be taking very small clauses, some of the clauses. Any trade, commerce, manufacture, profession, vocation, adventure or wager or any other similar activity, whether or not for a pecuniary benefit, that is for consisting of money or not, still it is considered as a business. This definition is very, very important, because most of the AR rulings, when they are saying that it is for the business, they are saying using this definition. They are saying, okay, you are collecting the canteen charges from the party. There is a Caltech AR ruling where they said the party was collecting, there was a canteen which they were running actually. In the canteen, what happens? They will be buying all the materials, they will cook it, they have a cook, everything, and they will sell it, or they will supply the food to the employees, and they did not have any profit motive. AR said, you did a commercial activity. You did a commercial activity. Your profit motive is not relevant for me. So it is a supply, you have to pay GST on it. This is what Caltech said. So here, you look at one particular transaction also, irrespective of its volume, frequency, continuity, regularity. The volume may be 1 rupee, still it is taxable. Frequency, you did it only one time in the year, still it is a supply. Continuity, there is no continuity to it, still. So volume, frequency, all these are not relevant. Okay, I'll tell you the importance at later point of time, but you please look at these two, A and C, where you can find out most of the issues in the definition of business. So here there is an amendment, but activities, the services provided by a race club, they changed it to activities of a race club, including by way of totalization, etc. So all these things you can go through it. Now let's move on to the consideration. So consideration definition, it says any payment made or to be made, whether in money or otherwise. I'm just taking only the crux of the definition. Consideration need not be in money. See, assuming that I am paying you, I supplied a laptop. you are giving me, so this laptop, say for example, this laptop worth around 80,000, and you are giving me 40,000 by way of cash, money, and remaining 40,000 you are giving me a mobile. So the consideration need not be in money, it can even be in kind also. So import of service, actionable claims, type of supplies. So supply we know. Before getting into the major crux of the definition, I just wanted to tell you what are all the supplies which are there in the GST Act. Taxable supply means supply of goods or services which are leviable to tax under this Act. My question is, exempted supply, nil rated supply, are they taxable supplies? Because all these are having importance, take it from me, when it comes to the analysis. Because this is very, very important when you go in detail to start interpreting the Act. So tell me, taxable supplies, does that include nil rated and exempted? Yes or no? You are not reading from my PPT booklet, right? Okay. Why it is yes? Exempted means there is no tax. Correct? Exempted means what? Exempted under section 11 of the CGST Act, which means there is no tax payable. Okay. Now, can you say that, or nil rated for that matter, there is no tax payable? Can you still call it as taxable supplies? Sorry? Percentage is not zero actually, it is exempted. Yeah.
Rate of tax is 0%.
Yeah.
It comes under GST levy. For example, non-taxable means this liquor, those
Yeah.
are non-taxable.
Yeah.
This is under GST levy, so the rate is 0. So
Okay. Okay. See, please understand, she is absolutely right. Exempted taxable supplies means it is a goods which are taxable under the GST regime. But exempted means what? It is taxable, but exempted by way of a notification under section 11. Or nil rated means in the rate notification itself, right hand side they will mention nil. That is exempted. So still it is taxable. Tomorrow they can withdraw that notification, or tomorrow they can amend that notification for nil rated or the other one, and then make it as a taxable supplies. So please understand, taxable supply includes exempted and nil rated supplies. Now, what is exempted supply? Please be very, very careful with this. Huge litigations are going to happen. Why means exempt supply is only one section which says exempt supply, then you have to refer to some other section, then you have to refer to some other section, then that will take you to another rule, that will take you another rule. I'll just connect each dots so that practically you can handle the issues. Exempt supply is defined under 247 of the CGST Act, which says exempt supply means which attract nil rate of tax. Nil rate of tax means in the rate notification itself, right hand side in the column rate you can see nil. 1/2017 central tax rate notification doesn't have any nil rated goods, but service notification you can see 11/2017 central tax, you can see dated 28 June, you can see some nil rated services. Okay. Now, second point is exempt under section 11 or under section 6 of the IGST Act, which is wholly exempted. See, section 11 has the power, which is the only section which is giving the power to notify to the government, to give the power to notify the goods as exempted goods or services. Now, if you look at section 11, 11 can give you exemption partially or fully. So for example, 28% is the rate of the goods. They can give a partial exemption to make it as 12%. They have the power to make it as 0%, completely exempted. So here they are talking only about complete exemption. Complete exemption. Okay. So the rate will become 0. The third limit is very, very important, which says non-taxable supplies are also exempted supply. Non-taxable supplies. So we already seen what is taxable supply. Here they are saying non-taxable supplies are also exempted supply. Non-taxable means what? As she said, alcoholic liquor for human consumption. Then petroleum products. Then we have Schedule 3 transactions. And anything which is not coming under GST are exempted supplies. Because it's a non-taxable supply. Because it is not leviable under GST. Okay. And you have to also see, when I say non-taxable supply, that supply word is very, very important. You may be thinking that, okay, you are saying that it is supply. That means if I do some personal transaction, will that be considered as non-taxable supply? No. First it should be supply, then only it will become a non-taxable supply. Because it has a huge impact. Let me tell you, I will come to that. Now, non-taxable supply, what is non-taxable supply? Non-taxable supply means which are not leviable to GST. That we already discussed what are all the transactions. Now let me ask you one thing. Now let me give you the intricacies in this particular definition itself. The moment you say that it is exempted, Section 17 says that if you are supplying both taxable supplies and exempted supplies, you have to reverse your input tax credit as per Rule 42 and as per Rule 43. 42 for input and input services, 43 for capital goods. So did you understand this? That means even if you are doing some supply which are not taxable supplies or exempted supply, if you are providing some exempted supplies, then you have to reverse your input tax credit. I'll just tell you what recently happened. There was a high sea sale. High sea sale means what? The goods will come, it would have departed from the Japan port, it would have gone to some other port. Before reaching, it would have sold. Now, it is completely happened outside India. It is a non-taxable supply. Now the question is, do you need to reverse input tax credit or not? Please tell me. High sea sale is a common transaction. Do you need to reverse input tax credit or not? It is an exempted supply. Do you agree? It is an exempted, right? Why it is exempted? I cannot hear anything from this side actually. So if somebody can give an answer from this box, it would be great. Sir, why it is exempted? Is it exempted? High sea sale is exempted? Yes? I cannot hear you. Please. Exempted. Sure. Yeah, it is exempted. So it is not taxable. So basically it is not taxable. Because it is not taxable, it is exempted. So do you think that you need to reverse your input tax credit? Correct? Okay, I'll give you one more example. Interest.
Sir, where is the question of reversal of input rate in particular case? ICC.
I'll just come to that, sir. There is a complication. I'll just come to that because there is a BASF AR ruling. Okay, BASF AR ruling, good that you asked. There is an AR ruling, BASF India Limited, where they applied for a AR ruling, asking for whether it is a high sea sale, is it exempted or not. They said it is exempted. Second question was, if it is exempted, do you need to reverse your input tax credit? AR ruling is saying that yes, it is an exempted, you have to reverse your input tax credit. But if you go to Rule 42, T4 says, if it is used exclusively for the purpose of taxable supplies, including if any ITC used exclusively for taxable and zero rated supply, you remove it from the common credit. Because anyway, that high sea sale comes and goes. I didn't take an input tax credit and I didn't do anything. Okay, so the question is, all exempted supplies, you may not be required to reverse your input tax credit. You understand what I am saying? There is always a dispute, sir. This AR ruling creates a lot of issues now because we are not able to take a concrete view on this. Reason being, BASF is saying that no, you have to reverse your input tax credit because it is an exempted supply. Because department will always take a conservative view. When you actually come to the act and rules there under 42, it clearly says that if it is exclusively used for the purpose of your taxable supplies, including zero rated supplies, no need to reverse your input tax credit. So you please look into it. I am expecting some clarification from the department so that these kind of issues can be sorted out at the early stage itself. We need not go for appeal. So what we are telling to the client, we are giving both the sides. BASF air rolling, we are giving one side, rule we are giving in the other side. Now it's up to the client to decide. But in my view, personal view, no need to reverse input tax credit on high C sale. This is my personal view. So please understand, all exempted supplies you need not reverse. But exempted means you have to go to rule 42 and 43 and see whether you need to reverse input tax credit or not. Okay. Interest. Okay, I am running a business. The company is having some fixed deposit. Most of the companies will have a fixed deposit because just wanted to ensure working capital, smooth flow. So they would have kept, say for example, 1 crore in their FD. They would be earning maybe 6%, 6 lakhs per annum. Interest, is it a taxable supply or exempted supply? Is it a supply first of all, interest? No. Interest is a supply. And it is exempted by way of notification 12/2017 central tax rate notification. They exempted it actually. So when it is exempted, do you think that reversal is required? The moment you say it is exempted, you understand what I am saying. The moment you say that it is exempted, you have to reverse your input tax credit. So when you say interest is exempted, which is coming into my P&L account as credit, do you think that reversal is required? No or yes? No, why? Why no? Standard rule is exempted, you have to definitely reverse it. Why no?
They have not taken the input tax rate. Where is the
That is the main issue. That is what I'm saying. That is what I'm just disagreeing with that high, BASF rule. But just assume that for a moment. Assume for a moment that it is a common credit. Assume for a moment. They can always take the other view also. They can also say common credit, you used it, that is why you earned this money, and then you put it into FD. So they can always come up with different argument. See, I will just tell you what is the pulse of the GST department. Recently, I got an opportunity to meet the investigation director of GST. So I just personally met him, and I asked him, sir, all of your officers are there in office. Generally, I cannot see because most of the time they will be in the investigation. They will be in the field actually. So I asked him, what is this, sir? Most of you people are here. He said, I asked him, because you can hear that there are a lot of issues which are coming up relating to wrong ITC availment, fraud, etc. He said, Rajiv, one thing, if we go and then find out any mistake now, they have an opportunity to rectify before 31st March. Okay, and they have a time to rectify all this mistake. And now if we go, we will get a small quantum. Let them make mistakes. Let's make it bigger, and then we will go and catch them. So it's completely cornered. So they are also looking the time value for their particular service. They are saying if they go and find it out, they cannot report anything, right? They can find it out, but they will always find a solution because anyway time limit is there. There are various judgments which they clearly says that if they rectify before the time limit allowable, then no problem. The time is extended, so there is no meaning in going and then catching them. So these are all the things which we understand inside from the department how they are looking at. And one government in India has some of the governments in India, they have appointed some consultants, GST consultants, for finding out how to increase their revenue based on these provisions. And one state, that person asked me my opinion also. Raji, you give me a couple of points so that I can put it across. So I was thinking whether I should give it or not. But personally, okay, since he is my friend from the state, I gave some points to him. One point is this gross liability. Interest is not calculated its own. You all appreciate that in GST 3B, Whatever you say, 3B will accept. Interest automatically it will not calculate. And section 50 says on his own account you have to pay. That means you yourself have to pay. This is one issue. So everybody is paying on net liability, not on gross liability. Though on 31st GST Council meeting they proposed for this particular amendment saying that okay, input tax, so we will consider net only you have to pay interest, but still, and Hyderabad for that matter, Hyderabad Commissionerate has issued a order, standing order on I think 14th of February they have issued a standing order saying that if it is not on gross liability, ask everybody to pay it on gross liability and then catch all of them. They issued the standing order also. So please be very, very careful. It's not that the GST has implemented and then everybody is sleeping now, because nobody wanted to come and then catch any one of you. They will come only after 2 or 3 years. And they, from their side also, they are very clear. They are very clear that they will go with the provisions. Now I told you a few minutes back the unreconciled issues, right, in the ITC. When somewhere in October 18th, there was a tweet from the finance minister saying that you can take input tax credit based on the invoices or documents available. Reconciliation can be done later. That is what he tweeted. Now everybody is thinking that that is a law. No need to reconcile with the 2A. No need to reconcile with the 2A because finance minister said. Finance minister is below the parliament, below the act. Act is the supreme. They cannot take that stand. They said what they said. They clearly said you can do it later. We are not insisting on it. That's what he said. Now everybody is saying that no sir, 2-year reconciliation already it is not matching. Why are you asking me to reconcile? See, take it from me that reconciliation is mandatory as per section 16. That reconciliation last date is 31st of March. Please do reconcile. Please do reconcile that. Nobody has told that it is not required. Okay. So these are all some of the important issues. Interest, it is exempted, but fortunately what happened is, in the explanation to that particular section, they said, for this particular purpose, for the reversal of input tax credit, interest is not considered as an exempt supply. Going further, there was a CGST Amendment Act where they said all items which are given under Schedule 3, I understand that it is a non-taxable supply, but for the limited purpose of reversal of input tax credit, I don't consider that as a exempted supply. So Schedule 3 is out subject to one particular item, land and building. You can see that the builders and all will be, once the CC is received, then that is not a supply because it will move out of service, then it will be like a land and building which is exempted. So they told for the limited purpose of that particular thing, I will consider it as an exempted supply. Otherwise, it is, you don't have to reverse your input tax credit. Very, very great amendment which is very well accepted because all of us are relieved now to a great extent. But please understand, this is only a prospective amendment. It is not a retrospective amendment. I was looking for it. I thought it would be a retrospective amendment, but I can see that there is an amendment which is just above that, Schedule 2, where they said it is deemed to have been notified from 1st of July. But Schedule 3, next line, they are saying that nothing has been mentioned because that Amendment Act itself is starting saying that unless otherwise we specify the date, this will be deemed to have been notified from the date of notification, where they will appoint a date. That is, appoint date is 1st of February. Okay, so it is only a prospective amendment. Now, let's look at section 7.1, supply. 7.1 says, for the purpose of this section expression, supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal, made or agreed to be made for a consideration. So consideration is a mandatory requirement by a person in the course or furtherance of business. So consideration should be there. Second, it should be made or agreed to be made in the course or furtherance of business. This is what the general understanding is all about. Please read next one. Import of service for a consideration. So there should be consideration if it is an import of service. whether or not in the course of furtherance of business. So if you are importing any service for a consideration, whether it is in the course of furtherance of business, still you are taxable. Can you give me an example? How many of you download the movies or music by paying some amount? Or Google Ads? Whatever. Google Ads is an import of service, actually you are importing it. Or music downloads by paying some amount. It's all import of service. So do you think that all of you who have downloaded the movies, say from Sony Music, Japan, they are allowing you to download music, and you download it by paying, say for example, $10. So 700 rupees you paid. So do you need to get it registered? Because 24 clearly says compulsory registration. So do you think that all of you would be liable to get it registered? Because RCA means compulsory registration. They are using the word whether it is for your business or not, still you have to pay the GST. What do you think? How many of you have downloaded movies and music? Or anything for that matter by paying some consideration? How many of you bought this website, GoDaddy? Plenty, plenty would be there. It's not one or two. Plenty, we will not be knowing it. We'll just use our card and then we'll download the many services. See, government understood this issue. It is actually taxable. But what they did, they said in the IGST Act, they made a provision called OIADAR. That means all these companies who are providing services, government cannot come and catch all the individuals. Correct? 1 billion people, very difficult. Correct? 1.25 billion people, very difficult to find. Everybody daily will be downloading. They cannot send notices like that. So they said all these kind of services, OIDAR has to register in India and they have to discharge the liability. That is why all of you are getting escaped. Otherwise, all of you will get notice, including me. So import of service should be for a consideration. If it is free, no problem. Next, activity specified in Schedule 1 without any consideration. Schedule 1 without any consideration, still GST is applicable. Now, let's look at the most important thing. Generally this is a practical word which are, theory. Is supply when you decide, practically we look at 4 aspects: place of supply, time of supply, value of supply, rate of supply. These 4 important components should be in line and you should do it properly. Then half of your problems are over as far as supply is concerned. If you decide place of supply wrongly, if you decide time of supply wrongly, if you decide value of supply wrongly, if you decide rate of supply, that is classification, then you will get a notice, and in the future we will have a lot of litigations. And there is something called barter and exchange. Right? In the definition of supply, you could have seen barter and exchange. What is the difference between barter and exchange? Can anybody help me with that? Barter versus exchange. Barter is used before independence. Exchange is used post independence. Any answer?
Exchange has some value.
Excellent point, sir. Exchange has some value. Very good point. Any other points? See, exchange and barter, the basic difference is, in barter, you are not valuing that particular goods or service. Say for example, I will give this mobile and get a car. Okay, because I need a car now and he need a mobile. That's all. They are not valuing, okay, this is only 50,000, that is actually 12 lakhs. That is barter. Exchange means what? Okay, you give me that car, this is only 50,000, that is actually 12 lakhs, balance you give me 11.5 lakhs. So there is a value which is being determined. So barter and exchange, there is a difference. So please make note of it. Okay. And 7.2, so we discussed only 7.1. 7.2, they are saying activities or transactions specified in Schedule 3, anything contained in Section 7.1, or such activities, transaction undertaken by central government, state government, local authority in which they are engaged as public authorities as may be notified shall be treated neither as supply of goods or supply of services. So Schedule 3, basically they are saying, Schedule 3 we are considering that neither as a supply of goods nor as a supply of service. Okay. And some central government activities. Notification is also being given. Now, so let's understand this 7.2. There are some circulars which have been issued because everybody started facing the problem. The problem is, assuming that a transport agency is having one bus. Okay. How many of you have traveled from here to Bangalore by train or bus? How many of you? Nobody? Okay. Many, right? So the bus starts from Coimbatore, goes to Madiwala, Bangalore, right? Do you think that it's a movement of, there is a transfer happens, right? There is a movement of vehicle, right? Previously only we said from one branch to another branch, if you are transferring some goods, bus is a goods because it's a movable goods. So it is actually taxable. That is why they issued the circular. They said no. Train, truck and buses, everything. Even if you are moving from one state to another branches, no, you need not pay GST. It will not be considered as a supply. And second one is they said jigs, tools and spares and all other on vehicle like cranes. So cranes will move from one location to another location. One location to another location for the project purposes. So that being the case, they are clearly saying that it will not be, IGST would be applicable on such movements only, no IGST will be applicable on such movements. So you can go through the circulars and now let's come to Schedule 1. Okay, we understand that Schedule 1 transactions, activities to be treated as supply irrespective whether there is a consideration or not. This is the first point. Permanent transfer or disposal of business assets where ITC has been availed on such assets. Meaning thereby, assuming that, not assuming, actually there was a case where in our office, one trust, their objective is to run schools actually, I mean school for students, that means government students, they will go and then support the information technology services. That is their objective, education basically. So what they do, they will buy laptops, they will go to the government schools, they will do education for the schools. I started wondering that many students don't know how to operate computers in some of the villages. I got astonished by hearing that. When they said that, I didn't listen, I didn't accept it. I said, what are you talking about? Mobile, computer, all these technologies are normal nowadays. They said, no. Students are coming and then they are learning computers in some of the villages. They are not talking about Chennai and all, they are talking about some interior villages. Where, as a part of our office initiative, we had a laptop actually. So we partners all decided that, okay, let's give this laptop. Okay, we gave the laptop. And we said, okay, you take this, no problem. So that lady also taken the laptop and then left. We also gave some furniture also. They said, they need some furniture, so we were also doing some interior in our office. So we said, okay, you take all these chairs, whatever you want, you take it, no need to pay any amount. So they took it away. Now, all those assets will attract GST. But fortunately, in our case, what happened, we purchased all these assets before 1st of July. 1st of July. But assume a scenario where that laptop we purchased post July and we would have availed input tax credit. Definitely would have availed input tax credit. Now, even if you are giving to a trust at free of cost, government says you do your charity, no problem for me. But you reverse your ITC, you avail the ITC, you avail the ITC, I will tax you. Because it is considered as a supply. Because you cannot avail the ITC and then do the charity. You reverse your ITC, you pay me the GST, then you avail, then you do whatever you wanted to. That is a fundamental point. So even if there is no consideration, if you have availed ITC, then this will come into the picture. Next,
we capitalize that part alone, we need not be taxed.
So if you are capitalized, you will be eligible to take input tax credit. Or whether you capitalize or not capitalize, you are eligible. Assume that you are eligible, you availed it. Okay.
I am not aware that.
No problem. No problem. Assume scenario, very good point, that assume that you purchased a laptop and you don't want to avail ITC at all. Rare cases, we generally avail it, right? Assume that for a moment we don't have to, we did not avail it for a time being. And in such cases, if you are donating, no problem. From government you didn't take any money. You are the ultimate consumer, right? So you don't have to reverse anything, or there is no problem as far as the transfer is concerned. You understood? You understood? Yeah.
If suppose I have taken a laptop,
Yeah.
when I am filing my return on the 3B, I have to show that the ITC I have availed and reversed it.
Not reversal, it's actually considered as a supply. So basically what they are saying, it's not a reversal, it's actually supply which is happening. So government says, okay, even if you are disposing that laptop, you are removing from your fixed assets. Obviously when you are giving it away, you will remove it from your fixed asset. The moment you remove it as from your fixed asset, it is a disposal. So government says, okay, you declare that value, okay, and then pay tax. Now what is the valuation which is coming into the picture? Section 15 of the GST Act clearly says that when the price is not the sole consideration, go to rule 27, which will give you the rate, the value. It says that open market value, etc. So refer rule 27 for the value, and it will be considered as a supply, not reversal of input tax credit.
No, that is not easy issue.
My issue is when I am taking the
automatically reflect in 2A. When we purchase the
Yeah.
automatically
Yeah.
it will reflect in our 2A.
Correct.
So when we uploaded 3, whether it requires to dissolve, it requires to dissolve or not, it is asking.
No, you are not.
That part
So,
our-
when I
it-
purchase my
yeah,
laptop,
yeah.
calculating that
I will
part.
get my ITC.
Correct.
When I am disclosing my 3B return
Correct.
ITC, that 3B return ITC I have to avoid, and again I have to reverse it or not.
No. See, it is completely your interest to avail or not avail. Assume a scenario, it has come in 2A, you did not avail it in 3B at all. Then this provision is not at all applicable to you. Assume for a moment you availed it. Then only this schedule 1 will come into the picture. Have you availed it in your returns?
But when you take the reconciliation of the supply,
Yeah.
what we have received,
Yeah.
that should be reconciled at the time of reconciliation.
Yeah.
What about the part of the input tax credit, or what about the tax?
Yeah. My fundamental question is, if you are buying in the same month and you are disposing in the same month, don't avail it. Don't avail it. Then this provision will not come. So you are not availing input tax credit. First point. Second, it is not considered as a supply. Why? It is ultimately a transferred. ITC has not been taken. Ultimately, what happened? You become the consumer, ultimate consumer. That is what happened. Assume a scenario. This month you availed it. After 5 months, you are reversing it. You are supplying or disposing it. Then you already availed. So government says that no, it will be considered as a supply. If it is a reversal, it will be much bigger problem actually, because when you are reversing it, assuming that it has to be reversed from first availed date, it would be a big problem. They said no. You cannot expect all this transaction, right? So it is considered as a supply. In the 5th month, when you are considering it as a supply, provide a value, reverse the input tax credit.
Depreciated value will not be considered.
No, basically, no. That is what what happens is you bought the computer. After 1 year, say for example, you provided 40% depreciation on it. So this laptop become 60,000, right? So as far as the supply is concerned, have you availed input tax credit? Yes. So it is a supply. Then what is the value of that supply? Now after 1 year, should I again take 1 lakh or should I take 60,000? Should I take 50,000? That is being determined under section 15 of the CGST Act, read with rule 27. So what is a supply? That comes in the different section altogether, but it is a supply. That is the only point which I would like to make. Now supply between, this is the most litigation prone area which you can see it in future. Supply between related or distinct person, where supply happens but you are not, there will not be any consideration, but still it will be taxed. Okay, so who are all the related persons? Section 15 of the explanation to section 15 gives who are all related persons, And section 25, 4 and 5, nothing. One is your registered branch, one is unregistered branch. That is only difference. But basically branches, where if you are providing any supply, either as goods or service, it will be taxed. So for example, you are moving your goods from here to stock transfer from here to other states. Previously, there were some forms which you used to file it. All these things are gone. You have to tax it. And there, when they are supplying, you avail the credit. So what is the value? Now, when you are moving the goods from one state to another state, what is the value? Is it a supply? Yes, it is a supply. What is the value? What is the rate? All these things comes under, valuation comes under section 15. So where you can take the value. Okay. So the next is, I have given the explanation, related person, distinct person and all. You can go through it. Okay. I have given few more examples also. So you can go through that. And third is principal to agent. So assuming that, I have a principal in Delhi and I am supplying from here to, as an agent I am supplying to Delhi or the vice versa. In both the cases, it will be considered as a supply and you have to pay the tax accordingly. The fourth one is import of service. If you look at the import of service definition in the schedule 1, you can see that, look at this point. Yeah, look at the B point. Import of services for a consideration. Yes, agree. So assuming that import of service is not for a consideration, do you think that it is a supply? No, right? Clearly says it should be for a consideration. But schedule 1 clearly says that even if there is no consideration for import of service, then still I will tax you if it is from a related person. Say for example, our office is here in Chennai. Okay, assuming that for an international, say for example, Canadian GST, I wanted to get an opinion from Canadian GST for one of my client who would like to, who propose to take up a registration in Canada. So what I'm doing, assuming that I have a branch office in Canada, I'm just taking an opinion from them, and obviously both are related persons, so I'm not charging. Still, it's an import of service, but still it will be taxed because schedule 1 clearly says import of service is taxable irrespective of whether there is a consideration or not. Okay. So in schedule we have seen supply section. Schedule 1, how many transactions are there in schedule 1? Let's understand, let's summarize that. Schedule 1, how many transactions are there? First one is transfer or disposal of assets, business assets, where input tax credit has been availed. Second point, transaction between distinct person or related person. 3, principal agent. 4, import of service. Thumb rule. I hope everybody is clear about this 4 transactions. Whenever you see these 4 transactions, please ensure that you are considering this as a supply and appropriate disclosures, valuation being done properly. Now schedule 2. Schedule 2 was a big sword on everybody's head. Reason being, they said schedule 2 transactions, activities or transaction to be treated as supply of goods or supply of services. Previously, it was a charging section. Please take it from me. It was a charging section because it was coming under 7. Then now they made it as a classification section. Meaning thereby, all these transactions, 7 transactions, it has around 18 items. In the coming slides you can see what are all this. See, first point, I will just give you one example and then tell you what the government has made a mistake. Any transfer of title in goods, is considered as a supply of goods. Till the First Amendment Act, this has to be read like this. Any transfer of title in goods is a supply. That means if I am selling this to you, it is a supply. As per schedule, as per section 7, if you go to section 7, they said, then only they made this mistake actually. See, it says, the activities to be treated as supply of goods or services as referred to in schedule 2. That means what? that should be considered as a supply of goods or services. It was a charging section. They made an amendment now. That is with retrospective effect. For that, because of that, all of us are safe. Otherwise, if I am selling my personal assets also, it would have come under Schedule 2 and then I would have liable to pay tax. Now they said where certain activities or certain transactions constitute as supply under Section 7.1, once you become supply, then come to me for classification, whether it is supply of goods or services. Previously it was not like that. Previously they said supply itself, it was a charging section. Now it became a classification section, because they are saying if you are falling under one, you come to me to decide whether it is supply of goods or services, and to decide whether it is HSN is applicable or SAC is applicable. You can go through this list because it doesn't have any tax impact as such, because as far as it is only classification section, so you can go through it because it's there are 18 line items. So it's very simple. If you have any doubt, you can get back to me on this. The material is also given, so you can go through it. Now Schedule 3. Okay, we'll break after 5 minutes. Yeah. Schedule 3. Activities or transactions. Now I'll just give you one more aspect. What happens in the other countries, so that you will be able to appreciate. See, as far as the rate is concerned, in Australia, the rate is 10% generally. Okay. And in Singapore, it was introduced in 1994. They started with 3%, now it is actually 7%, single rate. If you go to Canada, it depends upon the provinces, okay, but majority of the goods or services will fall under 13% category. It is starting from 5 to 13%. UK, it is standard as 20%. So we generally compare it with Canada because it's a dual taxation. Here also it's a dual taxation. So as far as tax rate is concerned, our highest rate is 28%, which is the highest if you compare any country for that matter. But you also appreciate that we have very less number of items in that. Previously we had huge number, now it has come down, right? And you look at Australian supply definition. Here in supply definition, you would have seen that you would have seen everything. I mean, supply includes transfer, sale, transfer, disposal, rental, lease, license, everything you have seen. Did you see provision of service in that? The fundamental concept is provision of service, right? Did you see sale? You have seen. So, you have seen transfer. You have seen disposal. Everything you have seen. Did you see provision of service in that? They missed out. Actually, they could have incorporated it for a better clarity. Anyway, it is an inclusive definition, so they can always come back and say it is already included. Okay. So, but in GST law, if you look at the Australian law, they clearly given provision of service is also included in GST supply definition. And they are using the word taxable supply in Australia, they are using the word for the furtherance of the enterprises, not business, which is a wider definition. For the enterprises, if it is for the enterprises, then it is supply. So that being means what? Input tax credit, no discussion required, straight away you can take. Now we are discussing whether it is for corporate social responsibility, if it is applicable or not applicable, because it is not for my business. Business is smaller than the enterprise. Enterprise means for the development of the enterprise. So in Singapore also they are using the word business for the furtherance of business. So these are the comparison will give you some sort of understanding on how the law have been, all the laws have been drafted. So you will get a comfort on this. Now, GST Schedule 3. Let's look at what are all exempted, non-taxable supplies. One is services by an employee to employer. Please note, it is only employee to employer, not the vice versa. Employer to employee is always taxable. There is a misconception. So can I ask you one thing? Because when we did an analysis for one company, we went in detail because AR is going in such a mad manner where nobody can think of the transactions actually. They are saying that it is a supply. So let me just ask you, if you go to an employment, they will give you tea, coffee, right? Correct? They will give you tea, coffee, right? Is it a taxable supply? I mean, okay, obviously they are not charging you because it will be there in the cafeteria. Is it taxable? Is it a supply? Because it is provided by the employer to employee. Tell me, is it a supply or not? Huh?
Supply.
Supply. How many of us are, see, these are all the department, take it from me, you go down the line for 3 years or 4 years, department will go mad like anything to think like this. And when they ask us also, we will give these kind of points also. So tell me, is it taxable or not? Is there any exemption?
No.
No exemption, right? Employer to employee. No exemption. Where is the exemption? Employer is selling his car to the employee. Taxable or exempted? Taxable. And but obviously there is a valuation rule that you have to see. Employer is giving pen, pencil, everything to you. Taxable? So you have to also draw a line somewhere to say that if it is in the course of his employment, whatever is being provided, okay, it is exempted. I mean, it is for the purpose of employment. But that being the case, you can go in such an extent, because when I analyzed, even that being the case, even they will charge higher charges for the chair where I am sitting, right? They will even go say that, boss, I gave you chair, the employer has given you the facility. So they can go mad. So somewhere we have to draw a line. Though the act is there, the implementation aspect also to be considered. But I will not be surprised on all these goods tomorrow if they are coming up with a notice. I will not be surprised, because canteen already they started. Canteen, Caltech, they said canteen. Then what is the difference between canteen and cafeteria? Both are saying canteen and cafeteria. How do you differentiate it? Cafeteria, you will be selling the tea. Cafeteria also, canteen also, you will be selling the tea. So please be careful. There are a lot of as a professional, what you can do, the best solution is you tell the client very clearly that, look, there is a Caltech, there is a Columbia Asia Hospital, AR rulings. These are all the potential transactions which can fall into the bracket litigation prone areas. Just give a note and summarize it and give it to the client. You are safe. You won't believe, I was called to handle a training for one big company, very sophisticated company, having such a huge turnover. Everything is SAP based. Almost 10 to 20 chartered accountants are running it in the head office level. Such a company, when they called me for a training and I went there, I knew this company very well because we are the advisors for that company. So I know in and out of this company. So, but the only problem is when you say something, they will not accept immediately. They have to go through all the process, but still nothing will happen. I took 20 points, critical points, gave it to them. I was handling one by one. Everything is applicable to them. Everything is applicable to them. They violated all the provisions. Because of their ignorance, they are asking, what are you talking about? I'll give you a typical example. They are located in EA, Express Avenue. 5th floor, I'm changing some facts. 5th floor and 6th floor are being occupied by this company. 6th floor is regional office. 5th floor is the branch office. Both are having different registration numbers, but the rent is being paid by regional office. Do you understand? Rent is being paid by regional office. That is another registered person. I said, no, you cannot do that. If you are paying, then you have to charge him. They said, what? Both are my office, na? I know that guy, I know this guy. Both of us are same. I said, same, okay. But you are a registered person different. That person is registered person is different. Another issue which they did is, this input tax credit, they closed down one branch in Pondicherry. They didn't have any goods there. They didn't have any employees there. They closed down. But very unfortunately, they had around approximately 18 lakh input tax credit. For a computation purpose, I'm just telling 18 lakhs input tax credit. What these people cleverly did, they did a raised an invoice to Chennai. Chennai anyway having business now. You cannot go for refund because 54 subsection 3 clearly says you can go for refund only and only if it is a zero rated supply or inverted duty structure. So this is not falling into any of this. What they did, they cleverly did a invoice raising. these people, obviously that credit has come to Chennai, they availed it. And they will approach us only after doing the damage. No, they will come to us, will say, sir, we have done this. Okay, wow. That's all they will say. They will not say whether can I do it. No. After doing only they will come to us. So this, when we are casually talking, in the meeting, he said, we did this. I said, what? Is there any employee there? No employee. Is there any goods? No goods. Then can you raise an invoice? Hey, what is the problem, sir? Who is raising? Person sitting in Chennai, Express Avenue, raising invoice for Pondicherry. Who is sitting here? Who is filing both the returns? He is doing both. It's only dummy transaction. I said section 16 clearly says the person should have been received the goods or services. What service you provided? Suddenly 1 crore, 18 lakhs, done. Bogus transaction. You are not eligible for input tax credit. We fought like anything, and then finally head office approved it. Correct. This is a bogus transaction. Just reverse this transaction. They reversed it. Paid interest also. So you have to be very, very careful in all this transaction. You cannot simply do a cross-charge invoice and then transfer the credit, because actually you are not eligible for refund or any other. You have to do business. So in that case, when they are charging, assuming that there are employees, genuinely they are providing some service, then I am okay with it. Here that is not the case. Now let's look at this. Services provided by an employer to employee. Second is, you also look at if any service is being provided by employee to employer. Any goods supplied by employee to employer, taxable. It's only service. Services by a court or tribunal, MLA, MPs, whether they are providing service or not, which you have to look at your constituency. Next is funeral, burial and other things, all the services. Sale of land. Sale of land is very, very important. Sale of land is exempted. Sale of land is exempted, provided it is after getting land is exempted. Building, assume that building is exempted only if it is a construction building. After getting the CC, completion certificate, then it is exempted. Before completion, it is taxable. Actionable claim other than lottery, betting and gambling, it is exempted. Only actionable claims, only 3 actionable claims are taxable: lottery, betting and gambling. Lottery, they classify it as supply of goods. Betting and gambling, they classify it as supply of service. I told you this already, they made a mistake here. Next is, this is a very recent amendment in the Amendment Act, the CGST Amendment Act, where they said supply of goods from a place in the non-taxable territory to non-taxable territory. Because I am sitting in Chennai, I can ask my Japan company, my head office, Japan, to send some goods to UK. I will get some revenue out of it. But transaction has happened abroad. So here, this was disputed long back. Everybody is saying that no, you are located in Chennai, so it is taxable. No. Now they said if such transactions are there, it is exempted. It's a non-taxable supply because of it's neither a supply of goods nor supply of service. Second, they said supply of warehoused goods to the person before clearance of home consumption. You will be knowing that if you import the goods, you have 2 options. You can file bill of entry, take the goods immediately. Second, you can say that no, just keep it in the bonded warehouse. Bonded warehouse means you don't have to pay duty. You keep it in the bonded warehouse. Either I can go and then file bill of entry and then claim it. At that time, whenever I am filing, at that time only I have to pay customs duty and IGST and all. Till such time I have to pay warehousing charges. That's a different issue. What happens is, in one of our clients' case, what they did, they imported and the client is located in SEZ. So when the SEZ files bill of entry, they don't have to pay tax. If they are filing it, they have to clear it as a domestic consumption, then they have to charge, it will be exempted. So a lot of complication will be there. So generally what they do, they will bring it, import it, keep it in the bonded warehouse. They will give the authorization to the other party to clear it off. So in such situations, GST is not taxable because GST is not applicable because it is a non-taxable supply. All these were confusions actually. So basically now you can draw a line when you are importing, unless otherwise you file a bill of entry. Unless otherwise you file a bill of entry, take goods for your own consumption, it is not a taxable one. Because the moment it is imported and somebody else is filing bill of entry, then that person is only taxable and then the GST will be discharged accordingly. So this is also, generally we call it as high C sales. high C sales, before clearance we will sell it. We already discussed about whether it is exempted or not. It is exempted, but what about reversal of input tax credit? We already discussed this.
Is it prospective effect or retrospective?
These are all prospective effect. These are all prospective effect. Schedule 3 amendments are all prospective effect. You can just see, sir. Schedule 2, just one line above, they said it is.
One of the speeches heard by Vimalji.
Yeah.
So his speech, what he said is it is retrospective effect.
No.
Introduction of the act.
No.
Even though it was amended.
No.
That is what he would be.
No, absolutely. Probably he would have, I know, I respect him actually. But at the same time, it is, if you look at the act, just one line above, because we did 10 times verification of this, because just wanted to be very sure about, because there is a high C sale transaction, one of our companies, we did a 10 times verification, just one line above, they clearly said that is schedule 2 amendment, they said it is with retrospective effect. For this they kept quiet. The moment they keep quiet, on the first line it clearly says, if unless otherwise specified, it will be applicable only from the date, appointed date as notified. So appointed date as notified is 1st February. He would have told something else. I think there would be some miscommunication. Schedule 3, the high big relief is value of exempt supply shall not include value of activities specified in Schedule 3 except for the specified para 5. We already discussed this, otherwise you should have reversed the input tax credit. Now composite, we will close it with the composite and mixed supply. So composite and mixed supply. See, what is composite and mixed supply? What happens is, when you are supplying some goods, you will also have some services sometime. Okay. So before that, before getting into the practical aspect, we will look into the definition. Composite supply means consisting 2 or more taxable supplies. Please look at it. Here we went ahead and then seen whether one good is taxable, one is exempted. This is what I said, taxable supply includes exempted supply. See, look at this, consisting of 2 or more taxable supplies. There was an argument initially, assume that water is exempted, mobile is taxable. Assuming that this both are composite supply for the time being, I know that it's a mixed, but composite supply. The point was, if you are supplying both together, it is not a composite supply. They were saying, okay. Why means, they were saying, consisting of 2 or more taxable supplies. This is exempted, this is taxable. How can you say that it is composite supply? So we clarified saying that, first look at the definition of taxable supplies. If they are saying taxable supply, go and see the definition of taxable. Taxable supplies means what? Leviable. It is leviable to tax. It is leviable to tax. So that argument will not stand. Now, which are naturally bundled? Obviously, these are not naturally bundled. So it will come into the mixed supply only for the example only I have taken this. Which are naturally bundled and of which principal supply, assuming that mobile is the principal supply, whatever rate applicable to mobile will only be applicable. Say for example, I am sending this mobile with the freight charges recovery. My mobile applicable at 12%, then freight also to be recovered at 12% because it's a composite supply. Mixed supply, this is a perfect example for mixed supply. Okay, where 2 or more individual supplies made in conjunction for a single price, where the important is it should be for a single price. This is charged separately, this is charged separately, it's not a mixed supply, both should be charged for a single price. Now I have given a lot of examples here, you can go through it. Composite supply, one night stay and breakfast, it's a general practice, so it's a composite supply. Composite supply predominant only will be taxable, and there are some clarification which have come. I'm not accepting that views sometime. Printing is fine. Printing industry, what happens is you are providing supply of goods and services. You will print it in a pamphlet and then give the content. Now the question is, printing, is it a service or it's a goods? So then they clarified that if you are giving the content and asking them to print it, assuming that I am an author of a book, I am giving my content, he is printing it, it's only a supply of service. Assuming that, in hotels, you know that tissue papers which is printed with their name, hotel's name, right? So those things, I'm not giving any content to them, I'm just saying that my name should be there. Those cases, it should be considered as a goods. You should go through it, because this session I will not be able to go in detail to explain these kind of thing. I have mentioned the circular number 11 bar 2017 and 34 bar 2018. That is for another one, bus body building. This is most important thing. All of you will be having a car, no? Car or bike or whatever it may be, vehicle. Vehicle, what was our understanding? When we go to a garage, we are leaving our vehicle there for repair. Which is the predominant one? Service or your spare parts? Service. So it is taxed at whatever service rate, 18%, right? Agree? This is the fundamental understanding all of us are having. Suddenly they issued a circular saying that where supply involves supply of goods and services, and the value of such goods and services are shown separately. If you are showing separately in an invoice, the goods and services would be liable to at applicable rate. How can you take a different stand? When the act is saying something, you have to stick to that. Now they know that spare parts are all taxable at 28% and service is 18%. The revenue leakage will be there. Government said no, it is taxable at 18%. Correct? Service 18%. Spare parts they said 28%. Actually it should be 18%. Now you know what? Why this issue? See, assuming that it is 18%, they can always look at the refund provisions, inverted duty structure. They can see whether they are fitting into those. Depends upon the facts and circumstances. If they are fitting into it, they can even go for refund. That's why they said no. 18. Spare parts, you show it in separately invoice. Goods, when I am selling, freight also I am showing separately only. Correct? We will not compare it. No, we will just show it separately. They are saying that no. If you extend the circular to some other industries, now everybody got confused. Everybody previously had an understanding based on that. Now they started confusing with the
delivery at site.
Huh?
Delivery at site.
Delivery, whatever sir. I am supplying goods to you.
Yeah.
I will charge goods, mobile worth say for example 1 lakh. I will also charge my freight charges, say for example freight charges 10,000. Generally whatever rate applicable to this mobile only will be applicable. Now if you extend this node circular, it says if you are showing two different line items, yes obviously we are showing items separately, freight separately. They are saying respective rates will be applicable. Just think a scenario where you are supplying goods at 5% sir, to their construction site. You are applying 5% now based on the principal actor. Now they are saying no, it's 18%. It is going to create a lot of issues now. Because whatever applicable rate they are saying, so that the differential tax, there will be a potential demand based on the circular. We can always say that circular is not binding on me, I trusted on the act. Those are litigation area where we will go for an aggressive view. Yeah.
What happens in case of warranty wherein they give fee with goods and services freely for 1 or 2 years or something?
Yeah.
In that case, what is the value that is associated with that?
See, warranty, everything, yeah, I will explain that. It's not my topic actually, but still I will just, for limited explanation I will give you. It is covered under section 15. 15, where they are clearly saying, 15.1, 15.2 and all, 2 they are saying, all the incidental expenses and ancillary to that particular product, whatever, expenses which you feel that, you will incur, that will be factored for the purpose of valuation. So what you do, when you are fixing the price of a mobile, you are also considering some warranty service cost which you would have already factored into those, right? So say for example, every industry will have a certain percentage. So for example, 1%, 2%, 3%, that they will already would have factored. So there is no concept called non-taxability. Definitely it would have taxed based on that value of supply. When the value of supply comes, you can just explore further.
Excuse me.
Yeah, please.
Regarding this composite supply.
Yes, sir.
Along with the product, I give money. So what happens? With the product, instead of giving gift vouchers, I give cash.
Okay.
So how do we value that?
See, this is again I will just explain. It is not my topic, valuation. See, valuation, I was handling the valuation topic few.
No, because of composite supply.
Yeah. See, sir, assuming that your point is I am selling you the mobile and I am giving you money, right?
500 rupees.
500 rupees. So it is a part of valuation angle you are asking. Both will be considered for the purpose of valuation. You have to pay GST on both. Because consideration, if you see, we already discussed the consideration definition. It's a very good question. Consideration definition, which includes money and in value other kinds also, it will be considered as considered for the purpose of consideration definition. So assuming that it is a practical, generally if you go to purchase mobiles, you will give your old mobile for 10,000 and you will buy 50,000 rupees mobile. 40,000 you will give in cash. So the tax will be applicable on 50,000, not on 40,000. So both will be considered for the purpose of valuation. Okay. So any other doubts? We'll break for tea and we will come back after the tea break. Okay. Thank you. Shall we start? I think unless I start here, nobody will come. So whenever there's a break, I will just rush and then stand in the podium and then I will start speaking so that people will come. Any doubts? Whoever has assembled, has any doubt? Any doubts? Yeah, please. I can take 1 or 2 doubts now. Yeah.
You are referring to services from head office to branches, right?
Yes.
Where head office should render the corporate services.
Yes. Yes.
Invoice to them.
Yes.
So, and what about the counter service we receive from branch to HO? Like suppose
Yes, both.
I have one branches. I am doing my billing everything from my head office.
Yes.
So in that case, how can I bill it from branch to HO? Or what is the value?
You have to do both. So if the head office has done some services to branch and branch has done some services to head office, both has to do, they have to do the invoicing. I will just tell you one more thing. Since you asked, I will give you. See, this AR is binding only on them. I will give you, my arguments on this. First is, employees are not based on branches as per the Indian labor laws, right? Indian labor laws clearly says it is for the entity. They are not saying that it is for Chennai, it is for Bangalore, it is for other states. So that argument has some limitation also. I would put it that way. Because that being the case, what's your good name? Rajesh. That being the case, Rajesh, you just assume that CEO, CFO services. And there will be an unlimited or, it will be like unending process. The CEO services, how will you classify it? Based on turnover. CFO services based on turnover. Then here there will be like a lot of accounting people will be there. And so it's little practically little difficult. Okay, I can understand if there's a common services you are distributing, I can understand. But cross charge, as per the law it is applicable, but I am waiting for some clarification from the department side. Honestly speaking, I can put it across another view also. Because supply is applicable only if it is for the furtherance of my business, in the course of furtherance of business. See, if I am doing this, it is not in my course of furtherance of business. This is the second argument. I will give you the counter argument also what the AR said. They said, okay, it may not be for your furtherance of business or employees may not be state-wise, but they are saying that you provided some supply from branch to the head office and head office to the branch, so it is applicable. So there is a contradictory view which is prevailing. Nobody is given a concrete view on this. So only department come and clarify with the circular saying that in such situations GST shall not be applicable. Till such time, whatever you say is also correct, whatever I am saying is also correct. Okay, because it's a very highly litigation prone area where department can tomorrow definitely come and say you provided the service. There will be unending, litigations are going to come unless they clarify. They should not clarify like the few minutes back we have seen. No, they should not clarify such points, which are contradictory to the fundamental concept of GST. Because recently what happened is, insurance on vehicles, the ITC can it be availed or not? There was an FAQ which clearly says that you can avail it because only vehicles are exempted. Now one of my client got a notice saying that insurance you cannot avail input tax credit. Okay, there is a fundamental argument which you can put it across to substantiate that insurance is available. That's a different part. But FAQ itself is available. They're saying that no, that FAQ is not binding on us. Tamil Nadu state government, they took a view. So all these FAQs and things, they don't have any legal validity. On your point, there could be potential, litigation which are possible. And I'm expecting some clarification from the government so that, unnecessary litigations can be avoid it. Okay.
Even department, how do they identify when a service is rendered from
Very good question. That is what I'm saying. It is all qualitative aspects. As an auditor, you will not be able to identify. You have to sit with what we did is, let me be very honest with you, what we did is, we will keep on discussing with the client. You cannot find it from any record. We were asking, who are all filing, what are you doing, what is the entire accounting team, we were interviewing them actually on the, across the table. Then only they said we are doing accounting, we are doing tax return filing, here only we will be doing, they will be scanning the invoices there. So based on discussion we understood all these points. It's a qualitative aspect, you will not be able to identify from the records. Very difficult, only Q&A, question and answer only will help you out. I mean Q&A in the sense interview. Method of audit method which you have to implement is interview method only, otherwise you will not be able to identify. Okay. Now let's move on to the main topic. Another important topic, levy. So section 7 we are very clear about it. Section 7 we discussed all the points and we have some schedules. Schedule 1, 2, 3 and we have composite supply and mixed supply, section 8. So 7 and 8 we covered. Now we are going to 9. Section 9. See, the moment you identify it as a supply, now the levy section comes. Levy section, what it says, okay, now supply is applicable. Now come to me, I will tell you how to levy and collect the taxes. Section subject to 9.2. 9.2 says petroleum products. There shall be levied tax called CGST on intra supply of goods or services. If you go to IGST, you can see that it is interstate, except on the supply of alcoholic liquor for human consumption. So it is completely outside the GST. Value determined under section 15. There is only one section which talks about valuation, section 15, read with rule 27 to 32, 33, 34, 35, up to 35. Now, at such rates, so all your classification rate notification comes from 9.1 only, not exceeding 20%. But you can see vehicle tax rate 28%. Why? Correct. This is only they are talking about CGST. So if you look at from the overall tax liability, it would be 40%. So even tomorrow, petrol if they are bringing into the GST, they can have maximum of 40%. But please understand, there is something called cessor. Correct? So if they want to increase the rate, how do they do it? They will bring compensation cess. Vehicle, what is the maximum rate they did? 28. They brought compensation cess. So rate they can, but CGST, SGST they can take only up to 40%. Okay. Now shall be paid by the taxable person. Taxable person we have already seen. Any person who is liable to, need not be a supplier, he can be a recipient and he can be a third person also. These are the 5 products which are right now kept it outside. Petroleum crude, high speed diesel, motor spirit, that is commonly we call it as petrol, natural gas and aviation turbine fuel. See, the first fundamental question when every time when I go, wherever I go, they will ask, sir, when the petrol, diesel and all will come under GST? Why it was excluded? Please understand, GST is a landmark law in the country, having a huge expectations, huge risk which the government carried along with the implementation. Assume a moment, now it is a successful one somehow. Assume a moment, it is a flop. Assume for a moment, it is a flop. How the business will run, how the government will run its affairs. Just a moment. So government what they did, they cleverly kept these 5 items outside because this is a major revenue generation for them. Even something goes wrong in CGST, SGST, that means GST implementation, they will survive with these 5 products. For the time being, obviously there is a risk involved, but still something is better than now. Sooner or later they will notify this. There is no doubt that they will bring it because it is already levied under GST. Only because of 9.2 they are keeping it up outside. Anytime they can notify that section 9.2 is GST is applicable on 9.2 items. So levy and collection 9.3 reverse charge mechanism. There are 2 reverse charge mechanisms applicable, 9.3 and 9.4. 9.3 for specified goods and services, 9.4 for transaction with unregistered party, right? Please, I will repeat, 9.3 and 9.4 are reverse charge mechanism sections. 9.3.4 with transaction with the specified supply of goods or services, or 9.4 for the purpose of transaction with unregistered party. Now 9.3 reverse charge, under the old regime we were accustomed to RCM on services, correct? Now under GST there is an RCM on goods also. So RCM is not only on goods, on services. Even I am talking about 9.3 itself. 9.4 is a different issue altogether. 9.3 itself, it is applicable on even on goods. So there are 7 lists of goods which are being notified on this reverse charge mechanism is applicable. So look at that. It's all suppliers, agricultural, agriculturist. List I've given this list. You can go through it. This is the only 7 goods where GST is applicable on the recipient. Recipient has to discharge the liability. There are 14 services which are being notified under 9.3. 14 line items. Services being notified under 9.3. We will look into all this. We will look into major items. First, GTA services. GTA is a common service where whoever is receiving the supply, they have to discharge the liability. Only one scenario where they said no need to discharge the liability and RCM when the GTA charge you CGST at 66%. That means effectively GST at 12%. See what happened is initially, that GTA is very strong lobby. Even under the old service tax also they were exempted. Under new GST also they made a representation, they were exempted actually. Then only they found one problem in the law. Because under service tax, they were anyway not eligible to take the credit of their vehicles. Because they will be having a fleet of 100 vehicles. Just to think for a moment, 100 vehicles, how much input tax credit will be there? If I exempt it, if I say that it is taxable in reverse charge mechanism, they will not be able to take any credit. So they represented saying that no, we misunderstood it. Please make it as a taxable supply. We will charge it. We don't have any problem. We will comply with it. No problem. Then they gave 2 options. One is you charge at 5%. We will not give you input tax credit. You charge 12%. We will give you input tax credit. So they were happy. They said, okay, if I am a GTA service provider, if I am supplying some services, I have an option to charge 12% GST. That being the case, whatever input tax credit accumulated on vehicles, I will be able to utilize the credit. So it is a benefit given to the GTAs. So most of the GTAs, they are charging 12% now. Some GTAs I have seen also, because their vehicles are all old, they don't have any option to avail, they don't have any input tax credits, where they are charging, where they are not even charging, they are saying that it is taxable under reverse charge mechanism, and the other party is discharging it. So please note, GST is applicable except in cases, as a recipient, GST is on that RCM is applicable if they are not charging 12%. Please note it. If they are charging 5% also, GST reverse charge mechanism is applicable. Okay. Please ensure that unless otherwise they are charging 12%, GST and reverse charge mechanism is applicable. Now, advocates.
What is the purpose of 5%? If they are not taking,
Even I am also not very sure about why the purpose, because I have not seen any cases where they are charging 5%, because neither it is beneficial to me nor to you. 5% if I am charging you, what is the benefit to you? You will not be able to, you have to anyway discharge it under reverse charge mechanism. I have to anyway discharge it under, I will not be able to take the credit. So what you can mention is, I have seen one more invoices like this. What happened is, they mentioned GTA services, they charged 5%, they told that pay it under reverse charge mechanism. So they will collect only 1 lakh, that whatever they charged, actually that is a wrong way of representation, but still, they said no, don't pay tax to us, you pay it under reverse charge mechanism. So they clearly mentioned that RCM is payable under reverse charge mechanism. Advocate services. Advocate services, you have to be very, very careful. Why? Because there is a possibility that you may go and then interpret it wrongly, because of you cannot restrict yourself with this 9.3. You have to go a little further and then see notification 13/2017 dated 28 June 2017. What is this all about? RCM, advocate and tribunal. RCM, first one is RCM on advocates. Services provided by an individual advocate, including a senior advocate, because as per the Advocate Act, advocate and senior advocates are different. Because even I didn't know initially that what is a senior advocate. Then I will also call it as chartered accountant and senior chartered accountant. But generally it happens, senior partner, senior chartered accountant. So I thought it is initially it is only a designation kind of thing. Then when I checked with one lawyer, he told me that no, it is actually as per the Advocates Act. So firm of advocates by way of legal services directly or indirectly to any business entity. To any business entity. So any advocate services, assuming that advocate service, if they are providing to an entity, company which is registered under GST, then that party has to discharge the liability, assuming that the firm of advocates are charging 1 lakh rupees fees. Then the entity has to pay the GST on it. Now I will complicate this further. Assuming that it is a business entity, but it is not registered under GST because their turnover is less than 20 lakhs. Okay, turnover is less than 20 lakhs. We have a company like that, where it is a football company actually. I mean, it's a football club, ISL and all, right? I got surprised to see that they will get a lot of huge FDI, foreign direct investment, crores and crores and crores and crores, and the amount of rupees will come. Income side, if you see, it will be hardly in lakhs. Initially I got surprised. What are they doing actually? Basically, are they fools to bring so much of huge FDIs in crores and crores and then getting nothing on the right hand side? 3 years it was zero. I mean, almost zero. Then only I understood. All these football clubs and all, they will initially spend and they will get the support from the foreign companies also, companies and investors. But the benefit will start generating once they win the matches. The moment they win the matches and all, they will get sponsorship. Then they started generating the revenue. The players' agreement will be there. So assuming that I am having a player with, say, one player, and if he has to play with some other, a team, then they will pay me some royalty to relieve this player from my team. If you look at Neymar and all, they paid huge amount to the other team. I mean, to the other football team. In our case, it's not in that big. But I started realizing this. One football goalkeeper, he was borrowed by another team actually. So then only I understand, okay, this is also another way of generating the revenue. But it was in lakhs, not in crores. But he said, more and more we play, more and more we win, the credibility will go and then our brand name will go up. We can sell the players or hire, lend the players for matches. I can sell my apparels, the clothes, jerseys, all these things I can sell it, my footballs, etc. And I will also get revenue out of advertisements in my jerseys. So these are all the revenue which they are expecting. So what happens is, initially it was zero. So this company, what happened is, when they are entering into a contract with the players, the agreements are being drafted by the advocates. So the advocate did the contract and they sent it to us, and then we verified the GST clauses, everything, we gave a clearance. And finally, the director called me, he's also a football coach. So he asked me, because why I'm giving the example is, it is very, very good for you to understand, connect two things. I'll give you one more aspect of reverse charge mechanism in the same football club. So the advocates raised an invoice. So for example, 5 lakhs they raised invoice. Question is RCM applicable or not? If yes, under section 24, it clearly says you have to get it registered. Then these people will be with a huge cash outflow. What happens? Initially they had reverse charge mechanism. They have only expense. Monthly expense would be like 30 lakhs, 40 lakhs. That will be the spending which they will do. Players will travel, they will stay in 5-star hotels, their accommodation, food itself is a huge bill. And hiring the ground hire rentals. So all these things, we realized that the moment you get it registered, outward liability will not be there. Because of RCM, your huge cash flow will get blocked. So we have gone to the provision, we have seen the provision. That time, we found that there is an exemption notification under notification number 13/2017, which says if the advocates are providing any services to an individual, or if a senior advocate is providing a services to another advocates or partnership firm of advocates, or advocates they are providing services to a business entity, their turnover is less than 20 lakh or 10 lakh as the case may be, it is exempted. That being the case, exempted supply, there is no reverse charge. So in such situations, they don't have to get it registered. Reason being, reverse charge mechanism is not at all applicable because the supply itself is exempted. Reverse charge mechanism, levy will come only if it is taxable. Exemption come, then there is no reverse charge mechanism. But that is not the case in all other reverse charge mechanism. GT and all, there is no such exemptions. So you have to be very, very careful. So advocates, there is no ambiguity, right? You have advocates providing services to business entity less than 20 lakhs or more than 20 lakhs. More than 20 lakhs means they would have already registered. So reverse charge mechanism. Because RCM is there for advocates, you don't have to get it registered. That's the only point I would like to make. Arbitral tribunal. Supplied by arbitral tribunal. I'll move on to the next one. Sponsorship services. See, what happened is our client has given us sponsorship services to IIM Bangalore. So he was an alumni of IIM Bangalore. So he provided some sponsorship services for some programs which was happening in IIM Bangalore. So the question is, he paid some say 5 lakhs or something and he kept quiet. Obviously I paid the sponsorship, what is the big deal in it? No, if there is a sponsorship, you have to pay 18% on that 5 lakhs. So that is also another additional cash flow which they have to shell it out. The problem is, he came to know only after 3 months. Because of that, there was an interest liability, but fortunately he came to know. And then we discharged that liability. So reverse charge mechanism will be applicable for sponsorship services. Directors. This is what I said, that football club. This man is a football player, and he is the director of the company and he is the coach of the company, of the team. He is coaching the team for his own team. Some state teams are also inviting me, that is a different issue. But assume a scenario, he is drawing a salary. He is drawing a salary of 1 crore per annum he is drawing. Over and above, he is getting coaching fees. As a coach, in the capacity of coach, he is getting some amount. Now the point is, salary, it is out of employment contract, it is signed by the company and directors. Second is, in his capacity as a coach, he is getting another 2 lakhs per month, over and above his salary. So it is around 25 lakhs, 24-25 lakhs he is getting, and over and above. See, this is something like, if you are winning the remuneration will be like this. Coach fees, if you are winning the match, there will be certain percentage over it, over and above what is committed. If there are 1 goal, 2 goal, 3 goal, 4 goal, 5 goals, each goal there is an incentive actually. I didn't know all this. Now generally when we watch cricket match and football, we'll watch it, okay, 3 goals, okay, over. Now I understand, each goal there will be an incentive to the coach and then the team members. And if they win, that will be doubled. So like that, there are some incentive agreement which they are signing. So whatever he is getting as a coach in his capacity as coach, that will come under reverse charge mechanism. Why? Because he is a director and he is providing services to the company in his professional capacity. Say for example, I am a chartered accountant, I am providing some litigation, I am a director of a company, and I am being paid sitting fees, that's all. After some time in the board meeting, they are saying that, Rajiv, there is a litigation issue, GST issue, why don't you take up this case? Then I will, being a person, I have an option. I am assuming that I am a director. What I will do, I can provide the service in my individual capacity. I will provide it in my individual capacity. That being the case, the company has to pay it under reverse charge mechanism. Now the question comes, assume a scenario if my firm is providing the service, then not the director is providing, director's firm is providing, that is entirely different. Assuming that my firm is providing, forward charge only. If I am a director in my individual capacity I am providing, it is a reverse charge as a director. Then RCM government services, I'm just moving on, supplied by central government, state government and all, but here also you have to see one important point. Up to 5,000 rupees it is exempted. Any services provided by central government to state government, up to 5,000 exempted. And insurance agent and recovery agent supplies services supplied by an insurance agent to any person carrying insurance business. So for example, you know that LIC agents and all, right? They will be providing services to the LIC. So LIC, the government says, LIC, you pay the tax. You pay it under reverse charge mechanism, because I cannot go and then catch all the agents, because they are all small players. I cannot go behind them. So this is that example. And you have services supplied by recovery agent to a banking company. Recovery agents will be there. This is most important. RCM, today I am just going through this provision actually, because one client has come. He is an author of a book. He is an author of a book. He is selling his copyright. He is giving his copyright to a trust, which objective of the trust is actually education. The objective of that trust is education, because trust is our client. Now he would like to buy that book and then publish it. You know that all the books will be published by the publisher, say for example Taxman or whoever it may be. There are two things. One is I can engage him for writing the book and then pay him the what is his consideration is all about, and he will not be having any copyright. Correct? See for example, if you look at the companies and all, say for example you take Intel. Intel, what they do, they have a research team. Whatever they are developing out of their office, the copyright will be with Intel only, not with the employees. Assuming that an employee in his individual capacity, not using any of the facilities, developed a product, and then copyright is, assuming that the patent is with him, then he can sell it. Correct? There are two ways. So author, I can engage. Some of the publishers, what they do, they will engage some authors, ask them to write the books. Here the case, typical case is that person in his individual capacity has written the books, completed it. Now he is giving the copyright to the trust. Now the trust has to discharge the liability, because what? It clearly says author, music composer, photographer, artist, the like, because these are all people, they don't understand GST law. I have in my office there is an artist actually. And his friends are also become our client. He came and asked me, the pictures are all costing like 20 lakhs, 30 lakhs and all. I got astonished by hearing the rate. One artist passed away actually. That rate has gone up like anything, because they are saying that there is a limited edition. These pictures cannot be reproduced. See, Raja Ravi Verma picture is having a huge value. Maybe one or two will be there. Like that, these people are all very famous. So they came to me and said, Rajiv, I'm just selling the photographs. I said fine. I thought it will be hardly 10 rupees, 100 rupees, 200 rupees, 300 rupees, like that. But actually it was in lakhs. So then only I understand. Okay, no, you don't have to discharge your liability. They don't generally understand tax laws. They heard GST and then came to us. I asked him also. They presented some photographs to our office also. If you look at the photo, you understand nothing. Literally speaking, you understand nothing. I asked him one day, he presented one photo to me, and it was there in my room, and I daily when I come I see the picture, because it is a beautiful picture. I understand nothing out of it. Then one day it looks like a pune, cat actually. And one day he came, and then I asked him, sir, what is this all about? He said, it's a pregnant lady having holding a baby in her hand. I understood nothing out of it, because my intention is ended. The way we look at it is entirely different. When he explained all the things, only you can understand. Oh, in the mother in Yosikalan, so it is entirely view they are having. So because we are not that experts in interpreting and all, we will feel that it is a waste of money spending for this. But there are people who are appreciating it and selling it. So in such cases, whoever is purchasing this their artistic work, they will be liable to pay GST. Now look at this. You can see singers and all, they will be giving their right. So all these individuals, it is very difficult to bring them in under GST regime. So they said whoever is the publisher, music company, producer and the like, liable to pay GST under 9.3. Now Reserve Bank, so I'm just skipping that Reserve Bank, RCM, DSN, business facilitator, these are all applicable. See, for example, in villages and all, the SBI will have an agent. That means, direct selling agents and all will be there. Business correspondent, they use the word. Sometimes business correspondents, SBI will give an authorization to run for up to 2,000 rupees. You can collect it in that particular branch. It's not a branch. I'll have my office and I can collect up to 2,000 rupees and I can facilitate for account opening, all the services. So these are all people where the reverse charge mechanism will be applicable on SBI, not on these people. Now,
Post office agents are also covered.
Post office, no. I think this is talking only about the business correspondent. If you call yourself as a business correspondent, then it is applicable. See, you look at this. Services provided by an agent of business correspondent to business correspondent. Okay. And here you can see on the bottom, security services, I missed, sorry. Yeah. Direct selling agent to other body corporate, PF or LLP or bank or NBFCs. So if you are calling yourself as a direct selling agent, then only body corporate, yes, probably it would be a body corporate. You are talking about the post office. Are they direct selling agent? Because I just wanted to classify first whether they are direct selling agent or business correspondent. You just look into it. If you are calling them as a business direct selling agent, because I don't know what is exact facts.
No, I think
then
you are aware that the post office has various licensed agents.
Okay.
Who will collect the
collection
RDs,
agents?
RDs,
Mobilized deposits.
Mobilized deposits, and they get their percent.
Then it will be reverse charge mechanism only, RCM only. They will not be applicable. It will not be applicable to them. Now you look at this important point: security services. Security services. What happens is it is very recently added on 31st of December. Security services. Be very, very careful. Provided by way of supply of security personnel, provided to a registered person. So it is applicable only if it is provided to a registered person. Provided nothing contained in the entry shall be applicable to Department of Establishment of Central Government, State Government, you leave that. Second one, provided to personnel, provided that nothing under this entry shall applicable Department, Establishment of Central Government, State Government or Union Territory. B, local authority. See, government agencies which have taken registration under CGST only for the purpose of 51. That is for TDS and TCS. 51 is for TCS. And not making a taxable supply of goods or services. And 2 is a registered person paying tax under composition levy. Now I think it is somewhere any person other than supplier. So because I was looking for that particular word actually, because that's a key of this particular discussion. Any person other than a body corporate. Then only it is applicable. Say for example, security services are provided by ABC Private Limited. No reverse charge mechanism. It's a body corporate. If the same security services are being provided by a partnership firm or an individual, which is not a body corporate, that being the case, reverse charge mechanism will be applicable. Assuming that I am in my individual capacity supplying some security, providing some security services, then the recipient shall be liable to discharge GST under 9(3). If I am a private limited company, then reverse charge mechanism will not be applicable because forward charge will be applicable. Okay. 9(4). 9(4) says. Sorry?
Who is liable to be registered as per the card?
No, registered person means registered person.
Suppose I am receiving the service.
Yeah.
My threshold is below limit.
Correct, perfect.
So whether I am a registered person or...
No, you are not a registered person. That is why it is very clearly used the word. You have to be very, very careful when you read the law because it clearly says provided to a registered person. Had they used the word taxable person, you are right. You are right. If you are using the word taxable person, then you should have got it registered and discharge your liability. Here they are using word registered person. Registered person means what? Registered under this act. So have you registered? No. If you have registered, then it is applicable. If you have not registered, you don't have to register because of this particular reverse charge mechanism. Because they are using word to a registered person.
Sir, if you
Yeah.
supplier is LLP,
Is it a body corporate? Is it a body corporate? LLP, is it a body corporate? You have to answer me. Huh? No. Companies Act. Companies Act. Yeah, help me out. See, it is not, because as per the Companies Act, they are defining the word body corporate. Body corporate means companies which are incorporated under this act and including foreign company. That is the definition of body corporate as per the Companies Act. So LLP is not. Levy and collection 9.4. 9.4 was an excellent concept actually. I would put it this way: had it been implemented, our economy would have gone like anything. GDP percentage would have gone up by 2%. That is what they are initially targeted. It would have definitely gone up. But what happened? There are a lot of practical difficulties when they introduced, but they didn't implement it properly. Had they implemented, it would have been a big success and then it would have been a big impact. Look at this. They said any registered person transacting with an unregistered person, the unregistered person has to discharge the liability under 9.4. Now what happens is, this was introduced in 1st July. On 13th November onwards, October onwards, 13th October onwards, there was a notification which said, no, here onwards it is not applicable. So any transaction between 1st July to 12th of October, RCM under 9.4 is applicable. There are some people who are saying that no, notification has come, so it should be read retrospective. No, where is the retrospective? That notification is prospective. So up to 5,000, there is a notification subsequently came and said, no, up to 5,000, no need. Okay, per day, entire all unregistered party transaction put together. I could see a lot of funny aspects also. What happened? Initially when they said introduce this, there was a rental agreement. Rental agreement was for 15,000. They redrafted the agreement in such a manner that it is weekly rental. So 15, assuming for it is 20, they made it in such a manner that 5,000, 5,000, 5,000, 5,000. This is the rental agreement. So people started doing restructuring in such a manner that reverse charge mechanism is not applicable. And the funny part is they started booking expense on Sundays also.
LP is a different one, no services.
Services? No, I am talking about registered 9.4 where both goods and services are applicable. 9.4, I came to 9.4 now. In 9.3 also it is notified there, goods also there, but here service is also there. So they've started restructuring in left to right. They started doing this. But finally, even booking Sundays, the calculation how they do. When I said that this is applicable, one person said, sir, 5,000 into 1.5 lakhs. I think it's 1.5 lakhs, right?
Yes,
It's 1.5 lakhs. He said that every month 1.5 lakhs into 12, it is actually how much?
18 lakhs.
18 lakhs. 18 lakhs per annum. Huh? Sir. So they started booking every day. Sunday also they started booking, left to right books. So whenever they introduce something, we will also see some sort of exemptions, how to overcome this. But finally, why it has become a failure? It's mainly because, first point is, government is saying that, boss, they are not liable, you are liable. He's making me liable. So what is my responsibility? I have to find out whether it is a supply, I have to find out whether it is what is the place of supply, value of supply, time of supply, rate of supply. Most important is rate. We are finding it very difficult to design our own products classification. Now they are saying, you do it anything under the sky. Assuming you buy a water bottle, you go and then find out what is the rate. Assuming that I am buying a pencil, they are saying that go and identify the rate. It's become a big issue. I've seen in one case where they said nothing doing. Actually, it's happened. It's a construction company. What they did is they took 18% standard. 18% standard they started applying. What? True, no?
I myself have done that.
So it's true that it's very difficult. In construction, you don't know the kind of inputs which will come into you. 3,000 invoices per month. Can you sit and identify? They would have mentioned, screwdriver. They would have mentioned this spare parts, that spare parts. First of all, that invoice description itself is not correct or clear to identify HSN. So what you do? They will take 18%. They will take the credit. They will take. Now, when we started looking into it, we said, boss, this will not work out. 9.4 clearly says, because we cannot move away from the act, right? Then he said, you give me the solution. You give me the solution. Then finally what we did is we asked them to prepare a standard list of inputs for the construction. It was going like anything. Now that became a headache for us. Now to identify from that list, it would be another exercise has to be done. So this has become like a mad, where not possible to identify. You look at your own product. Somebody in the middle of the meeting, somebody asked me, I think Manoj sir asked me, he asked me that, I have a classification issue. Probably he will be having 10 products or 20 products. They are having classification issue. Now we are talking about anything under the sky. So, not possible.
Now if the employees are traveling, if they are using the services of the unregistered dealer, car hire, now whether the RCM would be applicable?
No, car hire charges, see that anyway kept it outside. Now, that provision is exempt, not applicable. Okay, now the new provision will be applicable. Now to answer your question, if they are unregistered, definitely yes. Unless otherwise it is exempted. If it is exempted by way of notification 13/2017.
If the employee is claiming it as a reimbursement from the company?
Yeah. Okay. If they are claiming it as if it is a reimbursement, actually the service provider is the car, that person, and recipient is the employer. So employer is liable to pay GST under reverse charge mechanism. I'll tell you what happens in the industry is, you will have 28 or 18 branches. Construction industry and all, they will have 18 branches. Wherever there is a site, there will. People will travel left and right. From this branch, that branch, that branch. What they will do, from Chennai if they are traveling, for that particular project, they will give this GST number. They will charge SGST, CGST, these people will not be able to take the credit. Literally speaking, when it's introduced, for one construction company, we introduced a method. When I talked initially, it was a funny aspect. They also, laughed at me actually. I told, along with your, card, visiting card, you should also issue a card with all GST number of the states. And then, if you are going for particular business purpose for that particular business, you have to give that GST number. Initially, when they said, they smiled at me and then laughed at me, and then finally they realized that they started losing input tax credit. They printed it and then they started distributing. Two reasons. One, started losing the input tax credit. Second is, wherever the employees are going, they are calling the accounts team and asking for the GST. Their job is only customer care executive. GST number of Pune, GST number of Maharashtra, GST number of Bangalore, GST. They will frequently started calling. This became an issue. So they finally print. When I went there again, they gave me that copy also. They said, you are right. So sometime when we give some advices, looked simple, but now what they did is, I also gave a video conferencing training there actually. There, all people from across the country, they all joined. I told that, this has to be shown, this is how it has to be dealt with. So they started implementing. Now, see, look at that those companies, turnover will be in crores. Even if it is a small one, input tax credit, if there is a blockage, gone. Their profit margin would be hardly 10% or 20%. It's a specialized construction company, so 20% is their margin. So that being the case, if they started losing this input tax credit 18%, they will end up in loss. Very, very important point. Now, 9.4 amendment has come. What is amendment? They understood. They started postponing for 3 months. Finally, they said, no further postponement. We will give you the amended one. They said, the central government on recommendation of the council by notify specify a class of registered person. So it's not for all registered person. I will specify the registered person in respect of specified categories of goods or services or both from unregistered person. So two things, specified supplier. So I am a supplier. If I am a supplier, if I am being notified, then that will be applicable. Say for example, they can go two ways. One is person wise, second is goods or service wise. Say for example, they are saying that laptops alone RCM is applicable. Okay, they've not yet notified, but I'm just saying laptops alone RCM is applicable under 9.4. This is one scenario. Any services provided by construction companies, this is another way of notifying. So that is what first they said, specific class of registered person. They can say, they can go anyway. They can say the class of registered person whose turnover is more than 1,000 crores only, this is applicable. They can go and say only products like laptops are only applicable under 9.4. So the notification we have to wait and watch. So not yet come, but this is how they amended it. Now it's not applicable to all transactions between registered and unregistered. Because unregistered parties started losing the business actually typically. Because in some companies what they did, they've, to be very honest, no offense to SME industries where I am also one of the advisors to SME sectors, but still in one company I was compelled to say to the company that, don't transact with unregistered parties, because they started going mad to find out the classification. They made left and right mistakes. Then I said, it is very difficult, sir. Please transact only with a registered party. Get the registration number, otherwise don't register it. In the SME sector also I went and told, you get it registered, otherwise you will start losing this business. Because we have to be in both sides. So now, there's some clarity. Yeah.
From when it is applicable? From 1st February?
1st February. Yeah. Till such time that was, anyway it was postponed. Na? Up to June, up to September it was postponed. So anyway it is not applicable from 13th October till date. Now anyway that amendment has also come, this is applicable now. But they have not notified that registered persons. So still, as long as it is notified, that is not applicable. So there are some notification on RCM 9.4, you can go through it. This I already explained, ECU and levy and collection. Transport, that means the third party has to collect and remit. Overall this, transportation of passengers, this we already discussed in the first slide itself. Transportation of passengers, then accommodation services, then housekeeping services like plumbing and carpenting, etc. And so this we have already discussed. Okay, so levy is done. So let's recollect what we have discussed now. 9.1 is the main section, right, which has the power to notify all the rate notifications under GST. They are saying it should not be more than 20% CGST. They are saying that it should be charged and collected, everything they are saying in 9.1. 9.2 they are saying petrol and petroleum products GST will be applicable as soon as when we notify. 9.3 reverse on specified. 9.4 reverse charge on registered party. 9.5 e-commerce operator, where e-commerce operator will be held liable for levy and collection. Is this clear? Clear? 9.1, 2, 3, 4. We already discussed 7.1, 2, 3. That is over with the schedule 1, 2, 3. Now 7.1, 2, 3. Sorry, 9.1, 2, 3, 4, 5 being done. Now we will move on to the time of supply. Any doubts in levy? Any doubts? And then the printed version, see, to be very honest, that was a presentation which I prepared for the last seminar. I think somewhere in January I prepared it, and then I didn't get the the extra notes which are being given, no sir. That is my presentation. The other one is not mine. So that I didn't get the time till Sunday because I held up with some other work. So I couldn't update it. There will be small here and there mistakes, correction which are required based on the CGST Amendment Act. Because it was in January, so I didn't make amendment there. I fairly remember that where I made the changes. because it's not big changes, small one here and there. So be careful while you are using this. Always refer to the section also. You can see that the typical litigation practice people, they start with their thing with a disclaimer, big disclaimer. Okay, you take this opinion, take this, but we are not held responsible. How do we give opinion? All of you are chartered accountants, right? So we can openly discuss this. How do we give opinions? When somebody comes to our opinion, I think it is being recorded. See, the fundamental concept of opinion is you should not open your mouth. Fundamental thing. They are coming to you and asking you, is it taxable? We'll say that section this says this, rule says this, notification says this, circular says this, AR ruling says this. Everybody is saying like this. So I feel that this is the point. So we will give our opinion one line, that's all. And we will also disclaimer, alternative views can also be seen in that particular opinion. So what we do in opinion, we write all the notification, circular, everything we will quote, and finally we will mention AR rulings, court judgment, Supreme Court judgments, High Court judgment, everything we will give, and finally we will give our opinion in one line, and we'll say that alternative view can be emerged, and we will also say if there is a change in the facts and circumstances, again this opinion can go wrong, alternative views can be emerged. We will charge 1 lakh rupee for that opinion, that's all. So basically what we are doing in an opinion, we are just collecting. See, giving an opinion is very, very important, but though I mocked the other side of it, but you should know what are all the notification, circular, case laws to be mentioned in that particular question. So that is very, very important. That is why they are coming to us. They also know that we will give one line opinion only. So let's come to the time of supply. So we covered supply, we covered levy, and now we are coming to cover time of supply. See, there are two things. We have goods, we have service. So time of supply of goods, first we will deal section 12. Section 12 talks about it, and section 13 talks about time of supply of service. So just to recollect, you can understand that section 7 talks about supply, 8 talks about composite and mixed supply, 9 talks about levy, 10 talks about composition levy, 11 talks about exemption. Composition levy will be handled separately, that is why I am not handling. 11, exemption notification can be given in that particular section. 12, time of supply of goods. 13, time of supply of service. It's very easy to recollect all the section numbers. So let's understand what is the time of supply of goods. Time of supply of goods, section 12.1 says the liability to pay tax on goods shall arise at the time of supply. So what is time of supply says? Your liability to pay tax, I will tell you when you have to pay to the government. Very simple. In a common man's language, it's very simple that I will tell you if you are supplying goods when you have to pay to the government. Now this is one small amendment I made, means this is an amendment which has come. They made a blunder when they drafted. See, in the CGST Act, almost when we initially drafted, I personally come across around, I'm not looking into the institute thing, personally I come across around 325 or 324 mistakes in the CGST Act. Would you believe it? Either because of the problem in the Act, the way they are drafted, second, the way it is implementation issues. So we also prepared a lot of document in this regard and submitted to the concerned authorities in our individual capacity. So one point is this. Why we come across all this point? Initially itself we got into this. See, time of supply of goods. They are saying date of invoice or last date on which he is required to issue an invoice under section 31.1. 31.1 talks only about normal supply of goods. They are not talking about continuous supply of goods. Same problem in service also. Construction industries, they all faced the problem. Major impact of 13 subsection 2 is construction industries. they are doing dam construction, etc., etc. I will come to that and then I will explain. See here, you look at a date of invoice or last date on which he is required to issue invoice under section 31(1). So date of invoice is available, or that means you can there is a act which clearly says, section 31 clearly says when you have to raise an invoice. So you have to read 31. Previously it was 31(1). Now they removed it. 1 they removed it. So now 31, entire 31, it will be applicable. Date on which the supplier receives the payment. This is the initial one. Okay. What happened is supply of goods, the time of supply. Now we will come to the discussion. Now time of supply for goods is date of invoice or date of the date on which he is liable to be required to be raised an invoice under section 31. That they are saying before removal of goods you have to raise an invoice. Now another point is, if you are receiving the payment in advance, it's basically advance payment, then that date will be considered for the purpose of time of supply. Now assuming that I am supplying laptops, okay, I am in the business of supplying laptops. I received advance. Say for example, I received advance to the tune of 1 crore. Now I have to discharge my liability. Government is saying you received advance, discharge the liability, because whichever is earlier, I have not raised my invoice, I am not liable to be raised invoice under section 31, but I received the payment. Now two things, there is a practical difficulty also involved in it. Why? Plenty of, so for example, if I am receiving 1 crore, first point, what is the goods which I am going to supply? I don't know. Sometime I may not be knowing it. I will just get a random advance. Second is whether I should consider it as an intrastate or interstate. All these were an issue, and in the rules they said no. If you don't know the rate, no problem, you take 18%. Sir, here they mentioned in the rule 18%, but under 9(4) they didn't mention that standard you take 18%. Okay, but here they mentioned 18%. And second point, they said if you don't know the nature of supply, you consider it as an intrastate supply. Okay. Now, see, these two notifications you should be careful. This notification says 40/2017, 13th October, they said if you receive the advance, the time of supply for such receipt of advance is only for the specified categories only, you have to pay the GST. That means time of supply, they are saying if you are receiving advance, I will not be considered as a payment received. So you can pay the GST later point of time. But with the specified condition, your registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores. So only for the specified category. But subsequently, 66/2017 dated 15th January, they said no, it is applicable to everyone. So as on date, if you stand, your GST liability under section 12(2) shall be applicable only based on your invoice date or invoice which is supposed to be raised based on section 31. Okay, not based on payment. That means not based on the receipt. Correct? Now 66. We already discussed this. Now I have a point here. See, whenever we get some good notification, we always be happy with it. See, let me tell you honestly, these two notifications do not have the legal validity. If I say something like this, people will shout at me. What are you talking about? Already they issued a notification. Why are you saying that it is not valid? If I want to challenge this notification, I can very well challenge this notification. Why? These two notifications are issued under section 148. We should be always very careful from where these notifications are being issued. 12 and 13 doesn't give any power to issue notification with respect to moving the liability from one date to another date. This issued under 148. That is, they are saying government has the power to issue notification, removing difficulties and all for the procedural aspect with respect to time of supply. Is it a procedural aspect? It's actually a statute. It's not a procedural thing. It's actually a statutory thing. Statute. It's actually written by the parliament. You cannot change it by way of notification. Since it is happy, it's favorable because we are all enjoying. Nobody is going to question this notification right now. Okay, but some people will be there, they wanted to become famous. Assuming that I want to become famous in GST, I will go and file a writ petition in the Madras High Court. I will challenge that. Where is it mentioned that it is given that advance payment you can extend or you can postpone your liability? No. 148, this is being discussed. I thought, because when we discuss all this challenging the fundamental thing, nobody will accept it. Now when I say that, everybody will say that no, this is not correct. So even I had a discussion with, we have a Supreme Court advocate also, very senior advocate. So we always discuss with him. He is very approachable, so he always discuss, we always discuss these issues with him. So I told my point also, he also gone through it and then said, yeah, you are right. So because the thing is, sometimes, lawyers would be better, that Supreme Court advocates are better in interpreting this, because they don't generally go with your act. They will fundamentally they will go with the constitution and will say that, hey, your point itself is not valid. There was a case actually, all of you would be also facing, so I will just mention this. There was a case, Arise India Private Limited. This case, what happened is, it was happened in Delhi. The fundamental concept is, in Delhi, if you want to take the input tax credit, the other person has to pay, and then only you will be able to take the input. It's the same as that of GST. Now what happened? The other party has not paid. This party has taken the credit. Arise India has taken the credit. Now the case have gone to Delhi High Court. Delhi High Court said it was not challenged under the provision. It was challenged under the GST, in the constitution. They said Article 14 clearly says you cannot classify both defaulting purchaser and then genuine purchaser as equal, because it's a fundamental concept that equality. So you are putting a thief and a genuine person into one category. It is fundamentally wrong. So that VAT Act, under Delhi VAT Act, that provision itself is not valid. That is the challenge which they did. They won the case actually in the Delhi High Court. They went to Supreme Court. At that time, the retired Justice Chalameshwar was the Supreme Court judge. It went to him. He said, yeah, Delhi High Court is correct. Now what I can do? I can also challenge the same provision, electronic credit ledger, 2A is not matching. I have taken the credit. I can use the same case law. So because I was not very comfortable with the Delhi VAT, so even I had a discussion with the Vimal Jain also. So somebody mentioned Vimal Jain's name. So when he came down to Chennai last time, I discussed with him. He said, yeah, this is, it can be challenged. So the issue is let the points come up. Now we are going with a conservative view, right? Okay, let's reconcile with 2A. It will be a never-ending process. And one particular point of time, the disallowance from the department will be huge in crores. At that time, we will go and then go with the aggressive view, saying that GST itself is not correct. Fundamental GST itself, the provisions itself, 16 itself is not valid. That would be the litigation aspect which we are going to put it across. Okay, I'm not supposed to disclose, but let me tell you, there is a financial wing for the Intelligence Bureau. Okay. Personally, they approached me. Okay, because it's not like that kind of IB. IB is very, very confidential. They approached me, asked me, after the GST introduction, would you like to say something on, give me a list of items where the government will have a problem tomorrow, because the election, everything is going to come. So people will keep on saying that government has not done, so the duty of Intelligence Bureau is collect information from the market who knows the subject and give the report to the government. So they personally approached me and told that these are all the things and what do you feel. So I gave my points, whatever points officially I gave it, and I think I don't know, after that they will not be giving any feedback like sir they will not be in uniform. You don't know from where they are coming, where they are going. They don't have a fixed place of business, office. They will get the salary directly into their bank account. They don't know who is their boss, who is their subordinate. There is nothing like that. It was very fun actually. Seeing them, they will be suddenly will be coming and suddenly vanishing. All the informers will get money in cash. Will you believe it? IB will pay in cash. They will not give any check and all. That too, they will be giving a particular fund. Say for example, 20,000 is your limit. You can pay 5,000 to all the informers. Political parties and all, they are all having informers actually. So who are all going to come for a discussion in DMK office? They know. There will be insider inside. He will be getting 3,000, 5,000 per month. That they will get information, and then it's a very, very interesting aspect actually. So they came to us and then told us. So we gave these issues. What are all the issues which can pop up. So I said, this is one of the aspects which I gave it to them. One of the aspects. Told that fundamentally your backbone will be broken tomorrow, and then now nobody will come. Then he asked me, what is the problem now? Nobody is filing a case. I said, why do I file a case? I have time now. 31st March. It's extended to 31st March. They extended, so they will not come. Nobody will come. Everybody will try to close it at their end. If it is not possible, then only they will come and attack you. So don't tell anyone that all these stories. It's only in between the room actually. Okay. So some coordination with the government or some agencies and all. It's only between us. Nothing to do with outside. Okay. And tax invoices. So when you have to raise a tax invoice, before or at the time of removal of goods, if you are removing the goods from your factory to another place, you have to raise an invoice. So sometimes removal will not be there. Say for example, say you think of a generator, which is a movable thing. Assuming that I am selling a generator which is there in Tidal Park, there will not be movement of goods. Say for example, I am in Chennai, I am selling that generator to a party in Bangalore. So what happens? Though party is outside, as per place of supply, if there is no removal, where the location of the goods which is located, that is in Tidal Park, place of supply shall be Chennai only, and there is no movement of goods. See, I am taking the ownership, that's all, but I am not moving that goods. In such cases, when you are making that goods available to the other party, that date will be the time of supply. You can go through section 31. Previously it was only 31.1, you have to go through 31, entire 31, then only you will be able to appreciate this. Because 31.1, 31.2, 31.3 talks about reverse charge mechanism and all. And this we already discussed. Time of supply in case of reverse charge. So assuming that reverse charge mechanism is applicable under supply of goods, where reverse charge mechanism is applicable, it says the date of receipt of goods, the date of payment as entered in the books of accounts, whichever is earlier. Now that you have to remove it because what happened? Advance, it is exempted. So there will be some sort of application of mind which you have to do it here, because it's not a straightforward thing. I'll make it very simple for you, then we will go ahead. I think if we discuss the provision, then you may not be able to appreciate it. First 12.1 says, so let's understand how the sections are being structured. 12.1 says, time of supply of goods means that time only you have to pay the GST to the department or to the government. 2 says forward charge. 3 says reverse charge mechanism. 4 says vouchers. 5 says residual method. I'll repeat. 1, they are generally saying that time of supply means what? When you have to discharge your liability. 2 means what? Forward charge. 3, reverse charge. 4, vouchers. 5, residual method. That is what the problem was for all the construction industries. 1, not applicable. 2, forward charge. Forward charge, I'm just coming to the issue, so you will be able to appreciate it only when you look into the provision correctly. Yeah. See here you can see time of supply of goods shall be the earlier of the following date, namely the date of issue of invoice by the supplier or the last date on which he is required to raise under section 31.1. Now they removed 1. That means you have to read the entire 31 to identify what is the time of supply of goods. Okay. Now, vouchers, I am just skipping it. For reverse charge mechanism, you can look into this presentation. Date of receipt of goods. So we discussed the forward charge. Now let's look at the reverse charge. Date of receipt of goods, date of issue of invoice or any other document by supplier. See, look at this, very, very important. This is very, very important. Why? When you talk about reverse charge mechanism, there is another issue which is also, this is also one of my issues actually. See, receipt of goods, they are saying date of issue of invoice and any other document by the supplier, date of issue of that invoice. Assuming that he issued the document, which is not a GST invoice, normal invoice, he kept it at his office, he didn't send it to me. Just think a scenario, date of invoice, date of sending or date of receipt of invoice, they're using the word date of issue of invoice. What is date of issue of invoice? That document date. I issued it and kept it at my office. After 3 months or 4 months later, I'm just sending that invoice to the party. Now, how do you find out the date of issue when he issues it and keep it at his office? Difficult, practically not possible. Date of payment entered in books or debit note in bank statement, debit in the bank statement, whichever is earlier. Assuming that you received the payment, you made the payment against that particular reverse charge mechanism. Then that date. If could not find the time of supply based on above, date of entry in books of accounts. If you cannot find out his invoice date or receipt date, then you book it based on your books of entry. Books of account, when you are entering, that is the date. Here I would like to mention one more important thing. Reverse charge mechanism, everybody is doing. Most of the people are doing. Some people are only ignorant about it. Please look at the documentation in this regard. As per rule 53, you have to, as per rule 46, you have to issue a reverse charge mechanism invoice on, and 52, there is something called payment voucher that has to be prepared. How many of our clients are doing this documentation? Tomorrow, if the department comes for the audit, they will ask for this. Definitely this will be asked. Nobody is doing it. I'm not generalizing, but most of the people are not doing it. Reverse charge mechanism means there are 2 documents which are required. RCM invoice under rule 46 of the CGST Act, CGST rules, and 52, rule 52 says payment voucher. These 2 documents must be ensured. They will say that that is not required, we discharge the liability. That is okay. Procedural lapses are there. The department can impose penalty for the procedural lapses. Now, time of supply of residual method. That means in case you cannot find out any issues, any time of supply for the goods, then you come to the periodical return date, when that has to be filed, or date on which such return is to be filed. So you find out the return date, or you can go to the tax paid date. Okay, in our case most of the things and it's paid through 3B only, right? So both will always fall into the same thing. Now, time of supply for this is a big relief from the department side. Time of supply for interest or late fee or penalty. You can see that section 15 of the CGST Act, for the valuation purpose, they are saying value includes any interest, penalty or fees which are required collected from the party. Say for example, I am raising an invoice today. I will mention a clause that if you don't pay within 30 days, I will charge you 18% interest. Correct? Generally, it is a market practice, industry practice. Now what happens? Most of the case it will be there in the invoice only. It will not be implemented, right? Assume a scenario where everything is based on accrual. The moment you issue that invoice, that interest will get accrued, right? So for example, I am getting the payment after 1 year. The amount is 1 crore. 1 crore is the amount, and they have not paid 1 crore. 18% is how much? 18 lakhs. So I may have to pay GST on accrual basis. This is the only place under GST where they said no need to pay based on accrual, pay based on collection. Though you have mentioned in the invoice, it is started accruing, you may not collect it. So government said you can pay based on the collection. Okay, so this is the only time of supply where the only place where the government said collection basis you can discharge your liability. Otherwise, everything is accrual basis only, right? Because if you want your own wish, you can do discharge your liability in advance. But government says you need to discharge only based on collection. Now, time of supply of service. Time of supply of service, liability to pay tax on services. Please understand that advance collected is exempted only for the purpose of goods, not for the services. Please understand, not for the services. Raman, 5 minutes.
No problem. Yeah, please.
And the date of issue of invoice, if the invoice is issued within the period of 31/2 or date of receipt of payment, whichever is earlier. So they have given so basically what they are saying, I'll just summarize it. For the services, it's very important. Assuming that you are raising an invoice today, okay, assuming that you are raising an invoice today and you collected the payment later, your time of supply of service shall be that invoice date. Okay, invoice you can raise it in 2 ways. Within the due date, because they have given a period from the 30 days from the date of completion of service. So if you are, Murli sir, 5 minutes, I'll just finish off. Okay, so if you are raising your invoice within the prescribed 30 days, I'll give an example. Balance sheet we are signing it on 1st of September, right? If you are raising an invoice, within 30 days, that is before 29th of September 2018, then your GST liability shall be raising only based on that particular date on which if you are raising an invoice. But please be careful. Assume a scenario, balance sheet is signed on 1st of September and you are raising an invoice in October 20th. Okay. Now the liability will be started from the date of completion of service. Please be very careful. I will repeat. If you are raising invoice within the prescribed period, then your liability starts from that particular period or the date of invoice, whichever is earlier. Assume a scenario, you are not raising invoice within 30 days from the date of completion of service. Then time of supply will go back to the original date of completion. They gave you 30 days, you didn't raise it, so now you are raising it, so you have to go back to the original date of completion. If you don't understand, please ask me. I'll repeat once again because this is very important. I have seen many cases where people are calculating interest based on the 30 days period. No, that is only if you have complied within 30 days. If you cross 30 days, your time of supply will start from the date of completion of service. So scenario 1, 20th of September he raised an invoice. No problem, time of supply will start from that date. Assume that 20th October he is raising invoice. Time of supply shall be 1st of September. So interest has to be calculated accordingly. So don't take any risk in this regard. And reverse charge mechanism is also given. So just go through it. And I have one small important point which I have to mention here is the construction industries. Most of the projects will go more than 3 months. So continuous supply of service, it clearly says that the provision of service, if it is exceeding 3 months, then it will be considered as a continuous supply of service. In case of continuous supply of service, section 13(1), 2 or 2, 3, nothing will be applicable. Only residual method will be applicable. Why? Because the continuous supply of service is given under 31, not under 1 or 2 for that matter. 1 for goods, continuous supply of service. They mentioned 31(2). Now they removed it prospectively from 1st of February. All continuous supply of service also will fall into 13(2) general clause. But previously, since they restricted their point only on 31(2), continuous supply of service will fall into the residual method. My only point is, if you have a construction company or any continuous supply of service, once you decide, please be careful with the time of supply. Till 1st of February, this was falling into residual category, and post 1st of February, it is falling into the main category, that is 13.2. So I gave you a couple of issues in this regard, and if there is a change in rate, so this is the next section 14. So you can go through the PowerPoint presentation which I have given, because now I think I have to stop the presentation. I think we have covered everything actually. I mean, everything we have covered. Section 7, 8 we covered, then 9 we covered, then we covered 12 we covered, 13 we covered. So the fundamentals are very strong, I hope. How was it? Was it okay? How was the presentation? Very good or good or bad? Okay, thank you. Thank you so much for your good comments. But the only fundamental thing which I would like to tell you is, I have given my PPT, go through it, the materials, and second is, you should always, as Rajendra Kumar has said, you should always update based on the notification which are being issued. Okay, any doubts? I'll take 1 or 2 doubts now if you have any. Any doubts?
This export, the advance receipt, if it is against export of services.
Yeah.
Whether we need to pay that, the advance is received against export of services.
The moment you receive an advance and then it is an import of service or export of service?
Export of service.
Export of service. You tell me whether it is required or not. No, everybody will answer no. I think his point is, he received some advance, he received some amount for supply of service. Okay, obviously if it is a domestic transaction, it is taxable. There is no doubt. His point is, if it is for the export, do I need to pay GST on it? You tell me, Exempted. Okay, they are saying that it is zero rated. See, fundamental point is, you see whether you are opting for a refund or you are discharging your liability. The moment you say that you are discharging the liability, then it would be applicable. If you are going with the LUT method, then not required, because you are coming under zero rated supply.
But LUT, when you have to file, it is before receiving advance or after receiving advance?
It is actually before, but actually there was a circular which is issued. They are saying that I can consider this as fact basis based on the circumstances, facts and circumstances. The moment they are using the word facts and circumstances, please be careful with this, because department can always take both the views. So don't avail that notification unless otherwise you genuinely require that. Apply for LUT in advance. Any other doubts? We'll break for lunch. Thank you so much for the wonderful hearing, and thank you so much. Thank you.
Just on behalf of everyone present here, I take the opportunity to present a memento to Mr. Rajan.
Good afternoon, members. Welcome back to the post-lunch session. May I now request the speaker, J. Murli sir, to occupy the dais. Please put your hands together to welcome the speaker. He will take us through returns under GST law, GST on job work. I am happy to introduce J. Murli sir. He is a fellow member of our institute. He is in practice for the past 31 years, having office at KK Nagar, Chennai. Practices in tax-related matters and specializes in indirect taxes. Graduated from Loyola College in the discipline of commerce. Did masters in commerce from Annamalai University. Has done MBA from Periyar University. Also an associate member of Institute of Cost Accountants of India. He is an expert committee member of the Hindustan Chamber of Commerce for the past 15 years. Now chairman of Business Tours Committees for the year 2018-19 of Hindustan Chamber of Commerce. He is the co-chairman of VAT and Sales Tax Committee of Andhra Chamber of Commerce for the past 2 years. He was also co-opted member for Indirect Taxes Committee of SARC for the year 2008-9. He is the president for Association of Chartered Accountants Chennai for the year 2018-19. He is also a member of the study group formed by ICAI for TN VAT and TN VAT audit. Founder member of the Chamber of Indirect Tax Professionals and last presidents of the organization. first president of International Chamber of Indirect Taxes Professionals, addressed many forums on indirect taxes. He is the regular faculty for indirect taxes for Continuing Professional Education Committee of ICA New Delhi. He is the ICA recognized GST trainer. He has addressed meeting in all the 3 professional bodies, CA, CMA and ACS. He is also a visiting faculty in the Staff Training Institute of the Commercial Taxes Department. He is also authored a book, Handbook on T and VAT Audit for the Professionals. With this prelude, I once again welcome the speaker. Over to J. Murali sir.
Thank you, Rahman sir. அனைவருக்கும் வணக்கம். Yeah, it is a proud privilege to come and address every now and then in the certification course on GST. This may be my 301 or 301st or 302nd meeting on GST. So, I will not stress you. You relax, we relax. You go through the slides, you will understand what you need to understand. We are going to touch the live wire of the GST. You can sleep, but don't disturb others. Always addressing after lunch is a difficult thing. I don't know, many of the organizers ask me to address only after the lunch.
You are like Tendulkar.
Eh?
You are like Tendulkar.
Tendulkar?
Yeah.
No, I don't allow them to sleep. My voice will be heavy and it will be addressed in the speaker. So, even if you want to sleep, you cannot sleep. Probably for that they are engaging me. And always I have also asked them to give first session. Nobody is giving me first session. Probably mistake is on my side. So with this a small introduction, we will go into the subject. My subject per se is job work and returns. What I am planning to do is, first I will take job work. I will complete job work before your coffee break. You will have your coffee break on time, because I was told by the caterer that morning the coffee was a bit cold. So you will have a hot coffee. I assure you to have hot coffee. So you assure me that you will not sleep. Even if you sleep, no problem. You enjoy your sleep. Because as a chartered accountant, sleeping is very difficult.
Especially due to
Eh?
Especially due to GST.
100% correct, sir. நான் பார்க்க முடியுது ஹேங் ஆயிடுச்சு. After the introduction of GST, all the chartered accountants, cost accountants, advocates will all have a green time. Our practice will be very nice. Your spouse can enjoy your money and your family can enjoy your money. But you will have to comply with the provisions of the Act. Therefore, the GST is good for the professional, bad for the family man. In a sense, you have plenty of money, but you don't have enough rest. Normally, if in my office, I will ask my article clerk and other staff to do some work. They will be coming and showing me. They will show me first 3B, GSTR 1. Then after some time they will show 3B. Then once again they will show GSTR 1. I said, just now you showed all these things. No sir, that is previous month, this is for current month. So it has been a routine affair. Some portion of my office is doing only the written work. The problem may be due to inefficiency on both sides. Because at times the assessee is also not able to give the records required. See, one problem you will have to understand, if you want to comply, they will ask you to comply, but they won't give record in time. What happens if you go through the record and file the return immediately? Next morning they will say, sir, you have filed the wrong return, sir. You will say, sir, I have filed only the details given by you. No, sir, I have given it wrongly. So you don't have time to verify. So what I have done in my office is, no return will be filed belatedly. If you are giving it late, your headache, you pay late fee. I will not burn my late night lamp. So after this, somewhat the schema is working better. Even then, on the last day, the server will be busy. Whether we are busy or not, server will be always giving us a torrid time. By that time, the client will call you 100 times. Before that, if you call, they will not pick the phone. Now you will have to pick the phone and say, server is busy, sir. Why I am saying all these things, jokes apart, is we are going to have annual return, I hope. Don't wait for the last day because server will burn. So try to do our compliance work early. With this small introduction, we are going into job work. Job work per se, very interesting. There are some category of clients who does not pay anything, even to you. If a job worker, you ask him, he will say, sir, I am not giving any new products, sir. Whatever given by my principal, I am converting into a finished product and returning it to him. Immediately, if a VAT officer comes and asks, he will say, sir, you have not understood the concept. I have not put any new product. Whatever my principal gave, I converted into a finished product. So it is only job work or labor charges which I have done on the product given by my principal. And I have also returned the scrap, if any. Then immediately the VAT officer will go and service tax officer will come. When service tax officer comes and asks for the payment of tax, he will say, sir, when VAT officer came, you said it is service. Now I am service tax officer. You have committed yourself as a service. Now you pay me the service tax. Immediately he will say, sir, first read the provisions of service tax. Under service tax provisions, if I do manufacturing activity and if I am below threshold limit for the central excise, which is 1.5 crores, I need not pay anything. It is a manufacturing activity. Therefore, you please go, sir, I will not pay service tax. Next one, income tax officer will come. Sir, what about my tax, sir? He will say, not only for you, for my auditor also I will not pay anything. Because only when I raise invoice I have to pay tax. I have not raised invoice. So this was the scenario. The other issue in this is, for the vehicle they have given input for only 4 people, right? Input in vehicles can be claimed by only 4 types of assessees. One is the assessee who deals with buying and selling of vehicles. For him it is an input. Other one is the goods travel agency, GTA. Third one is passenger movement. If it is a AC bus, the GST will attract. Fourth person, very interesting. Till now, he has not been seen in any radar. The input is given to the driving school. We all hope have license to drive, not license to kill. We should have approached some driving school and got the license from RTO. Have you any time received an invoice? You have not received any invoice. There was one joke in a movie, Indian movie. If you want a license, you pay 10,000. He will raise some questions. A triplicate birth depot. You will not get your license. So that is a scenario. But here the wonderful act says input is given to driving school. That means they will have to account the transaction. They will have to account what transaction? Whatever they receive towards their service charges. So interestingly, the GST brings the persons who have not seen the payment of tax in their lifetime. One such person is job worker. I am going to deal with the meaning of job work, business model, registration of job worker, documentation and transitional provisions. Very interestingly, we are discussing the matter after 1.5 years. And I am talking about transitional provision. No one of you has raised an objection. Why it is raised is, the first annual return is not yet filed. So you will have problem in that. To avoid the problem, we are going to study that also. So the job work, and in my presentation generally I don't give sections. Why? Because there are two problems. One, you will check only sections. Two, if I give wrong section, I will be caught. So in both cases I don't give section. But incidentally, this topic will have to be mentioned only with section. So the 268 will give the definition of job work. And then section 19, as you all know, input tax credit. 141, transitional provision. 143, job work procedure. 55, delivery challan. GST is a wonderful act which normally prescribe. We have to understand the words. GST is a wonderful act which normally prescribe. That is, if I give an opinion, my good friend Raju was telling about opinions. If I give opinion, it may or may not be accepted. But if a doctor gives prescription, you don't have any other choice. Otherwise, the patient will die. GST is like that. They don't allow you to have your own views. You follow what I say. If you follow, you are free, I am free. If you don't follow, I am busy, you will be suffering. Right? In job work, they are giving the procedures of how to maintain accounts and how to have the various models of job work. Only all these, they have given 4 options. You can have job work only for these 4 options. All other things will be included in this. Okay? And incidentally, delivery challan. They have actually gone into the matter in a nice way. The job worker will not raise an invoice for the job work, right? But you will have to raise delivery challan for the movement of goods. Your delivery challan is renamed or called as e-way bill, which is nothing but your copy of your invoice. All other details except your invoice number will be there in e-way bill. And if you raise e-way bill, automatically your GSTR1 will be updated. So if you touch here, the result will be in the monthly return. That is why delivery challan has been mentioned in a very good way here. And you will have to appreciate a point under GST. Under the S2L sales tax or S2L service tax or S2L excise duty, the job worker cannot supplement material. He will have to do only on the material supplied by the principal. Right? But our GST says job worker can supply materials also. Wonderful. He can also supply consumables or materials required in addition to the material given by the principal. In such being the case, the rate of tax for the material will be the rate of tax for the services. What is the rate of tax for the services? 18%. So whatever material you are putting, unless there is a notification, will be 18%. Now since more ladies are here, we will take the example of jewellery. If I am the jewellery, that is I am dealing in a jewellery shop, I have 24 karat bullion. You cannot make a jewellery with 24 karat bullion because it will not bend. You need to add some percentage of copper as per the purity of the gold. Right? In the S2L VAT and the sales tax act, the copper and gold should be given by the principal. But in this act, the principal can supply only gold. Job worker can put his copper and convert the gold into jewellery. Because if you add copper only, it can be drawn as a wire. then they can make to the shape which they want, right? And now you will ask me, what is the rate of tax, sir? Jewelry is 3%, labor is 18%. For jewelry it is 5%. They have given concession. Jewelry, for the jewelry, say for example you are purchasing 2 sovereigns of gold ring, it is taxable at 3%. The job work paid by the jeweler to the Achari will be liable for 5. And the jewelry can take input on the Achari's bill. Based on the bill, he can take input. Job work means any treatment or process undertaken by a person on goods belonging to another registered person. You will have to read the GST word by word. Here, the important word is goods of a registered person. That means the principal should be registered dealer. It can give you another answer. Agent need not be registered dealer, or job worker need not be registered dealer if he is in the below the threshold limit. If you give threshold limit, everybody will be below the threshold limit, right? So they cannot get himself, or he need not get himself registered, but the principal should be registered to another registered person, and the expression job worker shall be construed accordingly. The most dangerous definition will be like this. It will include all. It will include all. I will give you a hypothetical example. The erstwhile works contract, works contract, under VAT, under sales tax. Anything and everything done to a movable goods or immovable goods will be works contract. Even if you leave your car for tinkering, painting, since the definition was not clear, it will be treated as works contract. One of my clients also filed a writ in those days. They received some notice. Immediately he took the notice to an advocate. He filed a writ. Then what happened? The writ prolonged for 18 years. After that, the writ was disposed of with an observation to amend the act with retrospective effect, and wherever goods which have not suffered local tax, you have to pay tax. And my client also paid tax accordingly. You have to ask me, who is your client? My client is funeral undertaker. Since the definition was vague, they filed the writ for funeral undertaking. And interestingly, Madras High Court gave a speaking order, said it is a bundle of services. The bundle of services has been coined only in GST, we think. No, it was coined by Madras High Court in 86 when they gave the order for works contract. They said bringing the body from the hospital, one service, taking to the house, keeping it in the freezer box, then taking to church, offering prayer, then taking to and putting the coffin box, then taking to cemetery and resting the person. All these are bundle of services. After that, the client came to me. Actually, more interestingly, it was that the company was run by father of my client. That person, that lady was dealing in corrugated boxes, packing material. She was a manufacturer of corrugated boxes. She called me one day and said, "Sir, there is some problem in my father's company. Why don't you come to his company?" I said, "Okay, no problem. You give the address, I will come there." She said, "No, sir, you come with me. I will take you." I was in the hearing in Paris Corner and I told her my hearing is over. She said, "We will meet near War Memorial. Then I will go in my car, you follow my car." I also followed them. They went to Veperi. Veperi made on there. After that, Veperi will be there. Suddenly they entered a small lane. I also entered, parked my vehicle, that is, I went into the shop, place of manufacture. There were some sounds hitting the nail and other things. There were some sounds. I was also thinking that it is some furniture manufacturing shop. And as soon as I entered there were coffin boxes. I got shocked. I said, no, I didn't come here. No, sir, this is business. And I a joke. You are manufacturing packing material for good. Your father manufacturing packing material for dead body. So your family is packing material family. Then they said, no, sir, I have problem with the assessment. You have to complete 18-year assessments. 18 years. I completed all 18 years with the undertaking that they should not come and wait in my office. They will have to bring their book, keep it before me, I will prepare everything, then they will have to take it immediately, come to the sales tax office, I will complete the assessment. Why no? Because they used to bring the books only in the white cloth, where the body will be covered. I said, why are you bringing this white cloth? Sir, in the company, there is white cloth. Then I asked them to bring, no, not in this cloth. They brought black cloth. Celebrate black and board. And the main joke is, I completed 18-year assessments. AG audit was taken up. He raised a query because of this definition, this type of definition. Their work contract, it means improving the property of other person. My client have done funeral undertaking and he has claimed work contract, paid tax wherever applicable. AG audit people called me. I went there. They said, sir, there is a suppression for the, there are many Kerala people is there, I will talk in only in English. They said, there are some suppressions in this transaction. I also said, yes sir, correct. There is suppression in this transaction, you can verify. Sir, how can I verify? You also give me tips. Sir, my client have done work only in the Kilpak cemetery. You can take bunch of paper, issue notice to all the tomb, name will be there. You should notice to them because he has availed service. Your work contract definition says, person availing service will have to pay tax. He is sleeping there. You issue notice to them. Then immediately they said, no, sir, you should not talk like this. You have to be very clear. Then I said, he was having this type of cool drink bottle was there. Whenever they come for audit, cash unit and cool drink will be there. I asked him, sir, what is the rate for the bottle? He got annoyed. He said, sir, you say you are a chartered accountant and you don't know the act. The bottle is not rated separately. It is based on the product inside the bottle. So what is the rate for this? In those days it was about 14% or so. 12%. He said, cool drink is 12%. Bottle is also 12%. So total value is 12% you have to charge. Sir, is it confirmed? I said, yes, confirmed. My main product is dead body, which is exempted. Packing material is also exempted. So don't please levy tax. I said. Immediately that officer asked my assessing authority to move me out. If he is here, everybody will go like this. You ask him to go. Why? The definition of work contract will include everything. Similarly, definition of job work will include everything. You cannot escape from job work. So model 1, very interesting. For example, I am the person who is giving work to sir, where sir? Balasubramaniam. I am giving the work to Mr. Balasubramaniam. I will supply goods to Mr. Balasubramaniam. He will convert the goods into finished product, then return it to me. If he is a registered dealer, he will raise an invoice on me. In the invoice, he will charge GST. On the material, I would have got GST. On the job work, I will also get the GST. If he is not a registered dealer, nothing will happen. If it is before last year October, then I will have to pay reverse charge. As per section 9(4), I will have to pay reverse charge, and I can claim in the input on both sides, on material and also for the conversion. I will claim input tax credit. Is it very simple? So I think I need not elaborate. I will go to the next model. Bill to ship to. What is bill to ship to? You know that? Say for example, I am purchasing the material, I am asking my supplier to supply the goods to Mr. Balasubramaniam. Bill to me, supply to Mr. Balasubramaniam. So my supplier will supply the goods to Mr. Balasubramaniam. I will not receive the raw material. He will convert the material into finished product and will return back the material to me. So whatever material I have purchased, I will get input tax credit on the invoice. Do you know how many ingredients you have to see in an invoice? As per section, you have to see 17 items. That includes name, address, GST and number of both, invoice number, date, quantity, rate, value,
HSN code,
everything. HSN code, point of supply, whatever you want, everything should be verified. How many of us are verifying those things? You are verifying. Then Modi will congratulate you. I am also wearing the coat. I will congratulate you. In this case, if Mr. Balasubramaniam is not registered dealer, mane tene pon mane da. You have to repeat. I have to pay on reverse charge and claim input tax credit. Now I will ask you one question. What is reverse charge? You can give any answer, but you have to give some answer. Even wrong answer is accepted. Why? Because
tax paid by the recipient.
Very good. Tax paid by recipient. You need to understand what he has said. Tax paid. Underline the word. That means under the GST provisions, this month I will have to pay, next month I will have to claim. But your server overruled the act, it permits on the same month. But it is not correct. If by chance a client has done like this, he is not correct. Why? Because when you are going to pay the input tax credit or reverse charge mechanism, only when you file the return. That means this month you cannot claim the adjustment. Only when you file the return, you make the payment and complete the procedure. Next month only you will be allowed to take input tax credit. But server will overrule all the sections under all the acts. Originally they said you file your 3B first, then you file GSTR. Suddenly server amended the act and said you file for the GSTR 1 on 10th, file the 3B on 20th. Nobody has raised any question. Why? There is a why. Why? Because if it is 10th, you will have to pay tax on 10th. We are safe, why we are paying only on 20th. That is why all of us kept quiet. Right? So interestingly, the reverse charge mechanism, tax should be paid this month, input should be claimed next month. That is the correct procedure, but always correct is not holding good properly. Third one is very interesting. I am supplying the input to Mr. Balasubramaniam sir. What is your name, sir? Prakash. What I do, Mr. Balasubramaniam sir, I supply raw materials to sir and ask him to supply to Prakash. Because if it is done like this, the schedule of supply will be continuous. There is no wastage of time. There is no double payment of freight. When you make payment of freight, 9(3) will apply, reverse charge mechanism will come. So you will pay 2 taxes. You are avoiding everything. So what I will do, I will supply raw material to Mr. Balasubramaniam and he will supply to Prakash the finished product with an understanding that I am registering his place of business as my branch. Mr. Balasubramaniam may be job worker for 10 companies. The registration holds good only for my transaction, not for other transaction. For example, the AC. We all think that based on the cover it is prepared by only one party. That is not correct. Even the cover is prepared by the job worker. If you want LG cover, you will put LG cover. If you want any other Blue Star cover, you will put Blue Star cover. So it is only outsourcing of persons. So what I will have to do, I will register Mr. Balasubramanian's place as my branch, and I will raise an invoice in his place and send the goods to Mr. Prakash. How it can be identified? Because in my registration, I will have a branch registration that is of my job worker, right? And wherever you have, you will have to have separate serial number of invoices. Okay? So my invoice number in my office will be M/1. If it is raised in the job worker's place, it will be B/1. So I can distinguish that and raise an invoice and send the goods directly to Prakash. That means all the big automobile industries will have only job work arrangements. And they don't want to keep the stock beyond 15 days requirement. They will have these type of arrangements. If you think that Hyundai Plaza, Hyundai is in your Sriperumbudur, and if you think that it is one company, it is not so. There are about 40 or 50 Korean companies are there based on the Hyundai Plaza, Hyundai automobiles. So similarly, they will all engage in some work for Hyundai alone. To offset those things, the third procedure is evolved. And here also there is no much of a difficulty. Only thing is I have to get the job worker's place registered. Fourth one, very interesting. The manufacturer will order the goods, bill to, ship to. It will reach the job worker. Job worker will convert the goods into finished product and send it directly to customer. So the owner of the property will not see the property or will not see the goods. I will not see the goods. I will ask my supplier to supply to Balasubramanian sir. He will manufacture and supply to Mr. Prakash sir. Here also I will get input on materials and job work charges. So there is no any other change. And you will have to understand the cut-off dates given in the Act. We all think GST is a wonderful Act. They hear to all of us and amend the Act daily. But it is not so. It is one of the dangerous Act. Why I mean is, I had an opportunity of addressing in Tiruchengodu. I went there. I went to Tiruchengodu in the morning. I had another meeting in Rasipuram in the afternoon. When they went there, it was early morning. I was given in a good new hotel outside the town. I was staying there. And I reached that place by 4 o'clock in the morning. Meeting was to commence only at 10 o'clock. I had 6 hours time. Normally when I wake up, I will not sleep once again. I will get up on all days at 4 o'clock. So after that I will not get sleep. Normally I go for walking, and that place was outside this main stream. So I thought it is not safe to run the walk in the highway. I opened my laptop. Luckily on that day I took laptop and connected that to GST portal. Night 1201, there was an amendment to the Act wherein the rate of job worker charges for textile industry was reduced from 18 to 5. I noted down the point. Then I switched on the TV. I saw something. They came and took me for breakfast, and I went to the meeting. The hall was crowded, not like this. There are about 600 to 650 members, delegates. First question they asked me, sir, what is the rate of tax for textile job work? I asked him, when did you raise your bill? Then I said, if you have raised your bill on 11:59 PM of yesterday, it is 18%. If you have raised on 12:01 AM today, it is 5%. After that only I was speaking, everybody was listening. Same story went in the Rasipuram also. The assessee will like to hear only the reduction of rate or cancellation of tax. If you say, no, sir, the tax rate is increased from 12 to 18. Next dialogue he will say is, okay sir, I will check with a good auditor. And that too in indirect tax, if you can complete 4 assessment, you are a consultant. If you complete 5 assessment, you are an expert. And you can give your own act. If you see WhatsApp, every day there will be 10 GST. That is not given by our finance minister. It is given by the person who wrote it. They will give all provisions. They will say you go and purchase from the mall. Bill value should be less than 1,000 so that you need not pay any GST. Likewise, they will give more amendments. And I am very interested in seeing that. I will see, enjoy, delete. There are 4 conditions. One is to register, the job worker needs to have basic turnover. What is the basic turnover? Threshold limit?
20 lakhs.
20 lakhs. Is it so?
40 lakhs.
40 lakhs. Huh?
20 lakhs.
It's not a notified.
20 lakhs. Now it is only 20 lakhs or 10 lakhs as the case may be. In real sense, do we have the threshold limit? That is my question. For a true businessman, there is no limit. Why? Because I give you my own case. Anticipating the GST implementation, very fast increase in the office, I modified my office. I installed new computers. I made all arrangements for everyone to sit properly, lighting and other things. What I did is, I gave the contract to a shop. I asked him to supply the material and put my GSTN number. He supplied the material. For the electrician, he is not having any registration. So I said, no problem, you give me some bill. I will pay reverse charge and take the credit. So the LED bulb, we purchased some tube lights, and there were about 3 tube lights shortage. I asked my staff, we paid about 450 rupees, nearly 450 rupees per piece of that entire set. I asked my staff, I gave him cash and asked him to purchase 3 more because we are short by 3. He went to the shop. The shopkeeper said, I will charge GST. Immediately my client and my staff, who is very interested, that is interested on my well-behavior, my well-being, he said, Appa Vandappa, I will go to some other shop. He purchased the same tube light without an invoice at 475. How it is possible? Very simple reason. That person purchased for 450. He kept his margin of 25 rupees. I paid the tax, I paid margin on GST, and I did not have any input tax credit. So, in real sense, if you want to be competitive enough to crack the market, there is no threshold limit. You will have to charge tax separately, collect tax, set off, claim the set off, close it. If you miss this, you will miss good contracts. Why I am saying this? Many senior chartered accountants or many youngsters will say, sir, 20 lakhs is more for me, sir. I will not touch it this year. Probably next year I may touch. I will get registration only next year. If you say so, last year the assessee will have to pay reverse charge mechanism for the fees paid to you. No, it is not possible. So better threshold limit is in the act, or not for the true businessman. Those who are trying their luck whether they can do business, they can use it. it will become cost, tax will become cost, and they will keep margin on tax also. So that is something not competitive enough. Then job worker will pay GST on labor charges if registered. If not, up to 14th October I think, or 14th October, the principal will pay on reverse charge mechanism. Manufacturer will pay GST on labor charges. Then in case of interstate job work, threshold limit will not apply. And there are some notifications which say threshold limit not required even for interstate. They need not register. Originally they said if you do interstate transaction, you will have to register. Subsequently, many notifications have come, and interestingly, the notification will contradict themselves. Notification number 71 of 2019 will say, those who have not filed return from last July, so July 17 to 18th December, 2018 December, they can file up to March. Notification 72 will say 17th July to 18th February only. Beyond that, you cannot pay and claim input tax credit. But you have to wait for another notification. In India, if you are following the rules, you have to pay penal interest. If you are not following the rules, there will be some waiver. So jewellery, goldsmith and silversmith wares and other articles, chapter 71, the reduction rate was given. And incidentally, e-way bill need not be raised by all these people. Why? Because they can have 4 diamond ring costing about 20 lakhs in a small box. You cannot put e-way bill for that. Therefore, they are exempted. Input credit, manufacturer claim ITC on job work and goods used by the job worker. Time limit, wonderful. Under Central Excise Act, there that is raw material, there is a limitation, and for capital goods, under Central Excise Act, within 6 months it should be returned back to the principal. In the entire tenure of Central Excise, nobody followed that. And everybody were given benefit. You need not follow. But under the GST it says the capital goods should be returned back to the principal within 3 years. If it is not so, it will be treated as supply. I will pay tax for my own goods. Similarly, the raw materials given should be returned back either as a finished goods or as a raw material, as the case may be, within 1 year. If it is crossing 1 year limit, you will have to take it as a supply. Because we are having Ramarajyam, no? There, when Sita crossed the line drawn by Lakshman, she entered trouble, or she invited trouble. GST also, the time limit is like a Lakshman Rekha, you will have to follow. If you cross it, it will be risk. If you are within the Lakshman Rekha, you are very much safe. You file the return, be happy. There is an advertisement for Hero Honda. Fill, shut, forget it. Same for GST. File, pay, close it. Properly it should be done. The delivery challan should have date and number of delivery challan, name and address, GST and number, consignor and consignee if any, HSN code, quantity, taxable value, tax rate, tax amount, place of supply in case of interstate movement, and signature. We normally see one in any multinational bill, you will see computer generated document, no signature required. That is not holding good for GST because it is not multinational, it is Indian. The GST document need to be signed either digitally or manually. They can sign the invoices digitally, then they will have to have so much of digital signature, which is not possible. Okay? The original copy for the consignee, duplicate for the transporter, and triplicate for the consignor. Now you see the prescription. Prescription follows everything. It gives first copy to the person whom you are consigning the goods. Second copy to the transporter. Why they are not giving third copy to the transporter? Because during the vehicle check they will have to see and verify. If it is third copy, the carbon may not be properly placed and it may not be clear. That is why they ask the transporter to have second copy. And if you raise e-way bill, no copy required, only acknowledgement required. Right? Is it correct? Even the acknowledgement can be carried by means of entry in the cell phone. Because the officer will have handheld equipment. If they put the acknowledgement number, they will get all the details. If you raise e-way bill. If you raise e-way bill, it will properly accounted for. When you are accounting, you are free. When you are not accounting, I will give my cell phone number. Whatever goods sent before 1/7/2017 should be returned back before 31/12/2017. If it is returned back before 31/12/2017, the GST will be applicable only for the conversion charges. Decent provision. If it is not returned before 31/12, it will be treated as supply. Supply means you have to pay tax. Why I am stressing this is, while preparing the audit report, try to see all these things in the client's documents. Normally they will give the Excel copy or backup of tally. They will not give you hard copy. Right? So you are seeing tally means tally, the entry will be correctly made. But if officer comes and sees, he will levy different thing. Even Kukil is interested in GST. He is not going. Very interesting. In granite industry, the granite will be cut by one company and polishing will be done by another company. Both will be owned by the same person. There will be difference in constitution, group concerns. Such being the case, the second company should return the goods before 31/12, whatever they have received before 1/7. If it is received before 31/12, only the service charges need to be taxed if the assessee is liable to pay tax. Otherwise, no tax will be leviable. In contrary, if the goods are received back after 31/12, the transitional provision says you will have to treat this as a supply. That means your company, that is your A company, will have to pay tax, B company will have to take input. If you pay now, how B company will take input? You cannot take, no? That is the problem. There is one product in the schedule or which cannot be taxed under the Constitution of India. The newspaper cannot be taxed in the morning, or if it is evening newspaper, cannot be taxed in the evening. The next time, that is morning newspaper, it will become waste paper in the evening. There the sale is taxable. Understand this point. The Constitution says you cannot assess electricity your newspaper. Newspaper cannot be assessed in the morning if it is printed and given. But if you sell it for the scrap, if you sell it as a scrap, the scrap is liable for taxation. And the printing of newspaper will attract 5% tax. The end product is exempted. Job work will charge 5% tax. Then what happened to the tax? Under GST, you can claim input provided your end result is taxable. Here, the end result is newspaper sales, which is exempted from tax. That means the input, whatever you are having, should be surrendered to government as reversal. Right? Then textile yarn, textile fabric, garments, jewellery, printing books, printing of all goods falling under chapter 48 or 49 will be 5%. Processing of hides and skins and leather. There are about 14 processes in the leather industry to convert the dead skin into finished leather. And if any of you have practiced VAT or have finalized books with litigation under VAT or sales tax, will understand there is a concept called wet blue. Wet blue is one of the stage where the leather will be further processed and make a finished leather. For that you have to add some chemicals. Whether the chemicals is liable for concessional rate or not, a big issue settled by Supreme Court. So therefore they have given 5% tax for processing of hides, skins, leather. And you should know the difference between hides and skins. Hide will have hair. Skins will not have hair. It will be removed and treated. So every industry, my sincere suggestion, if you are getting any new client, not like that what I said on packing material, before going to the client, you understand what they are doing, because the GST will be leviable on all transactions, whether they are declaring it or not. Manufacture of leather goods or footwear 5%, all food and food products 5%, because food is 5%. So the manufacturing also food 5%. All products in chapter 23 of custom tariff is 5%. Manufacture of clay brick, tax tax 5%. Reduced rate. Manufacture of handicraft goods 5%. But the handicraft is exempted. Handicraft is exempted, manufacturing is 5%. Tailoring. Job work of tailoring and manufacture of umbrella, previously GST rate 8%, reduced to 5%. Notification I have given, you can take a note of it. Services on goods belonging to another person for printing newspaper, books including braille books, journals and periodicals. Normally it is called as reading books, it is 5%. Services on goods belonging to another person, printing of all goods falling under chapter 48 or 49, your letter pad, visiting card, etc. will be 12%. Printing, you have 4 rates. Then services on goods belonging to another person, printing of newspaper, books 5%, 12%. Any other ancillary service in relation to printing 5%. Job work, material supplied by the publisher 12%. Printing services, material provided 5% for newspaper and other goods 12%. Time limit for the principal to bring work, that I have explained, so I am skipping this. And wonderful provision. Molds, jigs and etc. which will be consumed or worn out during the manufacturing process, you need not return. Whenever you effect a sale of scrap, if the job worker is a registered dealer, we will have to pay by job worker. If it is not a registered dealer, principal will have to pay tax on the scrap. A gentleman agreement and gentleman provision given in the Act. Scrap generated during the job work may be supplied on payment of tax by job worker if he is registered. Otherwise, principal will pay. When the principal and job worker are in different state, IGST will be charged on the scrap. Different states. இது இருக்குமா? Job worker in different place, principal in different place இருக்குமா? Possibility is there. You take the care of the jewellery. You have Bombay pattern, you have Kerala pattern. Likewise, you have various types, Bengal, the West Bengal pattern. So whenever these types of pattern is there, the goods will be sent to other state and converted finished product will come here. Under the erstwhile VAT Act, if the goods go for job work to the other state, input is not available or input was not available. To avoid that, they have said, even you can take the goods to other state, when the principal and job worker are two different states, only thing is he will pay IGST instead of CGST and SGST. A reasonable provision. This thank you is for job work only. Don't be so cautious and I have completed. I have not completed. We will go to the important session. Returns under GST. You see the photo after filing the return, the person is very joyful. It will happen to us also. If you are able to file all the returns on due date, you will also be happy. Normally your happiness is short-lived because next month return will come immediately. So monthly return should be filed by regular dealers, those who are claiming input tax credit. When I am a regular dealer, I will pay tax on my outward supply, claim input tax credit on whatever I take it as input service or input goods. I have to file monthly return in time. Then comes TDS, TCS. If I am a dealer in TDS and TCS, I will have to pay. I will have to file return on monthly basis. Then comes input service distributor. Who is input service distributor? When I have a head office and the head office is not having any output supply, it will have common expenses like audit fees, telephone expenses, internet charges, etc., bank charges, and they will get input in everywhere. When they get input, the input will be piling up at one end and the branches will pay tax on the output. These persons can distribute the available input to various branches. Which are reasons for getting the input. For example, I have paid salesman commission in my head office. And assuming that I have branch in Kerala, Telangana, Andhra Pradesh, Karnataka, Pondicherry, except Tamil Nadu. Tamil Nadu is head office. I have paid the salesman commission for all these branches. Assuming they all have raised invoice on me. They are all my distributors. They have raised invoice on me. I have got input from all the sources. That input I will distribute among the respective state based on the turnover. I will arrive at the total turnover, fix the ratio for the whole year. I will follow the ratio and distribute the available input to the respective branches. For this, I need to take an registration over and above the regular registration as per the 1-2 amendment, 1-2019 amendment. It is called as input service distributor registration. I can distribute the available input to the branches where it will be offsetted in their return. Then non-resident taxable person. If you had an opportunity of practicing the earlier erstwhile act, you would have seen the name casual trader. Casual trader is not a person who is of the same place. He will come and participate in some exhibition and take a temporary registration and do business, pay tax and go back. These types of the transaction is non-resident. For example, I am having a product manufactured by West Germany. I may call for a person, for a technician from the parent company to verify the manufacturing process employed in India. He will sit here for say 12 months or 1 year, 2 years he will be here. I will be paying consolidated money to him. Even this will be liable for GST. That person should take temporary registration as a non-resident taxable person, and he will have to file monthly return. For whatever bills he is raising on me, he will have to pay tax. So I will pay tax and he can claim input tax to me. Then quarterly return for the regular dealer whose turnover in the previous year less than 1.5 crores. They need not file monthly return. They need to file only quarterly return. Now you will have to answer me. Which is the return of these two, GSTR1 and 3B? GSTR1, correct. Then what about 3B? It is not a return, it is a statement. It is a consolidated statement. Came through back door. Not amended in the original act. Came through rules. So, the return per se is the return filed. 3B is not a return, therefore you are paying late fee for that immediately. Unless you pay the late fee, you cannot file 3B of the next month. Right? So, the small dealer need to file 3B every month. They can file GSTR1 once in a quarter. Followed by composition dealers. Composition dealers are dealers who are below a threshold limit, which was 50 lakhs, then increased to 75 lakhs, then subject to increase to 1 crore. And they are also contemplating for 1.5 crores. Up to 1 crore, if the assessee is effecting business in Tamil Nadu or any other place in the same state, he need not file monthly return, whereas he will have to file quarterly return. He will have to file before 18th of next month, after end of the quarter. The very interesting name is quarter. Then comes annual return. All regular dealers will have to file annual return. Then compounding dealer will have to file annual return. E-commerce operator will have to file annual return. You understand, that is, you will have to observe one thing. When I talk about returns, I have given in green color. Why? We all have profession in all these things. When it is green color means our profession is live. On closure of business, very interesting. Normally how they will close the business, under VAT or under service tax. They will say, I have closed my business with effect from 1/4/2016. They will file a letter now and say, I have already closed my business. Hereafter, you cannot do like that. You will have to close the business only online. There are forms for that. You have to upload the forms. Then, after uploading the form, the officer will suspend your registration for time being. But you will be allowed to file annual return and final return. Very interesting. Because after closure, they may have the transaction of settlement of assets. There will be some tax on that also. In final return, they will have to pay tax. It should be filed within 90 days from the date of closure. Kindly note the date, 90 days from the date of closure. If the officer cancels the registration, same provision will apply 90 days from the date of cancellation. So, you need not worry, we have plenty of work. You may not get good fees. We are going to discuss all these sections and see the notification. I have given only the sample. There are more notifications. I don't have space to mention all the notifications because on an average they give 3 notifications per day. If you calculate from 1/7/2017 to 25/2/2019, you take how many days are there? At least 3 into 3 notifications would have been released. That notification includes extension of time. Every month you are seeing some extension. That is also coming by notification. So to read notification, you need to have a notification clerk. By the way, I want to say one thing. Normally when you go to your office, what you will do? You will go pray to the God. At least this day I have to get all my fees. Before that, you open GST portal. See whether any amendments have been made in the yesterday night. Then start the work. Because your work will change. If you note that notification, the work will, I think they said that they will come for coffee. We will break here, only 10 minutes. Now I will ask a simple question. Whether GST is a new act or whether it is an act or acts. Whenever you are, if you are in a company, whenever your boss asks you to prepare some budget, what you will do? You will take previous month budget, right? Do some tinkering painting and make it a current month budget. It is called as cut and paste technique in computer language. Same technique was followed in GST. They have taken important points from excise, service, VAT and customs. They pasted them. Normally if you give scissors to a person and allow him to cut, he will cut whatever he sees. Likewise, they have cut 3 provisions from income tax, TCS, TDS and transfer pricing. Pasted everything and formed a new act. So it is not a new act, it is only old act in new shape. You first see the wordings. 3B is not a return, summary of a return. That is why I said it is a statement. Then return of outward supplies, GSTR 1A. When you upload the details, when you prepare it is 1A, when you upload it is 1. Right? Similarly, return of inward supplies, when the other person enters it is 2A, when he completes it is 2. Then regular dealer GSTR 3, which is not in practice now. Non-resident dealers, the non-resident taxable person GSTR 5, and OIDAR distributor or OIDAR provider GSTR 5A. You have to know the consequence of this OIDAR. Normally, if you see a person who is in States or in Australia, will proudly say, do you read Kumudam? He will ask you. You will say, yes. Every Wednesday or Thursday it comes, I will read. You know something? I read one day before you. How? They will download and read Kumudam, Kalki, etc. This was happening in Australia. The taxman there thought there is a potential area of tax in that. So what he did, when the material is downloaded for a cost or when a magazine is downloaded for a price, the person who receives the price will have to pay tax. That is how the OIDAR has come into force. Now we will say, I referred this in a foreign book. I paid $20 for downloading the book. If you pay $20, you'll have to pay GST on $20. If you are not paying, the person to whom you have paid will have to register here and pay tax. If he is not having any branch, he can authorize a person to pay. Underline the word pay. Pay tax to government. So that person will file return in form 5A. Input service distributor 6A. Tax deductor GSTR 7. Wonderful provision under the indirect tax. It is an eye opener for direct tax. For example, if you do a bank audit, they will make the payment by, if you do the bank audit by April, they will make the payment by max June 30th, they will make the payment. You will utilize this tax only in the next September when you file your tax audit report, right? Your money is locked with the government for 1.5 years. You are not paid any interest. Whereas the poor indirect tax person, when they deduct tax during this month, say for example for February, if he deducts tax, he will have to remit it by 10th of next month, March 10th. When I make payment for the return in 20th of that month, I will take credit of the TDS. So which act is better? GST. Because it is indirectly direct tax. It will affect you directly. Yeah.
I'm not getting this.
In the direct tax, if TDS is deducted, you can claim only while filing the return in the next year, 1.5 years later. Whereas under GST, if a TDS is made on you, for example, you are a chartered accountant for a Government of India undertaking or Government of Tamil Nadu undertaking. Assuming that you receive a fees of 5 lakhs, he will deduct TDS on that. TDS under GST and remit the TDS by 10th of next month. When you file return for the month of February, you can claim the input, that is TDS as input. Very fast. The impact is very fast. Your money is not wasted. Similarly for TCS. Who will pay TCS? Tax collected source. The e-commerce operator will have to pay TCS. I will explain that when I come there because it is already 3:45. Tax collector, GST 8, annual return, normal dealers 9, 9A for composition dealer, 9B when the turnover threshold limit crosses 2 crores to be certified by a chartered accountant or by a cost accountant in practice. Kindly note, in practice. Others should have registration of practice. Final return GSTR 10. Inward supplies of UAN person GSTR 11. Who is this UAN person? Unique induction code given to your embassies and other foreign institutions available. It is notified in the section. They will report only their expenses, not their income. You can proudly say the ambassador of US is my client. He will not give you passport or visa. He will give you fees if you are able to collect fees from him, right? But you have to file every 25th is return in GSTR 11. These dates you leave it because notification amends the date. But I have given it as a procedure. I will skip this also, then matching begins. So this is the prima facie or primary activity a dealer will do. What he will do? He will upload all his outward supplies in GSTR 1 before 10th of that month. Okay? When I upload GSTR 1, I will upload transactions with registered dealers separately, transaction with unregistered dealers separately, transaction with compounding dealers if I know separately. Right? When I give transaction from businessman to businessman with registration number, when I enter GSTR 1, it will go to GSTR 2A of my recipient. 2A is nothing but input register. 2A is nothing but your input register maintained by the other person. Okay? So when I upload, say for example, since I know his name, when I have effected the sales to Mr. Balasubramaniam, I will upload the invoice number, date, amount, the GSTN number of sir and my GSTN number I will upload in the return. If I report on 10th of this month, he can see the input on 11th. Before filing his 3B, he can verify whether I have paid the tax. Right? Whether I have reported the tax. Paid will be made only on 20th. Then, if I effect sale to a composition dealer who has not mentioned that he is a composition dealer, what will happen? He will be filing a return called GSTR 4. All of you missed that. In my earlier slide, there is no 4. You see, there is no 4. After 3, it is 5. 4 is a return to be filed by composition dealers once in a quarter. Right? So, when I report my sales with a composition dealer, the sales will be reflected in his 4A. Can a composition dealer claim input tax credit? Can a composition dealer claim input tax credit? A condition for composition dealer is he should opt for the composition. He cannot claim input tax credit. He cannot collect tax. He will have to declare that he is a composition dealer in all his documents. Say letter pad, bill, name board. You have to mention in the name board the GSTN number and say he is a composition dealer. If it is not so, if the officer come for survey or inspection, they can levy 25,000 rupees as fine for not saying that you are a composition dealer. Right? Normally, composition dealer will not say he is a composition dealer because he thinks that he need not maintain books as per the provisions of S2I VAT. But under GST, he will have to maintain books. He need not declare every month, he will have to declare quarterly. He will have to give the total figure of sales and pay the rate of tax at the fixed percentage. He cannot claim input tax credit. For example, the limit is say 1 crore. And if he is purchasing from various dealers for 4 crores, is he eligible to claim composition? That is why it is reflected in 4A. And to the best of my knowledge and belief, no composition dealer have tried 4A or opened 4A. Every month there will be some entry. If I want to make some sale on record, I can put your GST number and tear one invoice. Then I can upload. Whether knowing or unknowingly, it will be credited to your account. Such being the case, the composition dealer are not inclined to check this, which is not correct. You have to suggest to your clients that every month you have to take printout of 4A. Otherwise, and it is a running document, it will change whenever some person is filing the returns. He will have to see the total purchase is less than threshold limit or just more than threshold limit, and sales may be less than the threshold limit. Then it will reflect in the 6A of the input service distributor. The head office which distributes the available input to the branches, it will be credited to 6A of that assessee. That is why your books are not maintained by you, it is maintained by the other person. So you cannot cover anything under GST, provided the other person also covers. Otherwise you will be caught. When he is accounting it and you are not accounting means there is a mismatch. And for mismatch, now they are not issuing notice. Why? Because assessment is not over. Only when you file the annual return, the liability starts. Then they will come with all these innovative types of finding mistakes. Naturally, most of the that is composition dealer will cross their limit. Earlier, they were under the belief that they need not maintain accounts. And they say, sir, na quarterly return file pandra sir, enakku botheration kedayadu. I am not declaring my purchases. You need not declare your purchases in 4. There is a notification. However, the form has the column for purchase. Notification says you need not give the details. Why they have given notification like that? They have already got everything. It is available with them. Only thing is notice to be generated. And in the GST arena, it is very interesting. Till GST, what will happen? The officer will have heart and brain working simultaneously. They will draft a letter. The assessee is so and so, he is doing so and so business, he is dealing in good jewelry, etc. And yes, they have reported so much of turnover, like that they will give. So their heart will be working. Therefore, they may have the tendency to leave some penalty or some taxation. Now, no officer is having heart because server is going to pass orders by the stroke of a button. It will give all the mismatches and levy tax and penalty as the case may be. The officer will download, take printout, send it to you, or scan it and send it to you. So, it is better for us to declare voluntarily. When we declare voluntarily, you can claim input tax credit. If they found out, you cannot claim input tax credit. Right? Your GST or 2A have 3 baskets. One is auto-populated of input from your regular transaction. Say for example, your purchases and input services received. Whenever they raise an invoice and whenever they give your GST number, the basket will be filled with your regular input tax credit. Then part B is filled with your input service distributors contribution. Your head office transferring some amount to you, it will be available in part B. Then comes part C, which is the basket for TDS and TCS. If you go to dashboard, the extreme right of the dashboard, you will see TDS and TCS. Then you have to click that. It will go to the page where you have to select the month. Then if you select the month, it will go to the page where there are entries. For example, you are having some 10 government concerns with you and all they have paid GST this month. Then all TDS will be available in the box. Your duty is to select and whichever is related to you, accept. If you accept that, it will go to credit register. Huh? Yes. That is after filing only. I am talking about after filing only, it will come to your box. You have to click. Yes, only after payment. After filing the TDS return, it will come to you. So, yes. And there are some penal interest or penalty will be there when you are not downloading the TDS certificate. Very interesting, no? When you do government contract, you are deprived of TDS. It will be deducted from you, not deposited to you. Or you will not have credit. That is from the day when TDS was introduced under Tamil Nadu General Sales Tax Act. Way back in 20 years before that, no, not 20 years, in 1986 they have amended the section. 86 to 2018, it was going like that. Whatever paid is paid for the government. One share is going to government. Now it is not so. If TDS is not, certificate is not generated, the person deducting is penalized. Wonderful provision. So you will get all your money intact. GSTR 1 regular return will have this, and 6, then 7 or 8 will have this. When GSTR 1 is uploaded with all the output transactions, GSTR 2A is amended. 2A of the recipient is amended. I am effecting sale. I will upload GSTR 1. you are buying from me, your 2A will be updated when I upload my GSTR1. When I make payment, you can claim the input tax credit. If I don't file 3B, what will happen? Nothing will happen, you will not get credit. You will pay with penal interest. Right? Because the Act says onus of proving the sufferance of tax is with the person claiming the tax. This is your return menu, you are selecting the return. Before that, before entering into 3B and GSTR1, first you will have to select whether it is nil return or regular return. If it is nil return, the late filing charges are less for 3B. What is it? 20 rupees. If it is a regular return, 50 rupees. By mistake you have not clicked that and uploaded the return. Next month 3B will calculate the late fee at the rate of 50 rupees. You will all appreciate this. After 2017, no officer is asking you to file return. Have anyone asked you? If you are not filing, they will cancel. They will not request you to file. Why? Because how long you are delaying things, their meter is going on. They will collect their late fee. That is why now there is a check for generation of e-way bill. If any one of you have not paid 2 months return, you cannot generate e-way bill. Very interesting. I normally used to say when I take service tax, if you are young and if you are getting married, if you get dowry, it is taxable under service tax. How? It is not available in negative list. It is not available in exempted list. All other things other than this are taxable. So dowry is taxable. Similarly, under GST, whatever not claimed is taxable. So please claim the details immediately. GSTR1 is outward supply, auto drafted GSTR2A, TDS and TCS credit received in GSTR1. Then GSTR3B is monthly statement to be filed by 20th of the succeeding month. We are entering GSTR1. First column is outward supplies made to registered person. Who is a registered person? When I know the buyer or recipient is a registered person, he will give his GSTN number and I will incorporate the GSTN number in the bill. I will have to take the input, that is, I will have to report the GSTN number in the return. By the way, there are 3 main documents to be maintained by a dealer which is subject to verification. What are they? GST certificate, you will have to download from the website, display in your office. If you are not displaying as a chartered accountant, you are liable for 25,000 rupees. Take the 25. For any offence, 25. Then, second is, you will have to note down the inward supplier's details. That is, the person who is supplying goods to you, you will have to have their contact number, GSTN number, and then their contact phone number and etc. Details to whom to be contacted, the office address, and if they have branches in other state, you will have to have the branch address. Why? My good friend Raju was taking about place of supply, time of supply, I think. There, when you prepare invoice, if you put the GST number of the other state, automatically it has changed from intrastate to interstate. So the basic document is your supplier's details. Second document is over. Third document is your registered customer's details. Because whenever I don't know you, I can do it as a intrastate or interstate. If I know you, it should be intrastate only. Right? So the third document need to be maintained is the details of your customers. So when you know your customers, you will record that in the transaction. My sincere suggestion, you take a master copy of input, that is GSTN number of the supplier and customers. When you are working in a company, you have the main customers or main suppliers GSTN number with you, so that you can check whether you are doing it properly or not. When you give wrong number, the other party will miss GST. And if the other party claims that they have paid to you, mismatch will trigger notice to you also on later date. We had the option of rectifying in 2A. Now 2A is not available. Therefore, you have to be doubly cautious. Then comes the transactions affected to an unregistered dealer in other state. That is the second column. Why they are bothered about unregistered dealer in other states? Because normally under CST Act, if you don't know or if you don't want to give the details of the transaction, you will say transactions affected to customer without CFOM. You will not say it is not accounted. It is without CFOM means other party may or may not account. Now you cannot do so. If it is beyond 2.5 lakhs, you have to declare in the monthly return separately. If everybody declares about that person regularly, they will invite the officer to their place for registration. It is a closed net. Everything is, that is, I will suggest to my friends and clients, whenever you upload GST return, kindly wash your hand with the Dettol. Because you are going to damage your own eye with your own finger. At least it should not be septic, no? Whatever you do is going to affect you. Till 1/7/2017, for indirect tax, the assessment order is passed by assessing authority. From 1/7/17, the assessee himself passes an order. You are deciding your fate. You are writing your, what I can say, your fate. Then comes credit note and debit note. Wonderful. Till 1/7/2017, we were declaring only our sales. That too, when after introduction of VAT, you will be giving the details invoice wise before the total figure. The total figure may include or may not include many things, local taxes, etc. But after that, once VAT is introduced, actually VAT is introduction to GST. Many of us think that why they have wasted time in introducing VAT. They have given you taste of input tax credit and introduced GST. The origin started when they introduced mode of VAT in central excise in 1986. அப்பவே வந்திருக்கணும், நம்ம கொஞ்சம் லேட்டாக வந்தால் லேட்டஸ்ட்டாக வரும். Then debit note, credit note. What is debit note, credit note? When I effect sales return or when I receive sales return, I will give credit note. What is debit note? When I give a purchase return, I will raise debit note, right? That is the accounting philosophy. It is not holding good here. It says, I have raised an invoice for Mr. Balasubramanian because I know his name only, or Prakash. For change, I will take to Prakash. I have raised the invoice on Prakash. Say invoice number 23/14/2018 for 1 lakh. And he is a good person, he paid 18% tax to me. Actually, the services are 1,25,000 rupees. He need to pay another 25,000 rupees. Now I will raise a debit note on Mr. Prakash and report it in the 9B column. When I report in 9B column, Mr. Prakash will get input on the debit note also. Very interesting. That means not only your invoices, all other documents are to be serially numbered, dated, right? And it should be continuous number. Normally, in my entire career, if I go for assessment I will ask the dealer to bring the details of sales return. They are very clear. All the dealers will be very clear. Whenever they give a credit note, it will be number 1. In January month, they will give a credit note, and I will ask him, sir, credit number 1, sir. Then February also there will be credit note. It will also be 1. I will ask him, why you are giving 1? No, sir, that one is for January, this one is for February. And in February also you may have another one. And he will say, no, this is a separate series for this client. 1, 2, 3, 4. Likewise, the 1 will be repeated, no 2, 3, 4, 5. But now it is not possible. All your credit notes and debit notes are balancing figure for profit. Till now. Not now. From now on, you will have to raise the credit note every month then and there and report the document in the return. How many of you completed till the last GSTR entry? Many of us forgot to mention the number of invoices used cancelled, number of delivery challans issued cancelled, number of debit note issued cancelled, number of credit note issued cancelled balance. We have not filled that. Officer will ask on later date. Be prepared. At least from now on, you maintain continuous serial number. Whatever past is past. Whatever you have omitted to declare during the current year, you can declare in this month or next month return. Balance, you take it to other whatever. There is no provision to revise the return under GST. Is it correct or not? There is no revised return. Correct. But you can rectify the errors. For example, I have effected sale to Mr. Prakash and reported that as a sale effected to an unregistered dealer, B2C. And Mr. Prakash said, sir, you have collected tax from me, I have given you my GST number, I want input tax credit. I can correct this transaction till September return of the next year. Till September return of the next year. I think very longer period. You are completing your books by March. You have April, May, June, July, August, September. 6 months. 6 months more than sufficient. And you can also expect some notification for extension. So, if you are effecting some transactions like this, you can rectify in the current month return. Whatever error, you can correct in the current month return. If you have excess reported something, prepare a credit note, give credit note. Excess will be nullified. But you maintain the credit note in the books also. It is not only for GST, it is also for the regular financial accounts. Then credit notes, debit notes raised to unregistered dealers. Here you will give only the total figure. You will not give the invoice wise figure. Whereas there you will have to give invoice wise figure. Because the other party will be adjusting the input. Here it will be adjusted to total kitty of the government, not to the particular individual. Because there is no necessity. Then comes wonderful provision which will confuse everybody. 6A is export invoice. And the basic question is export is taxable or not? Export is taxable under GST. Who said 0? 18%. If you are not giving LUT. As per the Act, export is taxable. But you need not pay tax. If you pay full tax, who will refund the money to you? Customs will refund, not GST people, right? If you are not filing LUT, letter of undertaking, while filing here export invoices, you will have to mention with payment of tax. And whatever details you are giving for the export, proof of export and everything, should match with the replica entry available in the ICE gate. What is ICE gate? It is the server for customs. Verbatimly, the record should match. If there is 1000 rupees here, that should also be 1000 rupees. If such being the case, the customs will refund you the GST, IGST paid by you. You are paying IGST tax. If you are paying tax for export, you are paying IGST tax. Customs house will refund you, or Customs Act will refund you. They will not refund bill to bill. They will be refunding once in a quarter, or whenever they get the limit, they will release. But of course they are releasing. They are releasing. Because last year in December I was called by the Customs Joint Commissioner as a representative of Hindustan Chamber. I went there for a meeting. He said, "Sir, I have 2,500,000 crores, 250,000 crores of refund. People are not coming to me for refund." And the mistake there is very simple. There are some entries mismatched in the GSTN number, or bank account wrong number is mentioned. There are 5 zeros, you might have missed 1 zero, but surveyor will not see. Zero is not having any value, it will not see. Right? If you correct that, I will grant you money. Kindly instruct your members of Hindustan Chamber. I will give whatever possible, or ask them to come here. I will not ask you any money. They can rectify here itself. Such being the case, you will have to match the ICE gate with your GST gate. Incidentally, the port code should be correctly mentioned. In Tamil Nadu or in Chennai, if you take, there are 2 to 4 harbors are there. We see only one harbor in North Madras. Beyond that, there are 2 harbors. You have to give proper code number. Otherwise, mismatch will be thrown and you will not be eligible for refund. Okay? And SEZ transactions will also come here. SEZ and all other zero rated will come here. Then comes 9A, amended B2B invoices. Here, if you have omitted to record some transaction in the previous month, for example, I have effected sale to sir for 2 lakhs and charged 18%. He has paid 2,36,000 rupees. I have omitted to include that. I can include the transaction in current month 3B and incorporate here. But only thing is, if I incorporate here, the invoice date and number should be mentioned, which will make me to pay penal interest, automatic penal interest. Okay? That is well and good. He will get 36,000 credit. He will not mistake me. And he will give me continuous orders. Okay? So the amended B2B invoices is nothing but to rectify the error committed and also to supplement whatever omitted.
So recent GST amendment law is going to change these forms, right?
The forms will change.
But
yes,
told,
they are contemplating for change from April.
Yeah.
Till April, this will hold good, and it will hold good for another 10 years. Because assessment will be going on for 10 years.
Yeah, I'm told the rectification in the new format can be done, should be done in the
then and there.
In the same month where they.
Then and there. Sir, actually, to be frank, they have originally introduced GSTR1 should be filed by 10th. You declare all your output. By 15th, you will get all your input. If, for example, sir has missed to mention my name in the GST, I will file my 2A and ask him to amend the input. Immediately, his 1A will be opened only for this transaction. He can amend my transaction, add it and pay tax for this. If he does before 17th, I will get input tax credit on that month. If he is not making that correction before 17th, I will not get input this month, but notice will be triggered to him on 20th. When he corrects, the interest will be automatically levied to him and I will get my input properly. And I can reduce, increase, modify, delete, accept my input tax credit. All this will be done before 20th. After 20th, you can do your business. Your assessment for the month is over. No more queries. Everything is settled. But now it is a Pandora box, it will be opened. I had an opportunity to address a college in Kanchipuram. Normally, if you go and give lecture in colleges, they will treat you like an alien. They will see the watch and say, and that college is a different college. I represented ICW Institute and went and I was lecturing on GST. Myself and one of my friend was lecturing. And we forgot to understand that they have not taken lunch. At 4:30 or 4:15, there was a ring, a bell went on. I asked them, what is the bill? Sir, college over, sir. Then I asked them, what about your lunch? Sir. One girl asked me, sir, I understand something is there in GST. You were talking for the last 4 hours. Wonderful. But what is the benefit I can derive out of this? You are wearing Modi coat and talking like a Modi. I don't want that. How it will directly benefit me? You just tell me. I said, what is your age? She said, I am 20. And I asked another question. Do you know Tally? Sir, my curriculum has Tally, sir. And I have completed Tally, sir. And I know Tally. Do you know accounts? I asked her. She said, sir, I am a BCom graduate, sir. Let it be. I am not talking about that. Do you know accounts or not? Because there are 3 types of accountants now. Those who know Tally, those who know accounts, those who don't know both. They are calling themselves as accountant. They create their own journals, vouchers, everything there, it is their lookout. I asked her, she said, sir, I know accounts, sir. Then I said, you kindly read GST. It will be very interesting. You will retire peacefully, I will retire peacefully. Sir, I can continue till I am able to. But you should retire at 58. So we both can retire. The sales tax was in force for 90 years or 95 years. Even now, it is not settled. I am getting more cases from that. Such being the case, I can retire peacefully, you can retire peacefully. Kindly read GST. You read all other things later. Then the entire class said, sir, can we come to your office? And I said, I cannot accommodate all of you. If any 1 or 2 comes, I can accommodate you in my office. So that is the case. GST will give profession for all. You have to learn accounts, real accounts, Tally, then some amount of technology followed by GST. You will have a wonderful time. 7 is B2C. All transactions affected to end users are persons who are consumers. You will have to give in toto. No invoice is breakup. You have to give in toto. When there is a credit note, you can just give net figure. But in 3B, you have to show the breakup of credit note. Then 8A, 8B, 8C, 8D, nil rated supplies. Certain things are exempted by notification. Certain items are exempted from the beginning. Certain things are exempted only for a particular class of assessees. So whatever may be the reason, the exemption should be mentioned in 8A, 8B, 8C. And here kindly note, all the clients will have tendency to say exempted turnover. You have to ask what is the exempted turnover. If you have a works contractor, now works contract is restricted to only civil, building construction. That is only works contract. There is an exemption when you receive payment after completion of after receiving the completion certificate. If you effect sales, then you need not pay GST. That is exempted turnover. And if it is sale of land, they will claim exemption. But GST Act says if your agreement includes land value, then whatever may be the land value, you need to pay tax on 2/3 of the total agreement value. Say for example, I enter into an agreement with the builder for purchase of 3 BH house for 1 crore. 1 crore includes land value. If I am not mentioning the breakup of land value and I am mentioning only 1 crore, then the assessee will have to pay tax on 66 lakhs. 1/3 he can give it as land cost and he need not pay tax. That will also come as an exemption. And assuming normally the land cost is paid to the landowner, not to the builder. It will be paid to the landowner, not to the builder. There will be separate agreement for that. But if it is a total agreement, they can claim 2/3. All these things you will have to get from the detailed claims. Because if there is a scope for exemption, they will make everything exemption. But on the next year, when you prepare annual return, they will come and say, sir, you yourself filed the return. Now you are asking me the question. You should have asked the question then. I would have paid the tax. Normally, everybody will have the loophole. So, you don't give the loophole. Whenever there is an exemption, ask them to give details of notification, etc. Then tax liability on advances received. Wonderful provision, sir. My friend Rajiv was explaining about advances. In the services, if you receive advance, you are liable to pay tax on the advances. And even in goods, if it relates to July 2017, if you have received advance, you are expected to pay tax on advances. It was amended, I think, on 14th November. You check the date. After that, you need not pay tax on the goods. But whereas for services, it is automatic. When you receive any amount as an advance, you have to post it here. Now you coming back to the works contractor. Normally, as per your income tax, the works contractor will collect only installment from the parties, right? That installment will be taken to advances from customers in the income tax books. But whereas in VAT, the GST book, you will have to pay tax. So naturally, you will treat the entire value as an advance and post it here. Now your doubt will be there. Sir, I have received advance for 25 lakhs. But actually, you should have paid me 33 lakhs. What will happen to 8 lakhs? Nothing will happen. When you prepare final bill, you will pay tax for the 8 lakhs also. But he has paid 25 lakhs. Whatever tax paid, you pay this month to the government. Then whenever you raise final bill, you pass on this credit to the buyer. Now you will ask me a question. Can a buyer take credit of the input tax credit? He cannot take credit. He is not a dealer. And even if he is a dealer, for the asset embedded to earth, he is not eligible to claim. Building, there is no input tax credit. So it will be available only for the government to grab. Then adjustment of advances. Whenever advance is there, on completion of the work, I will raise a final bill, no? Say for example, I have received four times the advances, say 25,000 each. I have billed for 1,50,000 rupees. So I will have to first adjust the 1 lakh rupee, whatever I have earned earlier and paid tax. Balance 50,000, I will post it in the regular posting. Then 50,000 I will pay tax now. 1 lakh whatever paid will be transferred to the recipient of the goods. So you will do it tax. Then HSN summary. This is what will create trouble in future, and it is the Pandora box for the practitioner. They say when your turnover is less than 1.5 crores, you need not mention HSN code. They say when your turnover is between 1.5 to 5 crores, you have to maintain first 2 digits of the HSN code. If it is beyond 5 crores, you have to give first 4 digits. That means HSN code is not mandatory, right? But in the return it is mandatory. Server will overrule the act. Everybody should report the output pattern with the HSN summary. Will it be possible? It is not possible. Take an example of coffee shop. If I go to the coffee shop, I will ask for a strong coffee without sugar. My friend will ask for strong coffee with sugar. Another friend will ask for light coffee without sugar. Another person will ask for light coffee with sugar. Third person will ask for milk and decoction separately and sugar separately. So there are 5 variants, and if you think there will be some more. In HSN code, first 2 digits will resemble the product, balance digits will resemble the grouping of the product. So for every item, there are 9,999 variations. Can you master the HSN code? Which is not physically possible. In your annual return, they ask you to match the HSN summary for output supply and input supply. Do you have control of maintaining your input supply? No. The other person, whatever he reports will come to your input. You don't have any scope to tune it. But you have to take it as a total summary. For example, I purchase this bottle separately and I fill water and sell it. Bottle will be a different HSN code. My input services will be different HSN code. Output water filled bottle will be different HSN code. Damaged will be different HSN code. Will they match? I don't think so. But if it is not matching, the assessing authority can issue notice on later date. So we will have good scope for the future. It will take at least another 25 years. By then, most of the persons available here will retire. 25 to 30 years. Most of us will retire. And even if they are some are continuing, they will be masters. They will take the matter to High Court. So, we are all safe. Because of the introduction of GST, everybody will be forced to account. So, you will get more income tax cases. When they account properly, they need excise GST. GST also you have the scope. And at times they have customs. Whenever customs comes, problem starts there. So notification, etc. there you have to follow. So our future and the future for the country is very bright. That is why even in the recession, the entire other economies call India as a developing economy. Because in earlier regime, there were about 10% filing the returns. Now, even income tax returns are increased because of GST. Your total income is noted here, and Big Brother can take from here. Who is Big Brother? Income tax officer. In future, kindly note, there is a wonderful exercise for us. When income tax officer takes up the case for scrutiny, he will ask only one question. You kindly reconcile your input. That is more than sufficient. I can assure you, you cannot do it. Because certain input, you may miss it. Certain input, other party would have missed it. Certain input, both of you would have missed it. So reconciling is very difficult. And for certain inputs, they would not have paid 3B. So even then you will not get input. And input is a running register. Every day it will change. When you prepare your GSTR or your annual return, on that day you take printout of 2A and keep it as your record. Because on later date, client should not say misconduct on you. See, for example, I have filed all my returns as on date. I have adjusted the input not received also as on 31st March. I have paid tax for that. Now they are giving time up to this March for them to file July 17 return. Then there will be mismatch, no? I would not have availed some input, but those persons would have paid the money now. They would not have paid to me. They would have paid the input alone. Now they will get a wonderful scope. I will be in deep trouble after some time. Therefore, what I have done as on March, if I complete my income tax return, I have taken a printout and I have settled everything on the date. So whatever comes here, beyond that, I cannot be held responsible. Even for my clients, I have done this. Even for my clients, I have completed the GSTR 9 before last September. Wherever I filed a tax audit report, I have completed it. But I don't know how it will change now. It will definitely change. So, very interesting. And here documents issued. What are the documents issued? It may be invoice, delivery challan for job work, receipt, advance receipt, advance adjustment voucher, advance refund voucher, payment voucher, debit note, credit note, journals, what not. Everything you should report. It is not humanly possible, because our client will not give all these things while filing the return, because they don't know that they should report all these things. That is the reason. They are not inclined to suppress anything. Having accounted, they will show it. You understand the words what I have here. Then amended tax liability on advance received, amended amendment of adjustment of advance, amended B2C, others. We have adjusted B2C there, B2B. B2B I have adjusted on amended invoices. Here I will amend the B2C invoice. For example, by mistake, I have treated the B2C as B2B. I can shift from there, post it here. This can be done for every year up to September month return of the next year. Kindly note down the date. September month return to be filed on or before 10th of October. If it is extended, next day. Last year it was extended up to 20th of October. So till 20th of last October, the transaction for 1/7/2017 to 31/3/2018 could have been adjusted, right? Now we are going into the columns in detail. So we are in the zero rated sale, B2B invoice, you have to check whether deemed export or SEZ supplies with payment or without payment. Then the other things is available in your invoice. GST number, name, invoice number, invoice date, point of supply. Wonderful. You have to say whether interstate supply or intrastate supply. For that you have to prove that. Then total invoice, supply type. If it is reverse charge, you have to tick here. In the GSTR 1, there is one column. If you calculate the revenue, first column will be B2B invoices, second column will be the tax will be paid by the recipient. That means reverse charge entry. For the freight, that is GTA will report the transaction if he is a registered dealer, whereas the recipient will pay tax for that. So it should be mentioned. Then B2C, large invoices, preferably under interstate. Interstate. You have to mention that they have given column only for integrated tax, that is IGST, not for CGST, SGST. Okay? Credit note, debit note. The 1st February amendment have allowed you to prepare one credit note for number of invoices. That means up to 31/1/2019, every invoice should have a separate credit note. You cannot have multiple invoice in one credit note. From 1/2/2019 onwards, you can have multiple invoice for one credit note, right? That is the latest amendment. Wherever latest amendment is there, I am mentioning. Here you have to give the reason for issuing credit note. If you click here, the reasons will come. You have to select and post it here. If it is a pre-GST regime, you have to mark it here. Now, there will not be any pre-GST sales return, because whatever has not come, you would have written off as bad debt. So there is no scope for sales return pre-GST. So you save this and go to next slide. Credit notes and debit notes received from unregistered person. So it is total, only rate wise difference is there. What is 0.25%, sir? Diamond. Then 3% gold, 5% raw materials and necessities, 12% some of the raw materials and necessities, some of the luxuries, 28% many luxuries. What is the rate of tax for BMW car?
28% plus compensation.
28% plus 14%.
Compensation.
No, 14%. 42% tax. And why I am mentioning this is, during the year 17-18, if your client have sold the used car from 1st April to 30th June, the VAT will apply. From 1st July to I think 14th of November, the normal rate will apply on the sale value. If you have sold BMW car, 42%. You would have sold the old BMW car for 5 lakhs, out of which 42% is GST. In February, they have given another amendment wherein they ask you to pay on 66% you pay tax. 66% of the total value. Then another amendment came in March. It said, when you effect a sale of car, the car sale value realized, you take it separately. Book value realized, book value available in book after WDV, you take it separately. If book value is more than the sale value, or if you are effecting a sale at loss, you need not pay tax under GST. If you are selling the car beyond the book value, the difference alone will attract the local rate. Not 42%, 28 or 18 as the case may be. If book value and sale value are equal, no tax. So kindly note, while doing the final that is annual return for 17-18, car sales will play a vital role. Our client would have charged a regular rate, but you should have charged 42% in the earlier period. So kindly check. Export invoice, you will have to give the export invoice total figure separately. Then amendment to B2B invoice and B2C invoice and export invoice. Now you answer me one question. B2B amendment may be there may be some error I can rectify. B2B or B2C, I will change it. What is amendment under export invoice? There will be amendment with reference to bill of lading number or port code number. Those amendments you can do in the next month. After receiving the proof from customs, you can amend. When you amend here, you will amend the original entry in the server. Okay? Very important. If you are not amending like this, you will not get your refund from customs. Okay? Amended credit note and the debit notes. Unregistered dealer. Then invoices to end users, B2C. Nil rated. Tax liability on advances received. Adjustment of advances. HSN summary of outward supplies. You see the documents, the list is available in the return. Invoice number, invoices for outward supply, invoices for inward supply from unregistered person. Wonderful. What is this, sir? Reverse charge. Wherever you claim reverse charge, you are supposed to raise an invoice. It is called as bought note in the earlier regime. If you are not mentioning, you are not adhering to the provisions of GST. You are not eligible to claim the input tax credit on reverse charge. Right? So you will have to mention that. Then revise the invoice. Wonderful. You are not in a position to revise return, but you have a revised invoice. Is it possible? Is it possible to maintain revised invoice? It is not possible. What they say here is a one-time affair. I am applying for registration on 1/1/2019. Due to some technical snag, I am getting the number on 25/2/2019. But for the entire period, I have been doing business. 1/1/2019 to 25/2/2019, I have been purchasing and I have been effecting sales. In all my sales, I have collected tax. Will my recipient get input tax credit? They will not get input tax credit because in that period I am not a registered dealer, right? Now another question, am I eligible for input tax credit?
Yes.
I am not eligible for input tax credit because I am not a registered dealer when I purchase. Whereas for the persons whom have paid the tax to me, I can raise the revised invoice in lieu of the original invoice. This should be done within 30 days of getting the number. Note down the dates. Within 30 days of getting the number. That invoice is called as revised invoice. Revised invoice for the original invoice which was raised in the unregistered period or the period between a filing of application and getting the registration number. Unregistered period முதல்ல எடுத்துருவாங்க அப்படி இருக்கக்கூடாது. I have applied on 1/1/2019. From that date to the date in which I got the number, I can raise all the transaction with individual invoices within 1 month from 25 to 2019 or within 30 days from the 25 to 2019. Those invoices I have to mention here. Then debit note, which I have to explain, credit note. Receipt voucher. What is this receipt voucher?
If you have received any advances.
Yes. But you will issue receipt voucher even if you are a chartered accountant, you will issue receipt voucher. I will raise an invoice. When they make the payment, I will give you provisional receipt. You are supposed to mention that also. But most of us are not doing it. Even we are not doing it. Payment voucher. Payment voucher is when you refund the advances, you would have made some voucher, got the signature of third party. As per the auditing principle, we don't believe on our document, we will believe only third party document. So wherever they sign, we accept the transaction as correct. So payment voucher. Refund voucher. When I refund the advances, I would have get an acknowledgement from the person who has received it. That I should have been numbered and it should be reported in the monthly return. Delivery challan for job work. If the value of the goods is less than the threshold limit of 1 lakh for intrastate within Tamil Nadu, 50,000 for interstate transaction, I need not generate e-way bill, but I will have to generate delivery challan. And that delivery challan should be serially numbered. I will have to mention the from to details there. Then delivery challan for supply on approval. What is this, sir? I may supply the goods now. The recipient will try the goods. If he is happy, he will say you can raise invoice. If he is not happy, he will return the goods. Normally in our CA intermediate exam, we used to get sale or approval basis. Sale or approval accounts we will have to mention, we will have to show the journal entries and the ledger account. Same, sale or approval. Whatever you have read, now you are going to revise. It is not theoretical knowledge, it is bookish knowledge. Now you are using the knowledge here. Now they have given the limit for having the time limit for say a supply and approval. It should be 6 months from the date of dispatch of the goods. Before that it should return back or invoice should be raised. Delivery challan in case of liquid gas, delivery challan in cases other than by way of supply, excluding serial number 9 and 11. Then after that, amended tax liability of advances, adjustment of advances, amendment to this export invoices. This is wonderful. If you click the TDS and TCS in the screen, it will show like this: total accepted account, total accepted taxable value, total accepted tax amount. That is, each entry will be available. You will have to go to the particular entry, select it as an accepted or rejected. 90% or 99% will be accepted entries. Very rarely rejected entries will be there. Because the payment is itself bonus to us. Who will pay excess? It is not possible. So, it will be accepted. But every month before filing your return, you check whether you have any credit like this. Because if you accept, then immediately your credit ledger will be updated, and when you effect a payment of tax, this amount can be adjusted and make the payment balance further. TCS also same thing.
Sir, like suppose December TDS is filed by the party in say February.
Yeah.
And it will be reflected my thing only in December return, right?
You cannot claim.
I cannot claim, but can I claim it in January?
You can claim in February.
I can claim it in February.
Yes, yes.
After acceptance. So
That is what I am saying. For the delay, you will pay interest.
that is the date, but I can file.
You will definitely you can claim. That is why I said every month before filing the return, you check whether there is any TDS. It may be relating to your own case for the previous months.
I had to go and check in the old month return, right?
Every month, no. Every month when you file the return, you click it first.
Whatever is the till date.
No, sir, what he is asking. Say,
Old period.
That period we have to change and check for November, check for December.
But
the other part
filing in the November or December.
No. That you would have already got in the respective month. If you have not claimed it, you would check now.
No, he has delayed the payment, so it will not reflect.
No. Only on payment it will come to your account. When the TDS is paid by the other party, it may relate to any month. It is immaterial to you. You will get credit only when they make payment of TDS on the particular month. Say for example, from August, then.
No, sir, that and all is understood. What is my contention? He has paid in December, but he filed only in February.
Then you have to go to December and take it out there.
But by the time I will be accepting the December return.
No problem. It will be open. No, it will be available only in February.
No, so only when you file in February, it will show in February.
February, yes.
Because December month would have already been filed by us.
But payment is made in December, filing return in February.
Yeah.
Then February month you can take it. Whenever the return is filed, the credit will come to you. So TDS and TCS will be like this. Select processed entry, accept or reject. You have to click this button. You select the items which you accept. Then if you press this button, all the entries will be accepted and credit will go to credit ledger. If you reject, whatever thing is not applicable to you, you can reject. Return for tax related source. GST 1 is over, we are going to 7. Financial year, that is financial year, return for the period. Then return for tax related source, GST 7, due date energy, the bond go. Prepare online, prepare offline. You have to prepare the list for which you have deducted TDS separately and upload. Preferably you make it offline. Don't do online entering because there may be error you cannot correct if you make offline online. So better you download the schema and do it in offline, then upload the transaction. Here you will have to give the details of tax related source, number of records, amended TDS, etc. Then make the payment. When you make the payment, other party will get it. GST end of deductee, receiver name, then amount deducted. You will have to give the breakup of tax. Can I go to 3B now? Time is there. I have another 40 minutes. If you have any doubt in 1A, I will answer. Or I will go to 3B. You reserve your doubts. You can ask me. I will complete everything by 5:20. I will sit here for 10 minutes. You can ask any question you want. You should not ask only one question. When you will complete and get to other. Other than that, you can ask any. Yes.
Sir, with regard to the construction which you were mentioning.
Construction?
Construction of the flats
Ah.
which you were mentioning earlier. What will happen in case the land document is already registered and the construction agreement is made separate?
Very good question. The question goes like this. The undivided share is registered in my name. In Tamil Nadu, you have one scheme where you can register the land which you own. You can register separately. Then the agreement will be for construction. There is no deduction. For the entire thing, you will have to pay 18%. And they have suggested some reduction in rate which will come from 1/4/2019 subject to notification or amendment in section.
18%, not 12%. Some people, they have a confusion.
That is what I said. No, I will explain that. If your agreement is for land and building, then you are giving 1/3 deduction. In 18, if you give 1/3 deduction, it will become 12.
Then in that case, the periodic payments that we are receiving after the completion, stage by stage completion, should be mentioned in GST or one as advance or as outward support?
Advance. From advance, you shift to either exempted or taxable. Or if you know pretty well, it is apportioned portion of land. If it is already decided, you can show it as exempted.
Suppose if we received advance a part of a particular flat, we cannot claim exemption. After completion.
Yeah, you can claim. After completion.
After completion, I am talking about.
That is, his question is very simple. He says, I have first paid tax on advances. I hand over the possession only after completion. In that case, the agreement between you and the land, that is tenant or buyer, is already made. So you will have to pay tax. Now what I mean is, there is no stage. Say for example, they have constructed 120 houses. 119 are sold. One house is not sold. Even after completion, it is not sold. When it is sold after completion, it can be shown as a total value, provided I pay local tax for the total value. But all our builders, what they will do now, they will enter into undivided share separately, construction agreement separately, even for the constructed house. That is the problem will arise. When you get CC, completion certificate, you need not charge all these things. You can say it is a completed house. You can say immovable property, not applicable for GST. But all our builders are not doing that. They enter into construction agreement and register the construction agreement. Then it means you are camouflaging record. You are penalized by paying tax. Any other question? Normally, if one or two questions are asked, I am very happy. Why? At least you have learned something. There can be a situation where there is no question. Either you have understood everything, or I will say only first. I am very positive in this. When you don't ask question, I will appreciate myself for explaining to you in a very detailed manner. 3B, normally you don't give invoice wise details. You give only details of B2C, B2B, etc. Consolidated figure. You arrive at the total taxable output or outward supply, arrive at the input tax credit available and TDS and TCS available, reduce that, balance you make the payment by filing 3B. So 3B, when it is a nil return, the late fee is 20 rupees, 10 rupees each. Yes, that is central tax and state tax, CGST, SGST. If it is regular return, 50 rupees, you have to pay that, 25. The 25 is attracting them. Outward taxable supplies other than zero rated, nil rated and exempted. Why they have not included that is, it is given in the next claim. Outward supplies other than zero rated, nil rated, exempted. So you will arrive at the total taxable sales with respective rate of tax. You give the total taxable value, out of which you give integrated tax, central tax, state tax and cess. you will have to understand one simple logic. Under the sales tax, you used to mention the transaction within the state separately under the respective VAT. Interstate transaction under CST, you will file 2 returns for every month. Under GST, it is not so. Why? Because when you say B2B and when you give the registration number, if it starts with 33, all transactions are intrastate. If it starts with any other number, the respective will be interstate transaction. 33 is the code number for Tamil Nadu. Okay? And have they taken the how your GST number is given? Have anyone explained that? No. Your GST number will be like this. The first 2 digits will be reflecting your state. For Tamil Nadu it is 33. And Karnataka I think it is 29. Kerala it may be 30? 32. Pondicherry it will be 35 or 36. 34. So it is like that. First 2 digits will be your state. Next 10 digit will be your PAN number. Then next 2 digit will be your vertical registration. If you have made any vertical registration under the Erstwhile Act. What is vertical registration? For example, I am a chartered accountant and cost accountant. If I practice both, if I am allowed to practice and practice both, I can have a separate number for chartered accountancy profession and cost accountancy profession. It will be like this: 33 followed by my PAN number, then 01 will be chartered accountant, 02 will be cost accountant. So after that, one entry, 1 digit will be there. That digit is a check digit which is in machine language. Only the machine can understand that. So this is the method of drafting the GSTN number. Coming back to our column, outward taxable supplies 0 rated, total sales, integrated tax and other 2 taxes not available. Why? It is 0 rated. 0 rated means when there is a tax, it is integrated tax. For example, if it is export, I will pay IGST and get a refund from the customs. So I don't pay CGST and SGST. Kindly note, during the year 17-18, many of our clients would have charged CGST and SGST for SEZ sales and still claim it as 0 rated sales. And as per 1/2/2019 definition or amendment, SEZ should have a separate registration number other than the regular registration number. Right? If any of your client is an SEZ unit holder, then ask him to get a separate registration for SEZ. From 1/2/2019, it is compulsory. Other outward supplies nil rated or exempted. There is no column for taxation. Only the turnover will be reported. Then inward supplies liable to reverse charge. Here the inward supply is our inward supply. Whatever I have purchased from unregistered dealer or I have paid advocate fees, I have paid freight, those things will come here. Then non-GST outward supplies. Non-GST outward supplies can be of 2 entries. One is petroleum or diesel, another one is alcohol. These 2 will be non-GST supplies. But many of us would have included interest there. It is not correct. Only petroleum, diesel or non-alcoholic will come here. Interstate supplies. Here they are asking the interstate supply, you have to give supplies made to unregistered person. Then supplies made to composition taxable person. Supplies made to UN holders. That means the GST is a destination oriented tax. Wherever the goods are consumed, the tax will go to that respective state, right? If I effect an unregistered dealer transaction in other state, what will happen to the taxes paid by me? It will go to that state, respective state. That is why I am giving the details of the other unregistered bulk transaction of interstate. that tax will not be good for Tamil Nadu. It will go to other state. Similarly, if I effect sale to a composition dealer in Kerala, Kerala government will get the composition tax. This tax will go to Kerala. Tamil Nadu government is of no use. They cannot use this. They will have to show it separately. Then if I effect any payment to or any transaction to embassy in Trivandrum, then it is consumed there. Wherever it is consumed, that amount will not come to the respective state where the return is filed. They want to reduce those things. I will not get that money. Why I should have it in my total expenditure, income and expenditure column? So they reduced it. That is why these three are reduced. Then supply is made to unregistered person. Place of supply, taxable and amount of integrated tax. Very interesting. What are all the amount which will flow outside the state of Tamil Nadu, they want to know on 20th of every month. On 10th of every month you declare your return, your sales details. 20th of every month whatever goes to other state you are declaring. Right? Or whatever consumed in other state you are declaring. Composition person, taxable person in other state you are giving the details. Eligible ITC. Eligible ITC you will have to necessarily mention. Eligible ITC may be from your monthly transactions effected from your regular business, or it may be from your expenses. Input may be from your expenses. Kindly note, when you do the GST audit for 2017-18, if your client shows any collection of capital by way of share collection and pays some charges to a broker in other state or within the state against a bill raised by the broker, the company will get input on that because it is incidental to business. Share capital is incidental to business. Therefore, you will have to see your entire trading profit and loss account and balance sheet to know whether you can get some input or you get input from other end. For example, I have effected purchases from some X, I don't want to say SR's name always. I have not paid the input or I have not paid him within 6 months. What will happen to the input? I will lose the input. I will have to pay penal interest from the month in which I have claimed to the month in which I am making the payment. When I make payment to the supplier, I can take input thereafter. But it should be done before September of the next year. It cannot be done indefinitely. Before September of next year, if I complete the transaction, then I will get the input.
So, sir, previous slide. This one. Oh. Next. Supplies to unregistered. Supplies made to unregistered person.
Yes.
So, suppose.
Interstate.
Interstate. Say, suppose I am an unregistered person. I brought some, say, one computer here. So I am all the way coming from Andhra, I purchased a computer here. I am unregistered here. So what they will rise automatically?
Very good question.
What they will rise? The moment they delivery is goods computer, they will rise the CGST and GST. Where is the question of the compliance of that particular?
Very good question. I will explain. Say what he says, he is an unregistered dealer, he is coming and purchasing computer in the state of Tamil Nadu, Chennai. He is coming from Andhra Pradesh. He is an unregistered dealer in Andhra Pradesh. He is purchasing computer worth 3 lakhs. It should be reported in the return, right? When he comes and takes possession of the materials, the sale is concluded in India, in Chennai. He will charge only CGST as GST. If it is dispatched to your address in Andhra Pradesh, sale is concluded to Andhra Pradesh. There they will charge IGST. That will be reported here. That is why in the beginning I told you to have the list of your customers. If in the list I have your address, automatically it is IGST sale.
So my address I don't have registered. I given my address Andhra. Even though Andhra address, the transaction is over here itself.
Yes.
They will raise only
Local invoice.
Local invoice, CGST and GST.
They will raise only B2C.
Yeah.
They will not raise your address.
Yes. So where is the question of arising again here?
No, assume a case where you make an order and I supply to your place in Andhra Pradesh. Sale is concluded there.
So you are the supply itself.
Place of supply is Andhra Pradesh.
Yes. Then only that.
Yes. You understand that? Because if you have doubt in that, you cannot proceed further in GST.
Yes. The IGST Act Section 10A, so involves the movement of goods. There, A, what it says, supply involves movement of goods. So the supply may be made by either supplier or receiver or whomever it is. So is it applicable for only for registered dealer or even it is applicable for
all? Act cannot be made only for registered dealer.
So that be the case, the movement is involving, it is automatically consumed in Andhra, say. So why can't they raise IGST invoice? So is there any contrary between the section 10?
Normally, if you raise an invoice in local intrastate for a B2C, you don't write address. Generally, if you don't write address, and the sale is concluded at Chennai, you are making the payment at Chennai, you are taking the goods at Chennai, point of supply is Chennai.
So I agree that.
Yes.
But as a whole GST...
No, I will complete. Yeah, I will complete. If such being the case, you order here and go to Andhra Pradesh and ask me to supply there. Now, the point of supply concludes in Andhra Pradesh. I will charge only IGST, I will not charge you CGST, SGST. Right?
Is there any change if I have GST number, Andhra GST number, if I give GST number here?
If you give Andhra GST number,
if I take delivery,
it will take only IGST. It will take only IGST.
So by that time the 10A will apply.
Yes.
Otherwise this will apply.
Sir, these are all the transactions where bona fidely you purchase as a end user and take the goods as an end user, not intended for business.
So furtherance of business is there.
So it will be concluded in place of supply. Place of supply is Tamil Nadu, Chennai, right? Eligible ITC. You are getting ITC from import of goods. Is it possible? First question. Yes, it is possible. How? Under Customs Act before 17/2017, when you imported goods, you will pay ACD, CVD, etc. If you pay ACD, you will not pay VAT. If you pay CVD, you will not pay excise duty. Right? That benefit is now forwarded to all the importers. If you purchase, the basic customs duty, whatever you pay is your cost. The additional levies, whatever you pay, is your IGST. It is only integrated sales tax. You can adjust anywhere, everywhere. The document is bill of entry. In bill of entry, your name will be there, your GSTN number will be there. With that, you will have to claim. Now you will ask me, sir, originally I had the power to claim in 2A. Now I don't have power to file 2A. How will the credit will come to me? Right? It is a correct question. To the best of my knowledge and belief, only in Andhra Pradesh, the IGST return is filed by the government. They are getting the credit. In all other states, wherever I have seen, I have not seen entry from IGST credit. You are not supposed to make your claim by 2A. It is not available now. So it will be $1 million question. The Act says when you have a documentary evidence, you can reduce in 3B and pay net tax.
Yes.
And the notification says you need not reconcile with the 2A. Then, if you have documentary evidence of bill of entry, where your number is given in the bill of entry. Your GST number should have been available in the bill of entry and IGST charged for separately. You can definitely claim input tax. You can prove before the officer.
Sir, if a PE date is 28th February and material is issued on 1st March. So which month I have to get the
1st March.
March.
Not on.
Only after receipt of goods you are eligible for ITC, sir. That is very clear. You cannot take ITC on transit. Good question. That too, in pharmaceutical business, all the bills will be raised on 31st. Goods will be dispatched up to June. To achieve the target, they will raise the invoice. Goods will be dispatched in the old invoice till June. So, such being the case, other party, how can they claim input? They cannot claim input. Unless they get the goods, they cannot claim input. Then import of services, you have IGST credit allowed. Inward supplies liable to reverse charge other than 1 and above. Inward supplies liable to reverse charge. So you can take your inward supply wherever you have paid tax in the previous month. Then inward supplies from ISD, all other ITC. All other ITC will have ITC from rent or any other expenses as the case may be. So not necessarily you have to see only purchase and sales or receipts and the output. You have to see all the expenses and all income. So you will have to check every entries. Then ITC reversed. Ineligible ITC, the end product may be exempted. The ITC you are not eligible. Reverse that. You have not received the goods. You have received only bill. Don't claim it.
Sir, regarding this one, 42 and 43, reverse that. 75 as per the ineligible ITC. Suppose if I constructed a factory building, so building itself, whatever expenditure incurred related into ITC and all, not eligible.
Not eligible.
Suppose if I put a generator or something like ACs and all those things.
You don't do it along with the construction of the building. You make it separately after construction of the building.
Separately one. Suppose if I
you can claim.
In our balance sheet, automatically it will be bifurcated and it will be shown.
No, it should not be added to the building.
Yeah,
if it is shown separately, you can claim. And that is the very biggest advantage in GST. As per the VAT, if I put AC in my office, I cannot claim input tax credit. Even if I pay service tax, I cannot claim input tax credit on purchase of AC. But now, whatever I purchase, either light or computer or any other thing, I can claim the input in the month of purchase and pay lesser tax. Only thing is, other party should file return. Other reversal, if any, I can make it here. Then net ITC available. Ineligible ITC means where it is a negative list, say vehicles or building. You cannot claim input in any way, but it will be flowing to you. For example, I purchase a car. When I purchase a car, I give my firm's GST number. I am eligible to claim because it is posted in my 2A. However, the Act restricts me not to claim on the purchase of car.
Suppose if I am a businessman contractor, but I purchase car, can I claim eligible ITC?
Yes, and the beautiful question.
Suppose tippers and all. Tippers for carrying a
You have to specify correctly. If it is a car, prima facie 17.5 will attract, you need not. If it is a dipper, it is a different story. Dipper is used for furtherance of business. If you are a contractor, it is used. But wherever you use that asset, you have to generate money. That money you have to declare. For example, I may purchase a van for dispatch of goods which are manufactured at my factory. I may not claim separate charges for van. In that case, I am not eligible to claim input on van. If I charge separately, if my goods are 28%, freight charges is also 28%. Who will pay?
Pricing the cost of maintenance of the vehicle plus everything is included.
You cannot claim. Notification has come.
No, the pricing of the goods the delivery expenses in the form of a car, the van.
You have to understand two supplies, composite supply and mixed supply. That is the basic origin of GST, right? That will decide the taxability of a transaction. The composite supply is a transaction where two naturally bundled events are taken together, are taxable together, the events are taken together. The tax of the preliminary service will be taken for the tax of the subsidiary service. For example, I travel by Shatabdi Express from Chennai to Bangalore. Shatabdi Express is full AC. I will have to pay GST, right? For example, the value of the travel is 8,000 rupees. They will charge 18%. They provide a worst food. For that, they will charge me 100 rupees. Food is 5%. But in this case, preliminary object is to travel. That is 18%. So food is also 18%. 1,100 into 18%. It is a composite supply.
So supply of material is also composite supply. Why can't we keep that? Suppose if I am selling material, metal, say, so I have trucks and all. I am giving metal delivery at the doorsteps of the receiver. So
no, I will complete. Therefore, if my product is 28%, say air conditioner, I am dealing in air conditioner. I am delivering air conditioner to your house. I am charging freight as 100 rupees. Air conditioner as freight as 1,000 rupees. Air conditioner as 30,000 rupees. I have to pay 28% on 31,000 rupees. If I pay so, I can claim input on the vehicle. Who will pay? Customer will not pay. That is why they asked third party to deliver the goods. When you purchase from third party, you will pay only 5% on reverse charge. And more so, vehicles now amended from 1 to 2019, any vehicle with a capacity of 13 or more, you can claim input tax credit. That means car you cannot claim. Here, car cannot have 13 seater. So it has been amended, wonderful amendment. And of course, they don't want to give ITC for vehicles. And they have amended for repairs and insurance also. We are not eligible to claim input tax credit from 1 to 2019. Now you will ask me a question. Can I claim from 17 to 31/1? If they say from 1 to 2019 it is taxable, not claimable means till then it is claimable. That is my sincere opinion. But officer will say, no, it is applicable to that period also. And the GST per se says there is no retrospective amendment. It is only prospective amendment. So we can argue, you need not claim up to 31, you can claim up to 31/1 2018 or 2019 is my view. Then you deduct the ineligible ITCs, then arrive at the total ITC, confirm the total ITC. Now you give the composition dealer scheme, value of exempt purchases newly dead. How can you give purchases from composition dealers? No composition dealer is mentioning the invoice as composition dealer. To the best of my knowledge and belief, you cannot do so. Because there are two dealers. Say for example, when my threshold limit, when I am below threshold limit, I will not charge tax. When I am a composition dealer, I will not charge tax. How can I understand he is a threshold limit dealer or composition dealer? It is $1 million question. And it is a transaction based act. Therefore, all transactions you will have to check. Is it possible? Wait and see. And non-GST supply is where our petroleum product, diesel product, petroleum, diesel and alcohol. Interest and late fee. This is why I said the assessment order is passed by the assessee. You yourself declare interest, you yourself pay that. Normally, they will issue a notice to you. That notice is not appealable. Then you will make the payment once he issues an order. If he is a good order officer, he will keep it pending and go. Now it is not possible. You yourself write your assessment order, get your assessment order, and more specifically under Form 9, you are going to prescribe penalty for your transactions. Only quasi-judicial authority can levy penal interest, penalty, etc. You are not quasi-judicial authority. There is a legal lacuna. Court will answer on later date. Then payment of tax, whatever you pay, say for example, it has been amended from 1/2/2019. Everything should go to IGST. You first exhaust IGST, then come to CST, then come to SGST. That means if you have a credit, central government levies are covered by the credit. State government will have to collect money from you. That is a nutshell what they want to explain. I have an input tax credit. Now whatever I have been doing up to 1/2/2019 is, if I have SGST credit, I will adjust first SGST, then I will take it to IGST. If I have CGST credit, I will adjust CGST first, then I will go to IGST. If I have IGST, I will complete IGST, then come to CGST, then come to SGST. Now the same scenario applicable for all IGSTs from 1/2/2019. So kindly note the amendment.
Sir, I couldn't get to that one. Again, explain. Suppose I have SGST credit, I have CGST credit. Suppose I have to discharge 100 rupees. I have CGST credit of 20 rupees, SGST credit of 20 rupees. Remaining 60 rupees normally.
You have to make the cash payment.
I have 60 rupees, I can adjust the IGST. Better I have done. So what about the new change?
New change is, first you have the IGST credit you have. You first take IGST liabilities.
Entire 100 rupees I have to adjust.
Adjust IGST liability.
Okay.
Then go to CGST liability. Then if it is any balance, you come to SGST. So even in the return there will be some amendment for this. Notification will come very shortly while you file the February return.
For January it has not changed.
It has not been done. No, up to January return it will not be there. From February return it may be there.
System automatically it will take.
Now everything system takes, sir. That is the problem. You don't have a right to check. Then recharge, that is the reverse charge, whatever there, you'll have to make the payment. Then TDS, TCS credit. Normally you will have SGST and CGST credit under TDS or TCS. Integrated very rarely you may have. When you do job, I love to explain one concept. Can you wait for 5 minutes? Time is 5:25. I think I can go up to 5:30, right? What is e-commerce? You don't understand. Then only you can come to TCS. If I have a website, I advertise my product. If sir contacts me and asks me to supply goods to him, is it e-commerce? It is not e-commerce. It is a direct transaction between supplier and recipient, right? Then Mr. Prakash is having the portal. He knows the requirement of the buyer. He knows the requirement of the seller. He asks the supplier to supply directly to seller. Recipient. I send the goods directly to recipient. Mr. Prakash is not handling the goods or collecting the money. He is not bothered about it. In that case, this is also not e-commerce. Third operation. Mr. Prakash collected the order from the recipient. Place the order to me. I am supplying to recipient directly through Mr. Prakash. I hand over the goods to Mr. Prakash. He goes and deliver to the recipient and collect money from recipient. Now he is an e-commerce operator. He is advertising in his portal, common portal, my product, and get the transaction done. So whatever he receives, Mr. Prakash, what he will do? He will collect the total revenue, deduct his commission. He will have to supposed to give balance to me. Now he will not give the entire balance to me. He will take the taxable amount. In that he will deduct TCS and deposit TCS in my account. He will prepare the TCS return on March, whereas he will collect money in February. Before 10th of March, he will file the TCS return. If he files TCS return by 10th of March, the credit will come to my account. And interestingly, for TDS return and TCS return, when you file the return, you have to make the payment. Unlike GSTR 1 3B, there is no intermediary return. When he completes the filing of TDS TCS return, the credit will automatically come to me. You will ask me, sir, benefit. What is the benefit government going to derive from this? In India, almost 2/3 of the transactions are carried by e-commerce. That is why, if you go to any hotel, now you are not finding crowd. Only on Sundays and Saturdays there is a crowd. On all other days, if you go, you will be given a royal treatment. Whereas the Swiggy people occupy the road and occupy the hotel. And even Swiggy is e-commerce operator. Kindly note, we are not aware of that. Actually, I received one enquiry from one client. He was doing some small outlet of pizza or something. So he said, I asked him, what is your turnover? So my turnover will be per month, it will be around 1.5 lakhs. Then I calculated for 12 months, it will be 18 lakhs. So I think you are not in the threshold limit. Then out of curiosity, I asked him, sir, what is your nature of operation? He said, sir, out of 1.5 lakhs, I will get 1.2 lakhs from Swiggy and other people. Only 30,000 from the shop. I told him, sir, you first start filing the return. You will definitely land in trouble on some day. As usual, he has gone to good auditor. That is the fate of our practice. If you say you have to pay tax, they will go to better auditor. GSTR update is auto-populated figures. You cannot do anything. You need not reconcile as per the recent notification. I don't know what will happen to the next notification. Whatever GSTR 2A you have, the credit note, debit note, amendment, B2B, everything will be available in your 2A. For example, I raised an invoice on Mr. Prakash in January. I have given a debit note in February. Both entries will be available. And I have given debit note in March. That will also be available. And I have given credit note in April. That will also be available. So it will be a running account. You will have all the input and corresponding deductions. Wonderfully drafted. Unfortunately, we are missing the usage of GSTR 2. That is a loss to the assessee, not to the government. Even in the new format, you cannot adjust every month. Why? Because you may file today, I may file it next month. Then you cannot claim your input, right? Every month you cannot see old mayor record. Then you will file only returns. You will not do business.
Only seller has to do.
Yes.
As I have issued a supply of material and I am raising that adjustment, there would be mismatch.
Yes.
Only seller has to do.
Always you should do.
Yeah, seller has to do.
So these are all tags for the 2A. And I think I have completed everything. But I have prepared a detailed explanation for all the returns. For sparsity of time, I leave all these things in the computer.
Yeah.
You can take the mail, or it will take another half an hour for me to explain all these things. Kindly excuse me, because it is not my mistake. I started very late. I came very early, no?
We have to learn.
Sir?
If you want to practice, we have to learn.
Yes. No, that is why I prepared at length.
Yes.
I have given except annual return, because annual return per se is one day something.
Yeah.
I cannot give annual return here. So whenever you have any doubt, if you want to contact me, maintain accounts properly, log on to CBIC and GST helpline, happy return filing. You can call me in this number or you can mail me. Generally, I will not pick the phone in the morning because I will be either in the hearing or at times I may also take in the morning classes. So whenever there is a missed call, I will answer all the calls. So if you have doubt, you can call me. Thank you very much for patient hearing. And it is wonderful to address before you all. Thank you.
Friends, please put your hands together for a wonderful presentation.
Thank you. Yeah, surely have. Okay, sir. Right. Thank you. Thank you, sir.
So nice of you.